And I reckon the fact that yesterday's sessions were absolutely inspiring and informative, which is why today we continue our exploration of how technology is transforming the financial landscape. And staying true to our theme, which is Blueprint for the Next Decade of Finance, Responsible AI, Inclusive, Resilient, that remains central to our discussions even today as well. Now, before we move ahead, I'd also like to take the opportunity to thank our partners. First up, we'd like to thank the Payments Council of India, the National Payments Corporation of India, and Fintech Convergence Council for their tireless efforts in organizing this gathering. Our gratitude also extends to MITI, the Ministry of External Affairs, the Department of Financial Services, the Reserve Bank of India, and IFSCA for their invaluable support. And we'd also like to thank our amazing partners. The Global Fintech Fest 2024 is co-powered by Google Pay and PhonePe. Our technology partner, Perfios. GFF 2024 is brought to you by HDFC Bank, State Bank of India, Punjab National Bank, and MasterCard. Our associate partners, Amazon Pay and Razorpay. Our consent partner, NeoCred, and our payment enabler partner, Lyra. We'd also like to thank our supporting partners, ONDC, World Bank Group, IFC, Better Than Cash Alliance, RBIH, and the Gujarat International Finance Tech City, Aadhaar, Invest India, and Digital India. So with that, we're all set, all geared up for our very first session for the day, which is the role of fintech in ease of doing business. We all know that fintech is truly fueling innovation in payment processing, lending, or for that matter, wealth management. And we all know that fintech solutions are helping businesses in order to automate their processes and also eliminate any kind of manual interventions, but literally seeking the right kind of innovation to take the growth trajectory forward. So on that note, this morning we have the august presence of the Chairperson, Securities and Exchange Board of India, SEBI. We have with us none other than Srimati Madhavi Puri Buch, and we have her august presence, so it's only befitting that we get the session started in her esteemed presence. But to spearhead the session, we also have with us none other than Mr. Srinivas Jain, Executive Director and Head of Strategy, SBI Mutual Fund. So let's put our hands together, and please help me welcome on stage Mr. Srinivas Jain and Srimati Madhavi Puri Buch. I think we can have the louder round of applause. We're talking about two dynamic leaders over here. So let's bring the dynamic round of applause, ladies and gentlemen. Over to you, sir.
Good morning, everyone. I hope you're having a very enriching day. Global FinTech Festival yesterday, day one was just amazing. It's remarkable. It was filled with lots of discussion from thought leaders. We started the day with, Mr. Damu Ravi, Secretary Economic Affairs, Ministry of External Affairs. The session was more about how do you take India to the world, stacks to the world. Then we had our keynote speaker, Mr. Christopher Waller, member of Federal Reserve Board of Governors of US. And then, of course, we had a very interesting session by Nandan Nilekani in the second half on Finternet and how we can reimagine finance in the new world. The day culminated with Governor Reserve Bank of India, Shaktikanta Das sir, talking about fintech innovations of India at 100. We also saw some very interesting NPCI product launches yesterday, 2 of them. Throughout the day, we had the privilege of hosting multiple bankers, fintech founders, CTOs, and other industry leaders with various keynotes, panel discussions, and one-to-one sessions. Today, we are extremely grateful to have SEBI and market-related sessions starting today. In fact, SEBI has been a big initiative. SEBI this year has taken wholehearted support for GFF. We have multiple whole-time members, executive directors talking about various initiatives, especially we are talking their dedicated session on bond platform, distributed-related technologies, depository settlements, and of course, mutual funds, innovation, and investor awareness sessions. These sessions actually truly talks about how SEBI is committed toward fostering a transparent, efficient, and inclusive financial system. Today, it's my distinct honor to welcome Chairperson of SEBI, Madhavi Puri Buch. She's here to talk about the policy frameworks that are significantly improving. The keynote session from her is about role of fintech in ease of doing business. Welcome, ma'am. Ma'am is going to make a presentation today. Just before she starts off, I want to tell her how she's passionate about technology. This is her third visit to GFF. Last 2 years, she's talked a lot. In fact, a lot of policy frameworks have come as part of this discussion and post this discussion. It also talks about her passion of ease of doing business, and she's been very committed about that. And her passion towards using technology to simplify users and users' experience. Today, her talk is about fintech and how fintech can change and what policy frameworks is required for her, for us per se as a fintech industry to look at. So welcome, ma'am. Thank you very much. We'll start off with your presentation. If you can load ma'am's presentation, please. Thank you.
Very good morning to each one of you. It's a pleasure to be here today. As he very graciously said, yes, technology is certainly a passion of mine, and so is the markets. So in putting both of them together, it is my honor to be talking today about the role of fintech in ease of doing business. We'll just wait for the presentation to go up. There it is. So the first thing is, how do we as a regulator look at ease of doing business, right? And it's very simple. When there is complexity, when there are tangles, when you don't know quite how to untangle things, business is hard. The same multiple facets of a business, when they're woven into a strong rope, they still have multiple facets. It's not that you take away any of the colors which are there on the left, but it's just that you weave them in a way that makes it simple and, more importantly, strong. So every aspect of business and compliance continues, but it has to be made easy. It has to be made strong. Now, what really is the role of regulation? Why is there compliance in the first place? Why can business not do without any regulations? Why can it not do without any compliances? The reason is simple, that in a social environment, in an economy where rights of the consumer and of the investor are to be protected, there is an imbalance of power between large corporations and institutions and the small investor and consumer. So the role of the regulator, the role of regulations, the role of compliance is really to give protection to the consumer or to the investor in the case of markets. Equally, on the business side, regulations and compliance are important because they foster trust in the system. We have seen this repeatedly. I think the most recent evidence of this is that when SEBI launched a concept called small and medium REITs, we saw that the response from the industry was very, very positive. They wanted to be regulated. They were operating in an unregulated environment, and they were suffering from the fact that investors did not have faith and trust in their products and services because it was unregulated. They weren't sure that the offerers, the organizations will follow any rules. So when we propose that we will bring a framework for small and medium REITs, the industry actually came forward and said, we would like to be regulated, we would like compliances, because that is what will foster trust in the system and will facilitate growth. So compliance is important not just for the investor, but also for the business. Both of them benefit from the requirement of protection of the consumer. Now, when we talk about compliances, there are two aspects to it. And when we say ease of doing business, there are two aspects to it. The first is running the business itself. How easy is it to run the business? And the second is, how easy is it to comply with the rules and regulations? In terms of business, the first and foremost that any entity asks the question, and particularly fintechs, saying, am I allowed to do this or am I not? It's a yes-no question. Now, where does innovation come? Innovation usually comes at the boundaries of the yes and no. That is why it is innovative. If everything was clearly in the yes and clearly in the no, there would be no innovation. So when innovation comes, it's usually in the gray areas between yes and no. And the important thing is what guides a regulator, that which out of those grays are light gray and can be moved to white, and which of those are dark gray and must be banned. So the principles that we as regulators follow is actually very simple. So when a lot of investors ask me this question, that when they invest in fintechs, what should they expect as regulatory action? My answer is very simple. If you are doing something which is enhancing the well-being of the consumer, 9 out of 10 times, the regulator will say yes. They may put some belts and suspenders to protect. They may put compliances of reporting to monitor. But 9 times out of 10, they will say yes. But when the innovation treads the line where the consumer, or in our case, the investor, is being shortchanged, there is opacity, there is lack of concern about what is actually happening to the investor's money, those you can with reasonable probability assume that 9 times out of 10, the regulator will say no. So as you think about innovation, which will always be in the gray area, this is the metric that you need to assess, that are you doing good for the investor, or are you actually doing something which you yourself know is not in his long-term interest. One other important role for us as a regulator in terms of encouraging innovation, particularly in the fintech world, has been the creation of standards. Why is this? So what we find is that we have a market ecosystem which has a lot of infrastructure. Let's say the stock exchanges, the depositories, the clearing corporations, the mutual fund registrar and transfer agents. These are all the infrastructure on which other people build their innovative solutions. Now, if each of these is different and there is no standardization in the way in which their data and their APIs work, then the cost of innovation and the cost of a new fintech to come into our market system and integrate with this entire market infrastructure is very significant. So what we have been working on is to standardize. So whether you are talking to NSE, BSE or MCX, it should be the same file format so that your cost of innovation comes down. Whether you're talking to CDSL or NSDL, it should be the same API structure so that your cost of innovation comes down. So we've been working very hard at making sure that standardization happens in our market ecosystem to encourage low-cost innovation in terms of fintech. What we have seen over the last few years is that this approach has really delivered fabulous results. So whether it is the new regulation that we brought in terms of execution-only platforms for mutual funds, or online platforms for bonds, or for instance, we've recently talked about, we had a consultation paper on performance validation agencies. We are now very soon going to be talking about some data benchmarking agencies. So we find that this entire ecosystem is growing from strength to strength. So what started as highly technology-oriented exchanges, clearing corporations, and depositories moved on to large fintechs in the broking space, now in terms of the mutual fund space, now in terms of the bond space, and further into the alternate asset classes. So this innovation is now moving at huge speed, and we are really, encouraged by the speed of uptake of the consumers in doing this. The second area of ease of doing business is what SEBI itself does internally. So we have been focusing on saying that if the fintech industry has reached a certain level of maturity and now they want to IPO, the private equity investors want to exit, the markets are good, this is the time when we should not be wasting time in giving approvals. So if you see the chart, we've been tracking this for the last roughly 12 quarters. We track this very, very carefully to ensure that the aging and pendency of IPO applications, pendency is a good thing because it means there's more and more activity in the market, but aging, we keep a hawk's eye on this. So as you're seeing, compared to when we started tracking in March of 2022, and we had a very large number of IPO papers pending more than 3 months, today we have just 8, and most of those are really in the realm of where there is either a judicial intervention or there is a regulatory approval pending from another fellow regulator, and which is why they are still pending at our end. So this effort on our part will continue, that we need to facilitate that SEBI does everything it can to speed up approvals. Similarly, in terms of actual participation in the market, so this is for stockbrokers, DPs, investment advisors, research analysts, RTAs. Again, you can see that the objective is to bring down the aging and ensure that there are very, very few people, in fact, even crossing the 1-month period. And this is end to end, from the date of first application. In SEBI, we don't count it from what generally is considered in bureaucratic circles as from the last date of receipt of all information, because that has a big loophole that if an officer is not being able to conclude his work, he simply asks another question and his clock gets reset, right? So we don't allow that in SEBI. We track this from the date of first application, and we ensure that people are not wanting and waiting for approvals when there is so much opportunity in the market. So any of the fintechs coming to register in this form will also see that this speed of approval should be there by SEBI. This speed and this monitoring of aging is something that we've been doing more through restructuring of the organization and through process optimization. But now we have about almost a dozen projects using AI, which are in the works in SEBI. Half of those, roughly speaking, are ones which will speed up our approval process, and half of them, roughly, are the ones that will speed up our supervision process. So we are hoping that, in fact, a lot of that aging that you saw, we can make it crash even further, because we will now actively use AI within SEBI itself in order to deliver this. Moving on to the issue of, so this part was all about how we are working towards making business easier for fintechs and businesses in general. The second area of how to make compliance easier, right? That's equally important. So what we had done was we had actually put in place 16 different working groups to work on ease of doing business, which really means ease of compliance. Now, we got 317 recommendations from various people, and we are at various stages of implementation. 71% of those recommendations have been accepted by SEBI. Some of them already implemented, some are to be taken up in the month of September and so on, but 70% roughly have been accepted. 10% not accepted because they are not consistent with certain core principles that the regulator cherishes. And another 20%, roughly speaking, is under process. We have not yet reached a conclusion on whether to go ahead and how to go ahead. So this is a very active initiative on our part across the entire ecosystem, that we want feedback from the ecosystem to say how and what will make your life easier so that you can focus on the business and deliver to the country rather than being caught up in compliances. We also do a lot of consultation before we come up with compliance requirements. Before we issue circulars and regulations, we do very extensive consultation. A lot of people have asked us that, how do you cope with this load of consultation? Because, every third day there's a new consultation paper from SEBI. So just to share with you, it's completely automated. So the way in which that feedback is also processed is completely automated, so that the day the consultation period ends, we get all of these charts, we get all the feedback, and we only have to apply our mind to saying, okay, if the bulk of the feedback is in the areas of A, B, C, D, whether we agree, partly agree, or disagree, and how do we want to change our proposal. So this adoption of technology has allowed us to do far more extensive consultation. And for instance, when we did a recent consultation paper on F&O, we have some 6,000 responses. Now imagine if we had tried to do this manually, we would have died. But since it's all automated, we are really able to collate it very speedily and assess as to what is it that the market is giving us feedback in terms of the nature of compliances that we should have in the first place. The third area where we are now putting a lot of effort is to ensure that all of our market infrastructure institutions are adopting APIs 100%. Because naturally the whole system of file upload, file download, etc. has so many limitations in terms of just ease of doing what you need to do. And it's also vulnerable to errors and so on. So working this along with the standardization, working on APIs and saying everything will be API enabled so that the fintech industry can really leverage the entire infrastructure of the market ecosystem. A lot of the reporting has been converted to XBRL reporting, and I'm very happy to see that some of the industry associations, I understand FICCI has developed a system for its members. 25 reports have been automated, and almost over 100 companies have already adopted that system in order to facilitate ease of compliance and ease of reporting by listed companies. So all of this is moving in the direction of saying that companies should have an ability to really have real-time controls in place. That's an important role of fintechs to assist the B2B type of fintechs, not the B2C kind of fintechs, to facilitate that there are real-time controls within an organization and there is reporting which is automated so that literally compliance becomes just a low hum in the background of every organization. This is our ultimate objective in SEBI, that for every entity that we regulate, compliance should simply be a low hum which goes on in the background. It's like, each one of us are just breathing, right? We're not having to think about breathing. We're just breathing. There is an in, there is an out, there is an in, there is an out. And that the real capability of our entrepreneurs, of our industrialists, of our entire economy is really focused on growing the country and growing and delivering services to its citizens. Compliance should just become this low hum in the background. Thank you.
Thank you very much, ma'am. I think it said it all. Compliance should be the low hum in the background. And I'm hoping all of us, including market participants like that, are waiting for a day when that actually becomes a low hum. But really appreciate the kind of efforts the regulator is putting to not only look at innovation, but also make compliance easier with all the technology initiative. Let us put a big hand of applause to ma'am for this keynote address. And thank you very much for coming today, ma'am. Thank you very much. Right. Thank you.
Ladies and gentlemen, on that note, we thank Srimati Madhavi Puri Buch for being part of the Global FinTech Fest 2024. And that being said, I believe we've already had a dynamic start to the program, to the day two of the program. So I'm going to request you all also to continue being seated. Of course, we do have the parallel tracks taking place. But over here, we will be starting with our next session. Let me also inform you that our next session will be a fireside chat on the recent developments in digital finance. So that's going to be the theme for our next session. So I'd like to urge those who are part of the session to continue being seated. We'll get the session started in the next couple of minutes. Meanwhile, do take a look at the app because all the details with regard to all the sessions taking place at GFF, it's available on the app. We also have close to 19 reports that are being launched. So outside, we also have the screen wherein you can get an access to these reports. You can take a look at the reports that are being launched. We've got master classes. You can go ahead and register for these master classes. We've got a lot more happening at GFF 2024. I'll be back again with more announcements. But meanwhile, let me inform you that the next session is a fireside chat on recent developments in digital finance. That's our next session. We'll start in the next couple of minutes. Please be seated. Thank you. Ladies and gentlemen, once again, we request all of you to please be seated. Our next set of speakers are already inside the hall, and we're about to get our next session started. Now, before we do that, once again, I'd like to take the opportunity. This is where we gather experiences from the German and EU regulation. We have two of our speakers joining us. First up, we have Dr. Bijna Kotak Dasani, MBE FRSA Managing Director, Autumn Group. And we also have with us none other than Dr. Florian Tonka, Parliamentary State Secretary, German Federal Ministry of Finance. So ladies and gentlemen, can we have a dynamic round of applause? Once again, let's bring the energy back in the air. And please help me welcome our speakers for a very interesting fireside chat. I think it's a very feisty topic out there for all of us to gather insights from. Dr. Bijna and Dr. Florian. Thank you so much for joining us. Over to you.
So, good morning and welcome to Mumbai. I'm actually quite excited to learn that this is your first time here, and I hope this will be the first of many more. Thank you for your participation and for supporting GFF. This morning, we're here to talk a little bit about policy, strategy, financial inclusion, financial literacy, and responsibility towards consumers from a market perspective. And before I go into the list of questions that we have for Mr. Tonka, what I'd like to do is just take a minute to observe a little bit about your background. So we've already had an introduction on your official role, but I understand that you hold a legal background, you've focused on banking and capital markets over the years, and you're actually very passionate about executing change in this space. Would you like to tell us a little bit more about you and, what it is that drives you to be focused on the future of fintech?
Yes, many thanks. Great to be here in Mumbai. A very impressive venue here, I'm primarily here, of course, to see and to learn how India is addressing all these fascinating aspects around fintech, and to see how you deal with issues which are arising everywhere in the world, and maybe we can just adopt something, learn something. I'm pretty sure we can. So yes, my personal background is I'm primarily a politician. I'm a member to the German Federal Parliament and also an executive role in the Ministry of Finance. I am a State Secretary, Deputy Minister, and responsible for a financial market budget. And in this capacity, I have from the very beginning been fascinated about the vibrant and dynamic development of the fintech sector and all the challenges for society and the regulation, the policymakers to address that. And we have decided in Germany that we want to promote fintech. And this is only possible if you really have the international context and you learn from each other, you have dialogue with each other.
No, I couldn't agree with that more. Thank you. So with my background, I spent 20 years in capital markets and 5 in venture capital and venture partnership. And whilst I'm originally from the UK, I've had the pleasure of living, working, Germany, US, India more recently through the pandemic. And I do have to say that when I arrived here in 2019, I saw a very different deviation of fintech. And we can see that transpiring in the market. And India is now branded third largest fintech market in the world. Germany is the fourth. I think both geographies have a lot to learn from each other, but a lot to do together to inform scale in a measured, controlled, and responsible way. And that brings me to our first question. So I'd like to get your view, Mr. Tonka, on what you feel are the comparables from a strategy perspective for fintech broadly between Germany, India, and across the European Union, and what you're seeing and feeling.
Well, I think there are many similarities in what we have to see as opportunities, of perspectives, and also of challenges, how to deal with them. First of all, I think opportunities, financial inclusion, easy access, cheap and uncomplicated access of people, of a vast number of people to really high quality financial services. Also very important, as we consider ourselves to be an open economy, Germany, Europe, which wants to cooperate with the world, which is global in thinking and in acting. Of course, fintech is a fantastic chance to reduce transaction costs, to integrate further in the financial and the capital markets, in the payment, cross-border and across regions in the world. So international integration is not to be underestimated as an element, as a perspective and opportunity of fintech. And at the same time, of course, we have a dynamic technological advance. We see crypto assets, we see the use of artificial intelligence, and much more. And of course, we have to define the interaction of fintech companies with traditional banks and insurance companies, or with the central banks and other stakeholders. And I think that's pretty much the same everywhere in the world. And it's going so rapidly that we need to exchange our views and develop our strategies and do it at best in an aligned way, so that we and our systems are interoperable and that we can benefit from each other.
Thank you. And there's some very interesting perspectives there. So you touched on AI, touched on financial inclusion, you touched on a number of topics that we'll get into a little bit more as we get through the next sort of 25 minutes. Let me start with the AI piece, because that's often considered a double-edged sword. Earlier this year, I was sharing an example with a colleague where we were talking about the fact that the Washington Times printed an article that basically said that AI is a disaster. It's taking away jobs. It's causing homelessness. It's kind of bringing families into the poverty trap, because it's taking away opportunities that people historically had. At the same time, in that same week, there was an article in India that was published in the press, and the lens was entirely different. It was about upskilling women and upskilling communities and their families. And the article talked about the fact that the salaries that these ladies would be receiving from being trained to conduct roles in the AI ecosystem would give them salaries that no one in prior generations in their families had, that no one in their cities had. And so it re-baselines salaries in India in a beautiful way, creates progression, uplifts people, removes them from the gaps or the traps historically associated with financial exclusion and with financial disempowerment. So two different parts of the world, the same week, very different lenses on the same topic, the interjection of AI into financial services more broadly. What's your view on that, and how do we manage that moving forward?
Well, we need a much broader awareness and discussion around AI, I think, because this is really disruptive and it's changing everyone's life in very short time. So we need more awareness, and of course, never in life you have only something which is only good and has no disadvantage, or vice versa. But I tend to say we need to focus on what AI can achieve, what AI can improve for our lives, and we need to really to harvest that. And of course, must try to minimize unintended effects. But with a positive general view, I believe, in most economists in Germany as well, that in our society, which is aging, AI may be really a game changer to enhance productivity further and to allocate resources, also human resources, in a better way by indeed making things superfluous, which are now doing in the traditional manual way, automizing that. That may be really a boost for productivity and for welfare. And when it comes to the financial sector, I see many chances really to engage and to use AI in a positive way. Creditworthiness assessment, compliance tools, fraud detection, for instance. Also in the insurance sector, risk calculation, risk management in the back office. There are many potential applications which are seen positive. Of course, you also need to discuss whether you need to regulate AI in a sound manner, which means, for instance, you need to avoid biases, you need to have transparency, certain transparency on how certain AI models function. You need to avoid discriminatory effects, that we don't have financial exclusion through certain AI tools and not inclusion. So that is, of course, to be discussed. Europe has tried to regulate it through an AI Act, which, depending on the criticality of AI applications, their sensitivity, for instance, for security, for national security issues, the requirements to AI are higher, are more qualified than for other less delicate issues. So we try to regulate that to increase transparency. And therefore, we have legal certainty around AI, and now we are indeed trying to apply that. I think that's what we have to do. But specifically for the financial market, I see many potentially useful applications of AI, and we should be very open and raise the awareness of the potential of these technologies.
So, as with anything, AI has its benefits. It also has its disadvantages, as we are still evolving with the capability of technology and risk protection measures around vulnerable customers. So if we have customers that are perhaps included in the banking ecosystem, but are not entirely financially literate, and sometimes, in the sort of Western world, the vulnerable definition of customers may be elderly, maybe people who are not active participants of the financial inclusion system. They may have bank accounts, and we were discussing earlier that, the financial inclusion, if you look at how many people have bank accounts or lack bank accounts in Germany, it's those that lack, it's less than 0.02%, which is phenomenal. But what does that actually mean? Do these individuals understand how to utilize the provisions that are made available to them? And, in the UK, I work with a group that has informed parliamentary change in recent years on the subject of economic exclusion and terms of economic abuse, which is now a consortium that's signed up to by the Banking Standards Committee. So the regulators say that all of the banks need to have responsibility around what a vulnerable customer looks like, whether or not they have access to a bank account, whether or not they have access to certain products. The banking economy, the banking fraternity, and the regulatory principles need to support consumers in the right way, because if they don't, then we as a fraternity are responsible. What's your view on that, and how does that compare in Germany?
Well, financial inclusion is certainly something that is promoted through new digital technologies, no matter whether it happens in the traditional banking sector, which of course is not asleep, which is also digitalizing, which is also changing its business models, as well as challenges, new competitors, newly founded companies which can develop the technologies just from the green field, which is a big advantage. I mean, probably the most people from traditional banks tell me the biggest challenge in digitalizing is that we have a grown IT landscape, which is grown and developed over decades, not centuries, but decades, and to repair that in an ongoing process where you have existing customers is much more difficult than having a newly founded company which can really start from scratch and do it in an ideal way. So, but this is what promotes innovation and which puts pressure on the established companies and therefore creates added value, added welfare for all of us. And it's a good thing. Yes, the financial inclusion is in Europe, in Germany, for instance, is generally highly developed. Almost 100% of our people have a bank account. Everyone has the statutory right, is entitled to have a payment account. So not a credit account, but with a credit element, but a simple payment account must be granted to everyone. So that is just regulated. We have vast consumer regulation in this area. There I don't see any problem, but we are lacking still participation of many of our people in the capital markets. We have probably in many cases an uninformed treatment of investment saving, people who just don't deal enough with saving in a sound manner, with also using the capital markets. And this is something which has been pushed by new technologies, by neo-brokers and other suppliers of digital services, and we see the effects already. So something is changing in society, in the mentality, in the investment culture, through the easy accessibility of investment products through neo-brokers. That's really changing fundamentally the attitude of the people to the whole issue. And that's what we need. And of course, it must be complemented with sound development of financial literacy, with indeed the ability of the people to make judgments on their own financial matters in a sound manner.
Yeah, and I think, again, having spent many years in this ecosystem, I've also seen that we talked about welfare. One of the benefits is that you are providing that literacy as you're seeing the adoption rates. And I think I read that in Germany, you've got more than 1,000 fintechs and you've got a adoption rate of about 64% year on year, which is fantastic. But from a welfare perspective, you're also upskilling and reskilling people as well. From an employability perspective, you're also sort of looking at the transmission of the fintech provisions beyond fintech sectors. So there is, in every country in the world now, there is, and yesterday we were discussing this around UPI, there is a mesh for financial services propositions and capabilities to be made available in non-traditional, financial services economies. And I think that supports the literacy piece, but it also means that for certain segments of your socio-demographic cohorts, there are difficulties and challenges around risk. So we were discussing yesterday that one incorrect payment error that could be a fraud could shut down, the global system for weeks, if not months. How do you take measures in Germany to prevent or monitor or support these sorts of incidents? And what is the perspective on welfare from an employability perspective when it comes to reskilling and upskilling people as employees, not just consumers of these propositions?
Well, it touches indeed very, very difficult trade-offs we have to make. We have to enable innovation, which means giving advanced trust into certain new technologies, new business models, giving it way and space to develop, and at the same, while not perfectly knowing where it will end up and where maybe specific or new risks are. This is necessary for innovation. At the same time, of course, if you allow for big mistakes happening, then you may even undermine the whole process and fall far, far behind because people don't accept that. In Germany, for instance, there was, more than 20 years ago, there was really a high popularity of investing into stocks with sometimes poor knowledge on diversification of your portfolio. So people just traded, but did apply wrong strategies. And when then the dot-com bubble indeed occurred and splashed, then many people had lost quite a lot of money, and that meant that for more than 10 years, even 20 years almost, investing into the stock market was very unpopular. So that happens if you do it the wrong way, the right thing but the wrong way. And now we have, of course, to find the right approach to new technologies to avoid extreme backlashes. What happened to FTX in the United States, for instance, of course, has undermined confidence into the market for crypto assets. That's a fact. Yes. So it would have been wiser in the sense and in the interest of the crypto market to find a profound, sound regulation on that issue, which builds trust of the consumers, of the investors, and avoids extreme failures and other things which harm the whole market. And that's what we try, for instance, in Europe to do with MiCA, with the Markets in Crypto Assets regulation. It is designed to build, to establish minimum standards, to say we don't want to see any potential idea of how you could earn money with crypto is implemented in Europe necessarily, but we want to have a sound standard, minimum standard of investor protection and of supervision of AML checks, by the way, also. And I think we have done or delivered quite a good framework which promotes innovation but secures that there are certain supervisory standards. And this is what we should indeed apply in other areas as well. Not to interfere into the market, into business models, but to secure that there are certain standards and that investors can rely that they are not frauded and indeed that there are unsound business models there. But you see sometimes, of course, that the discussion around a sound and proper regulation of new technologies is an invitation for lobbyists of all kinds and all kinds to promote their own interests. For instance, in Europe, we had a discussion around certain business models and remuneration models for neo-brokers, a model which is called payment for order flow. Now, this was applied by neo-brokers who had provided digital access to investment products, to investment services at very, very affordable and competitive prices. And the result was that the traditional parts of the traditional banking industry attacked that remuneration model and successfully lobbied in Brussels it to be banned, which is a backlash for the competition and innovation on the European market. But we have to be prepared, and I think that's probably everywhere the same risk, that under the umbrella or the pretext of finding a sound solution in the interest of investors and consumers, other lobbying interests, other interests, business interests are promoted, and it can end up also in harmful legislation and regulation, and that must be avoided and should be better avoided in the future, I think.
Absolutely, and I think that resilience piece is key, but that also is difficult to maintain, especially when you're seeing the emergence of capabilities that have never existed previously. And we're seeing that transition into other sectors and verticals. So you're going beyond pure fintech or beyond pure financial services. So when you're sort of having a transmission of fintech propositions in non-fintech ecosystems, that becomes harder to regulate. Tell me, you've got around 300 billion digital in 300 billion euros being made in digital payments annually. You've got the average ticket size per neo-banking transaction of around 30,000 euros per user. The average daily payment for a transaction per user attributes to around 4,500 euros. There is a lot of volume-based activity which is impactful at an aggregate level. And when you look at cross-border payments, how do you regulate and contain that?
Well, for anyone who wants to provide payment services to consumers, anyone is required to obtain a license in the European Union. It is sufficient to have one license in one EU member state, and you can serve the whole market. Cross-border is no problem then. And this sort of license is some form of micro banking license. It's not a full program in particular, not relating to own funds, equity, etc. But you need to provide, for instance, that indeed the funds of your clients are safe and are protected against insolvency of the payment provider, that they are separate on trust accounts or anywhere else and not affected by a potential insolvency. And you have to provide that you have the operational capacity, the IT systems, the redundancies and emergency mechanisms that are required to provide services in a technically successful manner, and that there are no disruptions or interruptions which may cause harm. And this is all supervised. Digital resilience against cyber attacks, etc., is supervised. But if you fulfill these criteria, you can perfectly provide cross-border payments within the European Union, also amongst consumers. When it comes to payments to other parts of the world from Europe, that is a bit more complicated, but still, of course, possible. It depends. I think, in fact, it depends more on the regulation in the target country of a money transfer, of a payment, than on European regulation, and vice versa also. If you make a payment inside Europe from outside, that's also not covered by that regulation, but is more or less something that is in between. I think for cross-border payments, if you look at Europe as a whole, and then, for instance, ask cross-border payments between India and Europe, it is primarily an issue that we really have the settlement systems, that they are perfectly operating with each other, that we have no time lapse, that we can also work towards instant payments in this area. That means that we need to define standards, technical standards and other standards in the settlement system so that we really can accelerate that process. And I think that's really a task we have ahead of us.
Thank you. So the reason I asked this question is because I learned some staggering facts recently. Over the last 5 years since I moved to India, I've observed, having worked closely with regulators, that they've done a fantastic job in actually looking at what other countries have done well, particularly in the West, Europe, US, adopting those policies very quickly in India to create the right provisions and the right playground for fintechs and for consumers to be able to experiment, but in a sort of environment where there is consumer protection available or where there is protection for the organizations available. At the same time, they've also been very innovative in their thinking and creativity, and you see things like the Unified Payment Interface, which has given accessibility to a lot of people that were traditionally unbanked or underbanked through eras like the pandemic that we've all experienced to come in and be financially active. However, stat that I learned earlier this month was that fraud through personal relationships in India is up 153% year on year. And quite often that links back to cross-border payments. So you have layers and layers of payments between channels of parties, typically individuals acting through different entities in different geographies. And there is a lot of this with Europe, and that is increasing and very, very difficult to contain. So do you have any suggestions for us on, what might be happening across the pond over in Germany, or what we could consider doing as we move forward to try and contain that? Because it's something that at the moment doesn't have the right legislation around it. It's new, it's emerging, but it is fast scaling, and it's something that needs to be addressed.
Certainly it has to. I believe, first of all, I think India has shown immense capacity to innovate and to spread new technologies in really an impressive way and speed, with UPI being really famous and popular far beyond Indian borders, and I think the first retailers who accepted in Europe as well. So I think that is first of all a tremendous achievement. But as any process which is going very fast, there are people who try to seek their chances to benefit in the one way or the other from it, and some are illicit. And I'm sure it will be addressed. It's a typical thing in very innovative phases. But if you reach a point where confidence then is decreasing, then probably the innovation and the further spread of these technologies may be harmed. So I think it must, but I'm sure it will be addressed. In Europe, we don't see such things in the same way, but we of course haven't the same speed of change, and that I think that correlates. Speed of change and abusive attempts are just correlating, and I'm pretty sure it will settle once technology is more spread, more settled, more accepted. You know more about it, then these side effects and problems will be solved, and the regulators will find a sound approach to deal with them.
So it's a very fine line between financial crime and financial abuse. And last year, the United Kingdom made financial abuse a punishable offence under Section 76 of the Serious Crime Act of the United Kingdom. What they recognise there is that in your own family environment or in your own friends and family environment, you can be pressured as a consumer into perhaps taking out credit or supporting somebody in your name using your data or giving away your own capital to support situations that you may not feel comfortable about. I'll give you a very simple example. I worked for the second largest banking group in the world, in the United Kingdom, that has 17 different financial services brands under it a few years ago. And we were asked to map customer journeys for consumers that were elderly and for consumers that were passing away. And we saw the highest percentages of fraud where children were taking elderly parents into physical branches and basically threatening them and saying, empty out your accounts and give us access to your lockers, or you will be, homeless, or we will not take care of you. That is economic abuse. Another was where you look at customer journeys where somebody that holds accounts or assets may pass away, but hasn't perhaps left a will, or the family doesn't know where to go to access, whatever's left via probate because the provisions are not in place. And so there you have people fraudulently claiming access to money that is lying dormant in those accounts. So I think it's very important to recognize that these situations inadvertently exist everywhere in the world, and that economic abuse is also a very important aspect alongside financial crime that adds weight to some of the issues that we are seeing. Are there provisions like this in Germany, or are there discussions in Germany to bring in policy to this effect?
Well, first of all these models and attempts, I know very well. I have observed some of them. Sometimes I also get some of these text messages, and that is widespread, unfortunately, and apparently in a scale which makes it very, very difficult from the point of resources of prosecutors, of police, really to go after any of them, specifically, of course, because they are often committed in an international context. So the criminal is sitting somewhere else, and it's too burdensome to go after him. So I think the answer would, of course, be that information exchange is taking place between the police authorities in various countries, that we share the information, and that we find mechanisms to quickly go after some of these criminals sitting abroad, and not applying for some form of legal cooperation arrangement for which needs months, if not years, to be granted. So cooperation between security agencies, anti-money laundering agencies is important. Europe now establishes a central European anti-money laundering authority as a big step. We are happy to host it in Frankfurt in Germany, to have the seat there. And on national level, we also form a new authority to go after systematic international money laundering and illicit fund flows, and to investigate into the backgrounds. So appropriate resourcing of prosecutors, of police, specialized financial investigators, and information exchange cross-border, cross-countries, I think is key. And we can, of course, also use forensic AI to analyze the scope, to analyze where is the money going, actually who's behind such activities. So we should indeed also beat the criminals with their own weapons and apply better AI, better forensic tools, and to find technical solutions to these high-scale crime we see sometimes on the financial market.
Yeah. And we're seeing other countries do that. So in the GCC, we're seeing Dubai and Abu Dhabi following similar protocols. So I think the concept of a unified global approach really makes sense. And we'll probably see more of a shift towards that as we get through the next sort of decade. Talking about forensic AI, talking about prevention of financial abuse or economic abuse or financial crime even, it sort of goes hand in hand with literacy and awareness and understanding. Could you tell me a little bit more about what's happening on the ground in Germany to support literacy in the right way for different demographics, and what sort of measures and programs are in place to uplift the current status quo?
First of all, I think we are not so bad in financial literacy. We scored at rank number 2 in an OECD survey on financial literacy. Thailand was number 1, Germany 2. So not too bad. But we have OECD asked to systematically analyze more details about financial literacy in our country, we see that there are certain groups which are disadvantaged, where we have more financial illiteracy. This is certainly correlating with the social status and the educational background, but it is also correlating with gender. So we see that women, in average, know less about financial issues as men. So we have identified target groups where we really must improve it. And now we are in the process of implementing a financial education strategy which facilitates access to information, centralizes access. For instance, we've launched a digital portal where you can easily see your expected pension from various sources, from the government, from your employer, from individual savings, and you can better calculate your personal prospective pension and then react. So that's what we are doing. And we are really trying to target those groups who are disadvantaged or who are behind in participating in the financial market and making their decisions there. And then, of course, I think something new arises. We see that we, of course, also have the need for quality assurance of information. We see that many chat groups, Telegram channels, and so on offer financial information, sometimes even rumors which are spreading through the market, which are not quality assured, where you in the end cannot say who is responsible for the content. And we need, this is a new phenomenon as well, we need to address that. We can't control every Telegram channel, but we really must make the people aware that there are sources which are questionable, which follow their own interests and spread things which may not be correct. And I think this is particularly for young people who largely rely on such sources. This is really a challenge to assure that everyone also looks at quality of the information he receives and not only on speed or range of a certain channel.
So misinformation for the younger generation, and then traditional literacy improvement for women particularly. It's interesting, I was in Switzerland earlier this year focusing on literacy for women. They have a similar challenge. But one interesting statistic I learned there was that almost over a third of women who are killed every month are killed by their partner or by a male in their family, and it attributes back to a money-related issue. So it's about control over money. So even though you may be literate because the government is providing the provisions and they're educating you, and they're giving you access to portals where you can see what your holdings are, what your net worth is, you may not necessarily, because of the social construct, be permitted to execute decisions on your finances yourself. And if you do as a woman, even in the Western world, where we hear about this less versus, let's say, some of the Eastern countries, you may not have the autonomy to execute your own decisions. Do you see those sorts of challenges in Germany?
It is a factor. It really very much depends on your personal situation or the traditions, the culture, the background in which you are living, the way you are organizing your family life. Very different. But yes, of course, this is the broader context, and the broader issue is indeed that yes, financial literacy is an element of personal independence, and the strengthening of the individual, and it is a prerequisite for achieving that. And at the same time, of course, taking the financial decisions, your own financial decisions, requires that you have already acquired a certain independence and an independent role in your family, etc. So that is a bit of a circle. But I'm pretty sure we can improve it. We can improve it because yes, indeed, the women are those where we have really to take particular care about when it comes to pensions, for instance. That is absolutely true, and but that's what we are trying to target in our financial education initiative. It's not addressing every group in the same manner, but really having a focus on those groups who need specific strengthening and specific address by us.
Thank you. And as we move forward into the next sort of decade, What sort of fintech propositions do you think could support some of these challenges, whether it's around risk, whether it's around literacy, whether it's around inclusion in the fully informed way? What are you hoping to see through Germany, but also through other alliances and partnerships with countries like India?
Well, I think the integration of services will be a key issue. Not that you replace certain work streams which are provided in a traditional way by a digital way, but really providing integrated services, automatic execution of contracts, sort of financial home applications where you really systematically analyze finance-related data of an individual and optimize everything at the same time. And so that is, I think, the next step to integrate the processes and to provide overall solutions rather than just bringing to the market a certain product which is superior to a traditional product. That's the first step, but the next step will probably more integrated processes. And this is also applying to international processes, of course, where we really also can think about a further integration across border. But that requires, of course, that we have somewhat common understanding on minimum standards, on treatment of data, the use of AI, but also the openness to define technical interfaces. For instance, the digital central bank money, which India has started to establish. Europe is still working on a concept, but also intending to start. The better they interoperate on a technical level, the better you can really integrate or enable transactions between several currencies. Of course, the more perspective you have for the private sector to develop also integrated products and solutions cross-border. And that, I think, is an issue where you really have to work on if you want to have open economies, global cooperation, not everyone separating and fragmenting the global economy. Then you should use every chance also to allow for interfaces, to allow for cooperation, to allow for the easy development of joint solutions and products for the private sector. And that is what I prefer rather than fragmentation, although I must regret to say that too many people on this globe believe in fragmentation in these days. I do believe in the opposite, and I think we should enable the private sector to integrate at best, and digitalization is a tremendous chance to do that.
Would you say that some of that fragmentation comes because of policy? So it's, again, a double-edged sword. On the one hand, you're trying to protect the economy, you're trying to protect the growth, you're trying to keep a containment where you can measure and be diligent in your scale. But the flip side of that, of course, is that you then end up with fragmentation.
I think that this the key issue we have to decide is whether we really believe that everyone is better off in doing and providing everything on its own and being autonomous in a way to say we don't need the others, because then we feel stronger, or whether we find mechanisms to cooperate in a sound manner. And you can do both, but you are, I think, both from a political and social, but also from an economic point of view, you are better off finding ways to cooperate. And that was the idea for quite some time. Now we see rather tendencies to fragmentation and seeking some forms of autonomy, which in the end is still an illusion. I don't believe it's achievable. So let's not exaggerate that, but rather think about what we can better do to cooperate economically and in the end also politically and socially. And there, digitalization and the fintech is only one element, but I think it's certainly a chance to show that it's possible and that it generates a value add on both sides.
Thank you. So we've touched on a lot of very interesting topics. It's been very insightful. We are at time now. But I think there's a lot to take away there, and I'm sure some of our audience will have further questions for you offline. Let me come back to close the session to the topic, which is, the recent developments in digital finance. Could you tell us which are the top three that you are most excited about as we wrap up our conversation?
The top
which top three developments in digital finance are you most excited about?
Which top three? I just did.
Top three developments in digital
Developments.
finance. Yes.
Well, I think open finance and integrated products. I think the potential of distributed ledger technologies as fully new tool to prove certain facts, certain things happening. And then the digitalization of central bank money is certainly a fascinating issue where we have to take decisions on the concept and must do the right thing now, I think, to enable, for instance, that companies can use them in a proper way, and that can generate enormous welfare. So these three things, integration, blockchain, distributed ledger, and central bank currency is, I think, are the three top things that fascinate me currently.
Fantastic. Well, we'll watch this space. Thank you very much. It's been a real pleasure, Mr. Tonka. Thank you very much.
Thank you. Thank you very much indeed, Dr. Bijna, and thank you, Dr. Florian, for joining us. Thank you once again. I'd like to also please request our members of the audience to also connect with our speakers offline in case of any further questions or queries. Well, on that note, I'm going to take a quick check with my team. I think we're good to get our next session started, ladies and gentlemen. In fact, as we move ahead, before we do so, I'd also like to take the opportunity to thank our registration partner M2P, Fintech VCP partner Westbridge Capital, Platinum partner Financial Times, Gold partners MobiQuick and MongoDB, and Silver partners Aditya Birla Capital, Pure Storage, and Credit Innovation partner Experian. Well, let me remind you all, in fact, we are setting the stage for a very, very pertinent session. This is all about navigating the fintech landscape, best practices and common pitfalls. I'd like to just remind you all that this was supposed to be our very first session, but we are actually hosting this session right now inside the hall, which is why I'm going to urge our members of the audience to please come forward. Please very quickly take your seats. I've been informed that our speakers are inside the hall, so we're good to get the session started. So ladies and gentlemen, with that, let's deep dive into the next conversation, featuring none other than Mr. Chetan Krishnaswamy, Vice President, Amazon, and we have the august presence of Shri P. Vasudevan, Executive Director, Reserve Bank of India. So ladies and gentlemen, our very first session that we were supposed to host, but we are doing it right now. So we're going to request our members of the audience very quickly, please come forward and take your seats as I invite both of our speakers on stage. And with that, we have with us Shri P. Vasudevan, Executive Director, Reserve Bank of India. And ladies and gentlemen, Mr. Chetan Krishnaswamy, Vice President, Amazon. Can we have a huge round of applause? We're talking about the best practices and the common pitfalls as we navigate the fintech landscape. Thank you so much for joining us. And with that, over to you.
Good morning, everyone. At last, we are here, after multiple false starts. At the outset, I'd like to very quickly introduce Mr. Vasudevan, the Executive Director of the Reserve Bank of India. He has nearly 3 decades of experience at the RBI, and today is responsible for the departments of fintech, currency management, and corporate strategy and budget. He has been a key figure in India's fintech leadership story and has largely been responsible for the implementation of cutting-edge technologies and various regulatory innovations, including the implementation of RBI's regulatory sandbox, and of course, the establishment of the RBI Innovation Hub. Very clearly, before we began, he said, keep the intro really, really short, and I hope I have lived up to that expectation. And now, sir, over to you for some opening comments.
Thank you, Chetan. Nice to be on the GFF stage. And being with Chetan sometimes can be a little dicey because he is typically comfortable or aware about what the regulator thinks. Sometimes he also thinks for the regulator as well. So it's going to be tough to be with him. But Chetan, I wanted to ask you as well, do you mind me standing there and talking, or do you want me to sit and talk?
Please go ahead.
Okay, then I think I'll go to the podium and talk, and then I'll come back.
Please.
Yeah, once again, good morning, everyone. As you see, I have no written agenda. I thought I'll spend some time talking to you about what's happening in the fintech space and what do we talk about when we are navigating the fintech landscape and the best practices and common pitfalls. I thought, given it's okay. I thought, given the short time we have seen the fintechs in the country, and given the shorter time I have been with the fintechs, I would like not to talk about the pitfalls or even about the challenges, but best practices. Rather, I would like to spend some time about what the learnings have been, how have been the experience, and what could be some things that we can all take away from. And as I have always been saying, we also are learning, we also are evolving in terms of regulatory practices. When you look at the financial system, the confidence that the people will get in terms of handling money, in terms of handling payments, they are very critical for ensuring monetary policy transmission and also the financial stability of the system. And for people to get that confidence, they have to be empowered, they have to be entitled as well, be they individuals or be they institutions. They have to be entitled and they have to be enabled. And this comes with a lot of responsibilities when you want these entitlements and empowerments in terms of respect for the structures that are there, in terms of certain practices that need to be followed. Because you are all interacting with a space that is the financial sector, the financial services. If you look at the entire ecosystem, any sector, the financial services sector is one of the tightly regulated and closely supervised sector. And if anybody else has to interact with this sector, they also have to follow certain rules, certain expectations, because we cannot have those disruptions, because we will end up losing the public trust and confidence. Ultimately, it's all about money. So over a period of time, when you see the practices that have happened, we have to also appreciate the expectations from the other side when we deal. For example, you would have heard about Mr. Nandan Nilekani speaking yesterday, or even Mr. Chris Gopalakrishnan talking yesterday, about how the regulatory interventions have also been successful in heralding innovations in the Indian context, and how many of the initiatives have been to a large extent regulator-led as well. So we do think that probably the regulator also has a critical role to play in this. When we look at some of the people who want to get regulated, it's a very funny thing. When they are not in a regulatory space, some of the sectors were not regulated. When we look at payments or even fintechs, when we call somebody for a discussion, nobody will bother. They will be sending a level 3 or level 4 person, and they will say that we are too busy. But when they want to get regulated, they want to come too close, it becomes difficult and disturbing for us as well. And post getting regulated, again, it's difficult to access them. So it's a very interesting thing. And some of the people who want to get regulated, they take a registration or a certificate of authorization. And we also see that they are yet to start the business. When we ask them why, they end up saying that we are still reimagining and evolving our business practices, so give us some more time. We don't give a license to chill, okay? We give a license to operate. So you have to be mindful of that when you want to come into the space. And many of the people who want to be in, you are typically seeing a herd mentality. If some set of people are coming in, everybody tries to follow. Many of the recent sectors that have been brought into regulation, if you see, so many people are operating, and over a period of time, it is becoming a sort of a competition among themselves. Normally, when we have those partnerships, we are looking at a partnership and collaboration and competition with the banks. But here, it's among the entities themselves that these partnerships are, the competition is happening. So that's becoming a little difficult in terms of numbers that we need to. So I have always been saying that please, as an industry, you look at how many entities should be there in a particular space. You can also discuss among yourselves and how much we can afford. So probably the SRA announcement that was made yesterday could be one more step in the direction where we can have these discussions, and probably the players can also discuss among themselves and see how the sectors can come up. When we saw the announcements happening yesterday, when we have been seeing certain developments, one thing is coming to the fore very clear. That is that everything is going to be now platformized. Platforms are going to be the essence of the future, be it for the Bharat Bill Pay, be it for earlier P2P lending, be it for the trades, etc. Everything is going to be platformized. And as we go ahead, we are also going to see the interoperability between the platforms. Again, we saw one more announcement yesterday about how trades and BBPS can get interlinked. We are going to see this interlinking between maybe today UPI and tomorrow ULI as well. So those platforms are going to be the essence for everything. And when we have those platforms coming in, we are also going to see what we call as packetization. The events, the activities, the exposures, the experiences are all going to become smaller and smaller. So platformization, packetization, you have to be ready. And what I also want to add, another P is about peopleization, what we call as democratization. We call it as peopleization because ultimately the entire effort of everyone is to see that we are customer-centric and we do all our initiatives that are customer-centric in nature. So all these three Ps are essential. And as we develop these packages, one mention was made by the governor as part of his talk about how we can have these plug-and-play solutions that can be developed and transported to other jurisdictions as well. So these couple of Ps are very critical for our pieces to work together and our systems to work in a harmonized manner. When we are looking at some of the expectations of the players as well, they try to, for example, expect harmonization across regulators as well. You are actually operating within the country as well across multiple regulators because the players are also moving between, say, payments, maybe lending, then they're going to wealth management, then they're also trying to get into insurance, etc., sectors. So harmonization across regulators is also one expectation. That's going to be very difficult because each of the regulators have their own jurisdictions and set of concerns that need to be addressed. So harmonization is one thing you will have to manage, you don't expect others to manage. And especially when we are looking at other territories to be added as we go forward, especially interlinking fast payment systems. Again, one more mention was being made yesterday about how many jurisdictions are there where our systems could go. So we are providing a platform that's easily available to you. If you are well established here, probably you could be easily transported or you could be also exploring other jurisdictions as well. That's very critical. You would also have heard me speak in the morning when the member of the board of the Fed Reserve was here. He was a little apprehensive about some of the issues that need to be sorted out before we can look at interlinking, say, the Fed now and UPI. And we were trying to be very positive, saying that even if it takes a little time, it's going to be worthwhile because many things are going to be cheaper and faster. That's how we are going to work about and that's how we are going to go in. So I would like you to have this approach when you are looking at regulation. So whenever we are trying to deal with structures, I would like you to also think that you have to respect the compliance-related things. I agree in the dictionary, capital comes first and the compliance comes later. So capital, of course, you are all very, very comfortable handling with your investors and venture capitalists. Any of their requirements, you are more than eager to meet. But that doesn't mean that you can actually ignore or bypass compliance. That's equally important. So sometimes when we meet the venture capitalists and even those co-founders as well, we tell them very clearly that please imbibe this element of compliance in your invested entities. See that compliance is never compromised irrespective of the scale. Incidentally, like we have been having plenty of interactions with the industry. A number was again being mentioned about 700 plus bilateral, 50 plus such group interactions we have been having in the last 1 year or so. As we come closer to the industry, familiarity breeds consent. That's how it's happening. People can think that they can get anything and they can ask anything. Yesterday I was just walking around in the stall and I happened to meet two youngsters who came and immediately saw the badge and said, "Sir, we want to ask you a question." I said, "Yeah, do I know you?" They said, "No." Then they said, "Sir, what do you think are the areas in which we should enter into?" I would have been very happy to say, why don't you go to Lamington Road area or go to Koramangala area. But I just said, that's not the purpose. No, you should be having your ideas. You should be trying to know where you have to go. Asking us, okay, we are here to interact with you, but we have to be also mindful of some of those things because internally you have to look at many of those areas where you want to get into. As I said, some people are saying that after getting the authorization that we are trying to reimagine, re-engineer our business practices and then decide where to go. It doesn't work. We are also trying to see that the ease of regulation is available, the compliance costs do not impact much, bring in a level playing field between the formal traditional lenders and the fintechs as well. We have tried to see, for example, one announcement was made yesterday that if you are having a payment aggregator requirement, you don't have a separate approval going forward for online, offline, cross-border, etc. It could be one. Probably going forward, we can look at having one single authorization for any of the payment system activities we are doing. So these are the things that can be facilitated going forward. For that, we need to come together. We need to have those interactions as well. But we should also understand, as part of the landscape, what is that we are looking at? You would have also heard about the repositories that are in place. I will be happy to get inputs from the industry about what are the initiatives they are doing, where they would like to get support. But that is taking some time. Probably the industry is yet to feel comfortable to come close. But let me assure you, we are as a part of you as much you think you have your fraternity with you. We are also a progressive regulator. We also want to be a progressive stakeholder in all these initiatives, because it's going to be a long journey together, and let's have a nice journey together as well. I thought I can spend a little more time talking, but I know that Chetan has lined up lots of questions. I'll take them, and then as we go ahead, let us see where we navigate the landscape and how we navigate as well. I stop here. Chetan, I come back to the table.
Thanks a lot for giving us those very interesting perspectives and taking us through the real life experiences that you had during the course of your interaction with the industry. And what really struck me were the 3 P's: platformization, packetization, and peopleization. And obviously that would be the essence and the future of the fintech industry in this country, is what you said. You also mentioned about the need for regulators to be progressive, and perhaps RBI in many ways exemplifies that attribute. Right off the bat, my question would be, how do you bring about a fine balance in ensuring that there is regulation, there is sort of oversight in many ways, but at the same time, you need to also foster and spawn innovation? What is RBI's sort of game plan when it comes to this?
Yeah, but many a time, thanks Chetan for raising this, because many a time this question gets asked, like, is the regulation and innovation, how do you have a fine balance? But why do you always think that if there is regulation, then innovation could be stifled? No, we have to have an orderly growth, and that can actually facilitate innovation. For example, I can take a couple of initiatives. In the payment space, we had one small, we always approach everything with a customer-centric approach. So one of the things we said was, okay, let's have a facility where the customer could switch on and switch off the card feature, so that he is not scammed or his balances do not get used. And that also has led to many innovations happening. Many of the players have actually had a good clientele because of these things, because the banks and other card issuers need to have this facility. So also with the e-mandates, now everywhere we are talking about e-mandates, and the mandates are 10x, 15x in terms of numbers year on year. So there again, innovations have come in. Many more things can be built upon that. And so also tokenization. Now, I still feel, I don't know how Amazon feels, but I still feel that the card data that was stored is now democratized because it's in the form of tokens. And we are, touchwood, not seeing any breach, even when we are seeing some data leaks happening in terms of card data being lost. So many other innovations have developed on this. We had mention about ULI, Unified Lending Interface, that could be becoming bigger than, say, UPI. And tomorrow, if UPI and ULI interact together, again, the innovations are going to happen. So I agree, there are concerns about regulation coming in terms of breeding innovation. See, one of the things I'll tell you, we had an interaction with a couple of fintechs who were in a particular space. When we asked them that we are not happy with some of the things which you are doing, they said, sorry sir, we were thinking that this is a market practice, and we were following a market practice. Now if you are the number 1 or number 2 in that particular market, and if there is a framework that has to be followed, and if you still feel that market practices swayed whatever you want to do, that's simply unacceptable. So market practices need to be dovetailed into the framework, and that cannot be something that you can decide or the market can decide. So I'm saying innovations are good, but there's a framework.
Absolutely, and you kind of reinforce the need for compliance to be absolutely critical in the overall strategy of a business that is growing. Very quickly now, talking about ULI, we've had the governor also make a mention of it, and he in fact went on to say that the next big thing would be ULI, and in the MSME space today, there is nearly a $300 billion gap that exists in terms of credit, and perhaps ULI is a terrific opportunity for that gap to be plugged. Can you give us more details on what the thinking is on ULI?
See, actually, ULI will bring in multiple stakeholders on one platform, be they on the lender side, the traditional lenders, and be they on the people who need the finances, be they on the types of loan that could be made available, be they in terms of the data sources that need to be accessed to make a borrower viable or be acceptable for a loan. There could be, as of now, 50 types of data sources being mentioned. You are aware that GSTN also has been added. Of course, Aadhaar, multiple land records of state governments. Then we have milk pouring data. Many data sources are now linked to the platform. But more importantly, I want to say that we have been having this project for the last 15, 16 months now. And we have seen almost 1.5 lakh loans already being dispersed, and many of the people who are borrowing, and the majority of the loans presently are by the MSMEs. If you want a micro business loan, if you want an education loan, if you want a housing loan, if you want a tractor loan, dairy loan, I can go on and on. All these are possible from the platform. And there are many more things that are going to come when we look at the benefits, but I just want to take that point about MSMEs. See, if you see the requirement of MSMEs, we have tried to bring in different innovatives and initiatives to facilitate the credit for them. See, MSMEs have certain problems in terms of availability of collateral, delayed payments, and of course availability of finance as well. So for the availability of finance part, we have the TREDS platform. The TREDS platform are doing wonderfully well. 4 platforms are there. 2018 the guidelines were announced. Over the last 5 to 6 years, CAGR is around 60% in terms of volume of invoices or factoring units, and around 85% in terms of value of units financed. 16,000 crore is the latest number I have during a month. There what happens is that if I am a MSME seller and I give it to, say, a buyer on Amazon, now here we are looking at corporate buyers who are good buyers, big buyers. The rating is on the buyer, not on the seller, and the finance is also without recourse to the seller. And we can have a bid happening across any of those lenders who are there, banks, tractors. They can come and bid for the loan. The loan is my prerogative to accept or not to accept at what rate of interest. That's TREDS. If you are talking about delayed payments, this can be taken care of because the money will have to be paid by the buyer on the due date, but the lender can, the seller can get the money early. And we have recently enabled more features on the TREDS platform by way of offloading. If a financier has taken exposure, he can offload it to others on the platform. We have brought an insurance so that the financier will be comfortable to give the money. And we have also allowed many other features to come in on the TREDS platform. So we are going to see an increase. Hopefully going forward, the TREDS platforms could be interoperable among themselves as well. And with this BBPS linkage happening, Bharat Bill Pay for Business, more things are happening. And you just mentioned a little while earlier about regulatory sandbox. We had a regulatory sandbox for MSME payments as well. Multiple features have come out. And then they are trying to digitize the invoices, bringing blockchain as one element where people can actually have a consent-based mechanism. So MSMEs are going to enjoy a comfort. And one of the one of the findings was about GST Sahai that has come in to take care of this aspect of not available, having enough collateral. The cash flow lending has been enabled. You can actually have the GST linkage. We can have the account aggregator linkage. All these linkages can provide a nice platform for the MSMEs to borrow without availability of collateral. So delayed payments, collateral, availability of finance are also being taken care of. So we are conscious of these benefits required and available to the MSMEs.
Sure. On the topic of regulatory sandbox that you just mentioned, and in fact, you were a key proponent of the sandbox. And in fact, the RBI also entered into international partnerships with the Singapore Monetary Authority, etc., etc. So what have been some of the outcomes, successful outcomes, of this sort of experiment?
Yeah, see, on the regulatory sandbox, we started somewhere in 2021. We have had 5 cohorts. 5th cohort is currently live. We started with retail payments, went to cross-border payments, we went to MSME, as I was mentioning, then we went into prevention and mitigation of financial frauds. Now we have a theme-neutral cohort as well. And it is very nice to see the ideas that come into these cohorts. And maybe around 30, 35 entities were there who had their solutions being tested. 18 successful exits have also happened. Interesting part is the partnerships they try to bring in with the banks and other things, and request for some regulatory relaxations to be given as part of the sandbox. And we have not been hesitant, or we have not been refusing. We have given a lot of regulatory concessions, especially in cross-border space, where typically you have to collect the export proceeds. There were certain initiatives where people said that we would like to pre-fund that as well, so that the money that is lying abroad could be used for overseas payments as well. That's a wonderful thing. And if you would have been seeing some of the mention about offline payments, and even about the UPI being available for feature phone users, 40 crore of them are feature phone users. That's a thing that came through the cohort as well. And over a period of time, we are conscious of the comforts available to people who are part of this sandbox. So initially, we had a higher level of threshold for anybody to come in. We reduced the threshold in terms of net worth for participating. We said that you can choose what you want to bring in. So initially, we gave those themes. Later, we have removed the themes as well. You can bring in your theme and participate. And we have also tried to help the, like for example, talking to the banks and saying that why don't you facilitate. So learnings are all very good. There are more initiatives that are on the anvil as well as part of this. We are looking at more blockchain and DLT based solutions also coming up. Fraud is one thing. See, one of the things I want to tell everyone here, request also, is that please don't look at the initiatives and benefits that are coming out of the system in terms of how many lenders or how many more customers you have onboarded. Please also look at making use of these platforms for better risk management for the people whom you are partnering with, maybe by way of customer onboarding, tracking, transaction monitoring, better collection mechanisms. So try to see how best you can make the ecosystem safer. Also participate in fraud mitigation, fraud controls that can be there. So all those things are possible in these partnerships. So I would urge people to look at the use of AI, the use of sandboxes from these perspectives as well. So we can continue about the benefits. You please visit the RBI website. Wonderful details are there about each of these cohorts and the benefits that are there. We will continue to push the regulatory sandbox. Just 1 second, you talked about India-Singapore. Yeah, that's one again cross-border initiative that we have done. But another thing I would like to highlight is about the interoperable regulatory sandbox. I did mention about the difficulties that are there in harmonizing the requirements across regulators, but in the interoperable sandbox, if somebody has a solution that may transcend 2 regulators that can still be handled, the principal regulator will take care of talking to the other regulator and getting those things done. So that's one more initiative I would like everyone to try.
No, absolutely. I also noticed that we have just about 4 and odd minutes to go. And the one big thing that the RBI has consistently been talking about, and which all of us are interested in knowing more, is the digital currency. And in 2022, you launched both wholesale as well as retail pilots. Where are we in terms of really making it widespread and proliferating digital currency? Although, there are risks involved in terms of ensuring that the monetary policy, financial stability systems don't get unsettled by kind of arbitrarily bringing into existence. But where are we, and what is RBI's vision and way forward?
Yeah, thanks Chetan for not asking a question about whether we need CBDC when UPI is doing so good. I'm very happy because most questions come about this only. But I'm happy to tell you that we have been...
It was going to be my next one, but
I have preempted your question, so thank you. No, but what we have tried to do is to be on the learning scale as well. See, when we were talking about blockchain and other recent emerging technologies being available, we thought let us also try and experiment. That's how CBDC as an experiment came. See, anything that is digital, anything can move faster is very good. We have seen that happening in the digital payments. We are seeing that happening in the digital lending. So why not we also look at moving the currency flows also faster? See, all said and done, in addition to the upscaling of the digital payment systems, the currency volumes in the country are also significantly high, 35 trillion rupees. So if you can just think about a percentage or two of that moving faster quickly, it's going to be tremendous. And the CBDC is one way of taking care of that. And CBDC, we also believe it can offer the convenience of cash. So still, if you see in India, around 40 to 50% of people prefer using cash because there are conveniences available. If those conveniences can be made available on the CBDC by way of anonymity, by way of programmability, we will be seeing some use cases that are going to be launched where you can actually use the money, CBDC, like your currency. And of course, when you talk about currency being used, probably we may also have to look at the need for KYC when such wallets are going to be used. How we can de-link bank accounts and CBDC wallets. Those things are a priority for us. And we are also trying to see how we can actually have cross-border interactions where CBDC could be used. And we believe that when we have these cross-border exchanges, the present payment modes could be one way, CBDC could be another way, and both can compete with each other. And when we see the way the merchants get their money with probably a time lag, etc. in the case of normal payment methods, CBDC can help do away with intermediaries. And ultimately, it will be a central bank liability as well. So central bank balance sheet also gets digitized. So digitization is a way forward. And we are willing to learn and we are willing to keep the pilots on because it's going to be a national level project and we need to be doubly sure of what we are doing. One of the things we did as part of the pilot was to scale up the volume significantly during December last year, and that gave us certain insights about how technology is actually having some issue as well, so how we can actually take care of that. So it's going to be a learning project for some time, and probably I will be very happy if everybody is given a CBDC wallet with some money loaded as well. Let them go experiment and enjoy and see what are the benefits of CBDCs.
No, we've just run out of time, but I'll take the liberty of asking just one last question instead of summarizing our conversation and giving closing comments. What do you think of internationalization of our platforms? How do we take it global? There's a lot of thinking on what needs to be done. So final words from you on this one major strategy that RBI and the government of India seem to be jointly pushing.
So you have heard many mention about how UPI is being internationalized. Many of the countries are already using UPI. Mauritius, if you look at Sri Lanka, if you look at Singapore, if you look at more countries that are going to come in. Ultimately, the idea is you carry your mobile in the same app that will be useful for any payment anywhere in the world. That's how we are doing. But more than that, we are also looking at making our RuPay cards international, issuing international cards in currencies that are international on the RuPay front. We are also trying to make our SFMS global. So we are looking at SFMS being available for any of the payment transactions to happen. You are aware that RTGS, NEFT, etc. run on SFMS. And let me also tell you that the volumes that SWIFT processes for international cross-border messages is much lower when compared to the volumes that SFMS processes. So we are trying to see that SFMS could be a way of going global. We are even looking at making our Infinite the network for everybody to use. So it will be a technology stack that we are trying to. Ultimately, probably we will be very happy to ring fence ourselves from whatever happens elsewhere when we have these technologies available with us. So it's going to be a nice journey together, and all of us will, as I was saying, maybe have more GFF in international locations, maybe have more discussions there, but India will be there everywhere.
Thank you. On that high and optimistic note, I'd like to thank the audience and thank you, sir, for this stimulating conversation.
Thank you for being here even when the regulator is speaking. Means that we still have a say. Thank you.
Thank you, sir. If I could request both of you to please come together for a quick photo op. Thank you once again, Mr. Vasudevan. And thank you very much, Mr. Krishnaswamy. Thank you for sort of spearheading this very important discussion for all of us. And on that note, on that optimistic note, ladies and gentlemen, we're about to march ahead and we're about to get started with our next session shortly. For the benefit of the audience members, let me inform you that while we were to have the session featuring the Honorable Minister, Shri Ashwini Vaishnavji, however, due to unforeseen circumstances, Sir couldn't make it to the GFF 2024 as of today. So we will be moving ahead with our next session. I'd like to inform you all that the next session will be a special address featuring Shri Ajay Kumar Chaudhary, the Non-Executive Chairman, NPCI. I'd like to bring to your attention, that's the next session that will be taking place over here. It's a keynote special address that's being hosted inside the hall, featuring Shri Ajay Kumar Chaudhary. On that note, let me also inform you that the master classes are happening, so I hope you're taking some time off to register for the master classes and the roundtables as well. We have interesting and very, very different and diverse topics across each roundtable. So please be sure you're registering or you're part of relevant roundtables that you wish to be part of the discussion. That being said, please stay with us for the next couple of minutes. I've been informed by the team that we still have another 5 minutes before we get started with the next session. Stay with us. Please be inside the hall. We'll get the next session started shortly. Thank you.
Good afternoon and namaskar to everyone present here. It's okay? I have been given the topic to speak upon Fintech, AI, digital payments, how they are shaping the future of finance. Esteemed members of financial institutions, academia, press and media, colleagues from RBI, NPCI, and industry, Fintech industry specifically, and distinguished guests. It is an honor to be present at the Global Fintech Fest 2024. As we gather here today, let us embrace the opportunity to collaborate, innovate, and shape the financial landscape in our journey for developing an inclusive and sustainable financial system. Together, we can drive positive change and revolutionize the way we interact with money and tech. I would like to begin by recognizing the significance of this gathering. The Global Fintech Fest has rapidly evolved into a critical platform for innovation, collaboration, and dialogue in the financial tech sector. Now, in its fifth edition, GFF stands as a cornerstone of communication and creativity in fintech industry. The theme of this year's fest, Responsible AI, Inclusivity and Resilience, directly addresses the difficulties and opportunities that lie ahead for all of us in the fintech industry. Steve Jobs once said, quote, "Innovation distinguishes between a leader and a follower," unquote. As we convene to deliberate and investigate the significant transformations that we are currently taking place in the fintech industry, I am reminded of this quote. We are not merely participants in this global conversation, we are the leaders who are influencing the very foundation of the financial world. We must approach these advancements with a sense of responsibility and inclusivity. By fostering a culture of responsible innovation, I will define it subsequently, that prioritizes ethical practices, embraces diversity, and strengthens financial stability, we can ensure a more resilient and sustainable future for the financial system in general and fintech industry in particular. The landscape of the financial system is witnessing profound transformation. Unlike anything we have seen before, tech is at the heart of the changes, reshaping how we think about finance, how we interact with financial services, and how we approach regulation and oversight. The convergence of AI, artificial intelligence, tokenization, blockchain, big data, embedded payments, quantum computing, digital currency, CBDC, and other emerging tech is opening up new possibilities. But it also poses significant challenges. We must address the associated risks with foresight and collaboration to ensure that these tech are used responsibly. Now, looking at the global fintech landscape to understand how it is growing globally, the journey of fintech has been nothing short of extraordinary. Globally, fintech investment reached USD 58.2 billion in just the second half of 2023, and the sector is projected to generate an astounding of 1.5 trillion USD in annual revenue by 2030, which will constitute 25% of global banking valuation. Asia Pacific region leads this charge with the total fintech revenue at USD 90 billion in 2022, just the second region after North America, with the projected growth of 27% and poised to take the number one position in region globally by 2030 in revenue generation. Latin America and Africa is also not far behind. They are following this with impressive growth rate of 33% and 32% respectively. With policy support and tech advancements, the future of fintech looks promising for both investors and consumers alike. The global fintech landscape is as diverse as it is dynamic, from embedded finance to decentralized finance, from integration of AI and ML to DLT and tokenization. The innovations are endless. These technological advancements are not just redefining financial services, they are reimagining the future of finance itself. As the industry continues to evolve, the right mix of both competition and collaboration between the fintech entities and traditional incumbents, I mean banks, may be essential to drive innovation as also its adaptation. By leveraging their respective strength and meet the evolving expectations of customers. The market force will ultimately determine the area of focus for each dynamic, I mean which area one should collaborate and which area one should compete. Now look at the fintech in India. India, known for its dynamic and swiftly evolving fintech ecosystem, it is at the forefront of this global transformation. India's fintech sector is projected to expand from USD 110 billion to an outstanding USD 420 billion over the next 5 years, with a compound annual growth of 31%. Further, our nation is third globally in terms of the number of fintech companies, with more than 9,000 entities at this point of time. Additionally, we have an adoption rate of 87%, which is significantly higher than the global average of 67%. The transformation of India's fintech sector from an emerging market to a global powerhouse has been nothing short of extraordinary. Initiative by way of DPI like UPI, Jam Trinity, Jandhan, Aadhaar and Mobile, and now ULI, Unified Lending Interface. Institutional support, supporting policy framework from government and regulators, and tech capabilities are helping the driving a revolution in fintech innovation in India and playing a crucial role in fostering an environment where fintech and fintech entities can thrive and continue to drive inclusive growth. India's journey in the fintech is a story of vision, resilience, and adaptability. It is a journey that began with small steps but has now reached a point where we are setting global benchmarks. The success of UPI, which recorded over 14 billion transactions, I'll repeat, the success of UPI, which recorded over 14 billion transactions with value amounting over rupees 20 lakh crore in July 2024, is a shining example of how tech, when combined with policy support, can transform the financial landscape. UPI has not only simplified payment for consumers, but also has empowered small businesses, enabling them to access a wider market and grow the enterprises. Similarly, the Aadhaar-enabled payment system, AEPS, what we know as, has revolutionized financial landscape in India and especially the inclusion. With over 1.3 billion Aadhaar cards issued, we have created the world's largest biometric identification system, ensuring that even the most marginalized sections of our society have access to basic financial services. The Jam Trinity, Jandhan, Aadhaar and Mobile has further accelerated this process, bringing banking services to the doorstep of millions of Indians who were previously excluded from the former banking system. If we may look at financial inclusion from the lens of access and more access, these enablers have truly revolutionized financial inclusion in India. The impact of these initiatives on India's economy have been profound. Digital payments have reduced the cost of transactions, increased transparency, and reduced the corruption. They have also paved the way for new business models such as digital lending, which leverages data on cash flow to facilitate more inclusive and accurate underwriting to MSME and small businesses, which empowers them to grow and thrive in a competitive market. Today, India is home to over 30 fintech unicorns, and this number is expected to grow. People speculate that it may be more than 100 by 2030, driven by the promise of a digital-first economy. The rapid growth of the fintech industry in India has also attracted significant investment for both domestic and international sources. This trend is expected to continue in the coming years. India's leadership in fintech is also evident in the international arena. The launch of UPI Pay Now linkage between India and Singapore is a testament to the potential of cross-border fintech collaboration. This initiative enables real-time, low-cost remittances between the two countries, which is benefiting millions of workers, students, and businesses. As more nations look to replicate this model, as Governor Reserve Bank of India yesterday mentioned, India is well positioned to support the development of a global digital payment network. The success of this initiative could revolutionize international money transfer in a more efficient and cost-effective manner, creating a more interconnected world. Under the Global Digital Public Good Initiative, our vision is to support building a robust fast payment system globally and connect the world through sustainable, equitable, and inclusive payment corridors and technologies. NPCI International Payments Limited, our wholly owned subsidiary of NPCI, is at the advanced stage of extending UPI and RuPay card arrangements and its linkages with India in various other jurisdictions and entities, including those of UAE, Qatar, entities in France, Namibia, Peru, Bhutan, Sri Lanka, Mauritius, Nepal, etc., etc., and etc. Now we can touch upon some emerging tech. Application programming interface, what we know as API, and cloud computing are some of those new tech which are already being used widely by a significant number of incumbent banks as well as the fintech entities. As we look ahead, several emerging tech stand out as a driving force of the future of fintech. Artificial intelligence and machine learning are already transforming the way financial services are delivered, offering personalized experiences, predictive analytics, and enhanced decision-making support capabilities. DLT, distributed ledger technology, including blockchain, is reshaping the way we think about transparency, security, and trust in financial transactions. Embedded finance, where financial services are seamlessly integrated into non-financial platforms, is expected to drive significant growth. Looking ahead, quantum computing, tokenization of financial assets, unified ledgers, interconnection of financial ecosystem, which is popularly known as Finternet, as advocated by our Mr. Nandan Nilekani, launch of digital currency at population level, and many more such tech represents the next frontier in financial innovation, promising further enhancement of efficiency, inclusivity, and affordability of global finance. This may also help in unlocking the growth potential of the economy of any jurisdiction. In coming years, the fintech innovation will be particularly impactful in the B2B and B2B2X space. What we have witnessed last 5 to 6 years, the innovation primarily was driving the payment sector specifically. Now, it will be very critical for B2B and B2B2X space, where small and medium-sized enterprises, SMEs, have a USD 5 trillion credit gap waiting to be addressed globally. Let us now delve deeper into the transformative potential of AI/ML, because it's a topic of this theme of this fintech. The AI/ML tech significantly increases operational efficiencies by automating processes, enhancing accuracy, and ensuring consistency across financial services. AI-driven tools offer new personalized financial products and services tailored to individual needs, leading to better credit experiences. Moreover, AI's superior pattern recognition capabilities are transforming risk management by effectively managing large, unstructured data sets. This allows for improved fraud detection, money laundering prevention, and a deeper understanding of behavior pattern for more accurate underwriting. As regards quantum computing, though it is still at very nascent stage, it holds the potential to solve problems that are currently beyond the reach of classical computers. In finance, this could mean optimizing trading strategies, improving portfolio management, and enhancing encryption methods. As quantum tech matures, we can expect it to unlock new possibilities in fintech and pushing the boundaries of what is achievable by using quantum model fintech application can improve asset classification strategies, risk management, investment portfolio opportunities, optimization, and strengthening the financial decision making. Now, when we talk about lot of opportunities and the way the immense opportunity and possibility is opening up the new tech, possibly we have also look at the challenges associated with all this new tech. As is apparent, fintech innovation bring out lot of benefits, as I mentioned. However, new tech innovations can create new vulnerability. I'll underline. New tech innovation can create new vulnerability and also amplifying existing risks to the banks, their customers, and financial stability. These includes strategy risk by way of adjusting incumbents bank, incumbent banks' business models to increasing digital environment, as also their potential partnership and competition with fintech entities. Potentially, this heightened reputational risk, larger number of factors, testing operational resilience and operational risk, issue relating to data governance, etc. The system-wide risk may also be there due to greater interconnection nodes across the financial entities, heightened degree of contagion in times of stress, and amplification of pro-cyclical behavior. As regards risk specific to AI/ML, they may inter alia include challenges in data governance due to use of high volume, higher velocity, and different variety of data, issue relating to explainability of the model outcomes, model biases, and increased third-party dependency leading to concentration risk. Similarly, tokenization and unified ledgers, though create new opportunities, they may also raise system-wide risk due to greater interconnection of nodes across financial system and concerns on single point of failure. Likewise, embedded finance may expose non-financial firms to financial risk and regulatory scrutiny. The financial entities, they may also pose risk. Till now I talked about the technology, now I'm talking about the entities which are supplier of these fintech solutions. The fintech entities, they may also pose risk by way of market and business conduct, including issues related to consumer grievance redressal, concern on financial integrity, data privacy, operational resilience, enhanced cyber security, and financial stability. The challenge for regulators and industry leaders alike is to strike a balance between the fostering innovation and managing these risks. This requires a robust governance framework that prioritizes customer centricity, transparency, and accountability. I think this is the right time to quote Steve Jobs. He once said, "You have got to start with the customer experience and work backward to the technology," unquote. In the context of fintech, this means placing the needs and interests of customers at the heart of innovation. A customer-centric approach combined with a strong governance and ethical standards will be crucial to navigate the complex landscape in fintech. On the issue of good governance, it is glue to all systems and processes and essential for a sustainable fintech ecosystem. It is expected to ensure accountability, fairness, transparency across all its operations. A robust governance framework is essential for managing risk, fostering trust, and maintaining the integrity of financial system. It provides the necessary checks and balances that enables an organization to navigate the complexity of the digital age while aligning its operation with ethical standards and regulatory requirements. Within this broader governance framework, data governance also plays a critical role in safeguarding one of the most valuable assets of this date is the data. To mitigate these risks, robust data governance arrangement and enhanced security protocols are critical. This requires ensuring that data is collected and used transparently, that informed consent is obtained from customer, and data is stored securely. Moreover, companies should adopt privacy by design principle, embedding data protection measures into their system from the start, rather than as an afterthought. Further, both the incumbent banks and fintech entities may mitigate specific tech-related issues by enhancing controls and ensuring, I'll repeat, by ensuring that human judgment remains the core part of decision-making, risk management, and governance arrangement. Now coming to the aspect of the regulation, one of the key regulatory challenges in the fintech space is balancing the need for innovation with the managing risk. Achieving the balance is the key for allowing innovation that can provide benefits to society without compromising the soundness of the financial system. Thus, as I always mention, the sustainable finance world would not depend on how the regulators design the regulation for fintech entities. It would largely depend on how the fintech sector balances its own wants against the need of customer centricity and good governance. In this context, the role of self-regulatory organizations in the fintech ecosystem cannot be overemphasized and overstated. These industry-led bodies may set standards, may promote best practices, and may monitor compliance within the sector. They may also act as a bridge between a fintech entity, regulators, and consumers, and may proactively monitor the developments in the fintech ecosystem. This may help in achieving the objective of sustainable fintech ecosystem. I understand that RBI has already provided permission to one SRO yesterday, and I believe many more will come. Now coming to the international coordination, it is critical to manage the risk associated with bigger fintech entities, particularly those who are having the cross-border operations, as well as big tech entities. The growing need of harmonized regulatory framework is essential to address challenges related to risk from the scale, concentration risk, contagion risk, and enhanced risk on data privacy, cyber security, and financial integrity. Collaboration between regulators across border will be crucial in managing the risk associated with such entities. Now, before concluding, I may like to touch upon something which is emerging as one of the biggest risks for the financial system, that is the financial crime and the fraud. Financial crime and fraud have emerged as a global menace with over $3 trillion in illicit funds flowing through the financial system in 2023 alone, fueling crimes like drug trafficking, human trafficking, and terrorism. These crimes not only threaten the stability of the financial system, but also have profound social impacts, exploiting vulnerable populations and undermining economic stability in any country. In India, the situation is equally alarming, with cyber crimes happening of over rupees 1,750 crore in the last 4 months of 2024. The increasing sophistication of frauds, often leveraging AI and cryptocurrencies, poses significant challenges. Criminals have adapted quickly to the new defenses, utilizing tech like deepfake fraud and human-operated ransomware attacks to perpetrate complex scams at minimal cost. The role of money mules further complicates these efforts, adding layers of difficulty in tracing illicit funds. The need for robust measures to manage this risk have never been more critical. NPCI has been at the forefront of these efforts, implementing a comprehensive cybersecurity framework and leveraging advanced technology like machine learning and artificial intelligence to detect and prevent fraud in real time. NPCI has taken initiative, including the real-time fraud risk monitoring and management. I'll repeat, real-time fraud risk monitoring and management, what we call as FRM, solution, and public awareness campaign, which are pivotal in safeguarding the financial ecosystem. Further, I know the multiple initiatives are being taken by multiple institutions. A pilot is also being run by our NPCI on identification of mule accounts, and banks are now being sensitized on the outcome of these models. They are very promising outcomes, and I am sure they will be very useful in identifying the mules and alerting the banks in advance in coming days. However, as financial crimes continue to evolve, it is essential to not only embrace new technology, but also strengthen cooperation and create awareness among all stakeholders. The collaborative approach is necessary to protect the integrity of our financial systems. In conclusion, by leveraging technology, embracing alternative data, and adopting customer-centric approach, the fintech sector holds immense potential to transform the global financial landscape. However, realizing this potential will require a collective effort. As incumbent banks, fintech industry leaders, regulators, and consumers, we must work together to build a financial system that is inclusive, efficient, responsive, and resilient. The journey ahead of both exciting and challenging. We are at a pivotal moment in the evolution of finance, and it is our responsibility to ensure that the entry barrier to financial services is further reduced, are more accessible, and financial services generate the responsible innovations and lead the economic growth, and risk are managed in a way that protects the stability of the financial system. Let me leave you with a thought from the Peter Drucker, who once said, quote, "The best way to predict the future is to create it," unquote. Decision we make today, the innovation we embrace today, and the risk we manage will save the future of finance for generations to come. Thank you. Now, I think my target was to finish it in 25 minutes. I completed it. Now I'm open to questions relating to this aspect only. For another 5 minutes, if any question, I'm happy to take that.
Hello, sir. Kavya from Entrepreneur Magazine. Sir, I just want to know, in your experience looking at the changes in the fintech space, what are some startups that you feel are really like being bullish in their approach, or you have your eye on for bringing in further changes to the sector?
Whenever I meet fintech and fintech startup and their leaders, actually, it's very exciting because it's a learning experience always. Very, very sharp mind and very encouraging, actually, the way their thought processes and the way they want to see the changes, actually, in the financial landscape, as well as globally how it can be done. As well as they are driven by wonderful tech backings. So it's a bright mind backed by technology. It's a wonderful combination. Possibly what they need, sometime, some of the entities are balancing the need, right, of today with the wants of tomorrow. So that is the main thing, and that basically requires, I mentioned it very clearly, that some dose of customer centricity, some dose of governance, and some dose of sensitization on regulatory requirement and expectation. If not requirement, expectations. So those things are, if taken care of, I believe that these opportunities are immense and they can grow in India or anywhere else.
Thank you, sir.
Thank you.
Yeah. Yes, sir.
Hello, this is Farid from Airtel Payment Bank. Just like the expansion done on the rails of UPI for Singapore, where all do you think that the next set of expansion can be done where the UPI rails can be used and the payments, as far as convenience are concerned, can be enabled across other parts of the globe?
I mentioned few names here, and at the end I have told etc. and etc. Idea is just to facilitate wherever possible and wherever the requirement is. That NPCI is more than willing, and possibly Government of India is also supporting, along with the regulator support, that we want to go anywhere, we can go anywhere, and provide them all support so that they can develop their own fast payment system if they need it, as well as how to interconnect them to Indian fast payment system. So that basically we are ensuring. Specifically the Global South, our thrust is on this. But you are aware that we are also going to Europe, the Eiffel Tower, France, and Lafayette at France, and we are also moving to the South America and these European countries. It's an endless thing, and we believe that we have the potential to support the developing the global payment ecosystem seamlessly.
A quick follow-on question. What other things that you think can be done along the UPI rails? Let's say typically credit card, credit line, which is, let's say, personal loans. What else do you think can be enabled through the UPI rails and also applicable globally?
You must be amazed that every fintech this fest, we come out with 2 or 3 new features actually, and come and get it launched. Today also some few more features will be launched actually by Deputy Governor, Reserve Bank of India. Yesterday a few things were launched by Governor. And potentials are immense depending on the specific requirement, evolving expectations from the customers, right? Exactly what they need, because this requires the understanding the customer journey and understanding that what they need. And accordingly, our endeavor is to provide these expectations and meet those expectations in at the earliest possible in a seamless manner. That is the way possibly we are looking at it. And it's not ending with the UPI, because you have to integrate with the CBDC, we have to integrate with the tokenization, we have to integrate with interconnection of the all financial ecosystems, and think of digital asset management in future, and where the payment system basically will enable the transaction, monetize this settlement by way of digital currency, etc., for against the digital assets. So all those things, this next 5 to 6 years looks very, very exciting. I believe Nandan has yesterday spoken about the Finternet. That itself is a very exciting concept. And if we achieve even 50% of that, that will be a great, I believe. I believe that next 5 to 6 years will be quite challenging, and whatever we are doing today, we are going to reshape actually the entire financial landscape of the country and the globe. And we are leader in that.
Thank you. Thank you for your time.
Hello, sir. This is Abhijit Patil from Adarsh Credit Society. I want to know more about the ULI. Can you shortly prescribe us what ULI and when it is going to come up?
ULI is, earlier Governor has mentioned that it was an integrated tech platform for frictionless credit, right? ITPVF. It was announced by Governor in August 2023 monetary policy, right? And we had started pilot from that day. This is with the renaming of them as a ULI and possibly giving them certain more impetus by adding more services, by adding more states under this umbrella of this ULI. I believe that it's a game-changing situation, in the sense that in the lending side, any borrower, any lender, actually, borrower can approach the lender on the app or assisted mode, and the lender can get all the information required to facilitate them to underwrite the borrower within few seconds. And if that is possible, they can reach a decision through this platform, what we call ULI platform. It's again the digital public infrastructure. Means anybody can plug in and get all information in a seamless manner. And once it is done, then you can decide whether loan can be given or not. If it can be given, they can be communicated within few minutes, and possibly it can disburse within few minutes. We have demonstrated that, Ms. RBI has demonstrated that in case of dairy, in case of agri loan up to 1.6 lakhs, because it was collateral free, and MSME loans, those loans were disbursed within less than 5 minutes. So it's a phenomenal thing. The way it will scale, actually, it looks very exciting. Possibly next 1 or 2 years, all the frictions possibly, specifically for the small ticket loans, will be reduced.
Thank you. Thank you very much.
Yeah, thank you. It's a pleasure. Thank you.
Thank you, guys. Ladies and gentlemen, can we have a louder round of applause to thank Shri Ajay Kumar Chaudhary? In fact, in his words, as he had beautifully mentioned that India's journey across fintech is truly setting global benchmarks. We thank you, sir, for your valuable time. And on that note, we're now about to set the stage. We're about to literally set the stage. So I'm going to request you all to please oblige with me. Please stay with us. We're about to get up for another dynamic session coming your way. Before we do that, I'd also like to take the opportunity to thank our speaker lounge partner, OneCard, Diamond partner, Credit Saison, Hydration partner, Rupee Ready, Gold partner, Ease Buzz, Silver partners, Findi, Confluent, Beams VC, and Bronze partner, Vakranji and Vampe. We'd like to thank all our partners as well. And with that, we are now gearing up for a very riveting discussion around the evolution of banking, past, present, and future. And this afternoon, we in fact have the presence of one of the most dynamic leaders who is a shining example of remarkable growth. So we're about to get the conversation started in a jiffy. So I'm going to request all of you, everyone who's just entered inside the hall, to very quickly please take your seats. And with that, ladies and gentlemen, the next session, in fact, this session is about to begin. Now, to spearhead the session, we have with us Ritu Singh, Deputy Editor and Anchor, CNBC TV 18. As they often say that to get the right answers, you need the right questions. It's only befitting that Ritu will be spearheading the session. And this afternoon, at the Global Fintech Fest 2024, we have the august presence of none other than Shri Dinesh Khara, Chairperson, State Bank of India. So please put your hands together, ladies and gentlemen. Please help me welcome on stage Shri Dinesh Khara, Chairperson, State Bank of India, and spearheading the conversation, Ritu Singh, Deputy Editor and Anchor, CNBC TV 18. Thank you very much, sir, for joining us at this edition of Global Fintech Fest. Thank you, sir, and thank you, Ritu. Over to you. I think it is, yes.
Thank you. Thank you all. The topic of this session, interestingly, is the evolution of banking, the past, present, and the future. And we couldn't have asked for a better person to lead this chat, because not only is Mr. Khara, the recently retired chairperson of State Bank of India, which is not just the country's largest bank, it is also one of its oldest, and it's unbelievable, the kind of journey that it's had. But, before anything, Mr. Khara, I want to congratulate you on your illustrious run as the State Bank of India chairman. Some have given you the moniker of the profit maker, the 200% kind of increase in profits. We've seen credit costs coming down to just 47 basis points and a 325% return on stock during your tenure as the SBI chairman. So congratulations on this fabulous run, Mr. Khara, and thank you again for your time here today. Let me just trace back the evolution of banking. And, if you just look at State Bank of India itself, started in the first decade of the 19th century. That's why you trace your origins to the back of Calcutta, of course, then the Imperial Bank, and now, as we know, you State Bank of India. What to your mind have been some of the most significant banking reforms that have taken shape, whether that be nationalization to liberalization, to more recently with GST, with the IBC, that have had the most profound impact on the way banks that we know to them today function?
Thank you very much, Ritu, first of all, for giving all the credit for the kind of performance which the bank has demonstrated in past couple of years. Well, of course, it gives a lot of satisfaction to see that kind of performance, but nevertheless, there's nothing but a reflection of the team effort of all SBIans. Now, when you talk about the most profound changes, I would say that banking is actually the proxy to the economy. And we have seen that from time to time, whatever be the need, the banks have evolved. Way back in 1955, when the Gorawala Committee had recommended that there is a need for agrarian reform, that's a point of time when State Bank of India came into existence through an act of parliament. And the expansion of the branch network took place in the rural India. Happened to see that, always right from the second plan onwards, it was always infrastructure-led investment which took place in the country. And of course, we have seen the benefit of that. We have seen countries which got independent almost the same time. But where are we? Where are they? So it is all because the banking sector stood by the economy and tried to contribute. So that was the first major reform. Perhaps encouraged by the kind of financialization it started having because of the State Bank of India moving into the upcountry areas. It was a nationalization which took place in 1969. Then later on, the second phase of nationalization also took place. I think that was an imperative need at the material point of time, that there was a need for expanding the branch network. Then came 1990 with the liberalization of the economy. That was a point of time when it was felt that now it's a time for bringing in more competition, and private sector banks were given the license, which actually worked as a catalyst for the public sector banks too. And they also, particularly for State Bank of India, I can say that we were all geared up to meet this competition, and we ensured that we stay ahead of the curve. Next comes the era of 2000. That was the advent of technology, adoption of technology to a greater extent. By this time, we have started moving from the distributed computing to centralized computing. That is the foundation stone when it comes to today's digital architecture which we get to see. And of course, now it's a history that we have seen that how the adoption of digitization has happened. Then came Jan Dhan. It was actually 2004 onwards. It was a jam trinity, Jan Dhan, Aadhaar, mobile, and it led to a situation where it was a democratization of the banking services through the Jan Dhan account. So this is something which happened. And today, thanks to that Jan Dhan trinity, we have got a situation that when it comes to, we have actually seen the benefit of this when the COVID struck. And on day one, when the common man was required to be given a certain amount of money in their hand, and how fast we could make it happen. So I think it is nothing but that technology which has given us that prowess today to take care of the financial needs of the common man of the country. And of course, now we have come to a stage where we are looking at not only meeting the needs of the common man, but also ensuring that we should meet the aspirations of the common man too. And also we are moving towards hyper-personalization, which means that all this while the data was static. Now that static data is being put to use with the help of analytics. Various algorithms are being developed, and based upon that, we're in a position to do the hyper-personalization. And of course, this analytics is now turning to be handy when it comes to risk management, when it comes to prediction in terms of the behavior, the customer behavior, you name it, and we're in a position to leverage the analytics in that direction. So this is the broad canvas in which the banking has evolved in the last couple of years.
Sure, that's a fine encapsulation, Mr. Khara. But, as a legacy bank that's nearly 200 years old, to transforming into what State Bank of India today is, carrying the burden of the past, but now with a fully digital arm with YONO, if you could take us through that transformation journey, the challenges that you came across, and would you say the transformation is complete even in 2024?
Well, YONO, we have now 80 million registered users already there, and almost about 10 million users are logging on a daily basis. So I think in many respects, it would be a record of sorts across the globe. I would say that when we had envisaged YONO, we thought of YONO only as a retail solution. And initially, it was thought to replace the internet banking. But when we introduced YONO, we thought that no, it should be much beyond that. So it's actually a combination of three. It's a pure play banking, it's a financial superstore, and it's a e-commerce. All three embedded into one is YONO. And since we have got a huge existence in terms of all our financial sector subsidiaries, we're in a position to showcase their products. We can source the credit cards through YONO. We can source the investment for SBI mutual fund through YONO. We can source life insurance policies through YONO. We can source general insurance policies through YONO. So I think in many respects, it's a very unique proposition where we are not in a position, we are not only offering the solution in terms of the financial needs, banking needs, but actually the financial needs. So to that extent, it is certainly a value accretive for the bank and also for the customers. It's a convenience. And I would say that we have started looking at the volumes it is generating. Last year, we generated almost about 1.7 trillion worth of loan underwritten through YONO. And they were essentially into the pre-approved business loan, pre-approved personal loans. We are giving in-principle approval for the car loans and the home loans also with the help of YONO. Now we have gone beyond the retail. It is now being used for the YONO business. When it comes to opening of LCs, bank guarantees, etc., all that can be done through YONO, and it's a huge adoption which we have seen. YONO has gone beyond the boundaries of the country. Now, because in the overseas locations, we have got very light footprints, and generally the customer base is quite broad-basely spread out there. So just to cater to their needs, we have got the YONO for various global destinations also. Yeah, and now we are working on YONO 2.0, where the intention is that it should be made more modular. It should be made more faster in terms of processing. And I'm sure the path which you are following, we will get to see the YONO in new avatar. We have already seen some of the additions which you have done. They are happening seamlessly. Minimum viable products are getting introduced. Yeah. And that is something, and also its rating is getting improved, most important.
Well, State Bank of India really prides itself for being the banker to every Indian, right? And a large part of that reason is because of your physical presence on the ground. To what extent do you think this physical branch banking can be replaced by digital channels? How soon before you see increasingly, the bulk of your incremental customers and incremental business only coming through the digital channel?
It is an interesting question, because when it comes to the kind of customer base whom we serve, happy to share that State Bank of India serves 50 crore customer, which is almost 1/3 of the country's population. And when we serve 1/3 of the country's population, we have to take care of all kind of customers, their preferences. So we actually look at YONO as a distribution channel, one of the distribution channel. The way branch is a distribution channel, YONO also continues to be another distribution channel. And what you mentioned in terms of can the physical presence be replaced by YONO, or the YONO can replace the physical presence, or either way out, I think it's an era where any commercial organization has to think in terms of multiple channels of distribution. And to my mind, there is a scope for coexistence of both, even in the foreseeable future.
Well, I'll quickly step away from the institution itself to some of the more present issues that the banking industry finds itself in today. A few years back, the whole talking point was about bad loans and how banks were cleaning that up. And now banks have emerged healthier with stronger balance sheets. But as the governor often repeats, it's in good times that lenders should not let down their guard. That's something that the regulator highlighted with unsecured lending, and we're seeing that play out now with banks reporting higher stress in their retail book. But to your mind, now that we're in these good times, what are some of the emerging risks to be wary of, for the present generation of banking?
Well, rightly said that invariably the mistakes are committed in the good times, because if at all you take away your sight from the road and also the steering wheel, the accident can happen anytime. So that is one of the reasons why for any banker, good time or bad time, a risk is always to be kept in mind. Normally, at times people tend to ignore the risk, but that should not happen. And for that, I think now the system has strengthened quite a lot in terms of the infrastructure, in terms of the MIS, which actually ensures that there are early warning systems in good time, which actually gives a good opportunity to plug any such chances of any accident. So that is, I think, which has happened. But yes, of course, going forward, what you mentioned in terms of unsecured lending, there are different variety of unsecured lending. There were people who were not even looking into the income streams and were going ahead and lending. So those are the people where there could be challenge. But yes, of course, if at all there is a adequate assessment in terms of the income flows and the certainty of the income flows and the EMIs, then perhaps it may not be as much of a challenge. So much of it will depend upon unsecured credit to which category of customer and how much. So that is something which is going to define and determine how this unsecured book is going to look like in the different banking.
Well, that's something to keep in mind. But, the other issue that's really dominating, the conversations among bankers is this scramble for deposits. And that's because, household savings typically, which would, stay in vanilla bank accounts, are moving out because there's more financialization. They're on the hunt for higher returns on their, savings. And also, of course, tax efficiency. Do you see a structural, problem emerging for the banking sector to tackle, with especially as we're seeing more and more banks look at the digital route, not so much as the physical footprint? Do you see this impacting credit growth as deposit continues to lag?
Well, this is something our Chief Economic Advisor, Dr. Soumyakanti Ghosh, has come out with a report, and which is actually based upon the RBI report, where he has analyzed that we have seen similar kind of a situation way back in 2003-04 also. And his assessment is that normally it takes anything up to 41 months for this divergence to get addressed. So I think our assessment was that by the June 25 or so, this should get addressed. But nevertheless, there are multiple options which are available to take care of the loan book growth, which I mentioned in the past for State Bank of India also. We had mobilized deposit at a point of time when nobody used to look at deposit during the COVID period. We have created an investment book, which is, even today also we have got investment book, which is almost about 3.7, 3.9 trillion. And we can easily unlock that investment and support the loan book growth. And of course, deposit is a franchise. Just to address that, in certain time buckets, we did tweak the interest rates. But yes, of course, any banker has to always strike a balance between the deposit cost and also the NIM. There's a trinity which needs to be met. So eventually, how to meet that trinity is nothing but a skill. So I think the skillful handling of the situation is something which will see the bankers sailing through the difficult times.
Well, that's a very clear, definitive timeline you're giving for when the problem may resolve itself. But, back to the theme of digitization, the digital transformation of the economy, are banks today, and especially legacy banks, public sector banks, adapting fast enough? Because if you speak to the audience, they'd probably say, when it comes to payments, not many are using their traditional banks. Banks have probably missed the payment revolution bus. But now that we're talking about the unified lending interface, the increasing, focus towards digital instant loans, are banks adopting fast enough, or is that something you worry the fintechs may again take a lead on? I
think there are various reasons why perhaps when it comes to payments, they seems to have lost out, but they have really caught up in the recent past as far as their technology upgradations were concerned. As far as the lending is concerned, many of them have already gone for adoption of the apps, and also I think digital lending is becoming increasingly popular. And eventually, when it comes to various alternate vehicles which are available for the digital lending, I would say that at least banks, because of their network, they have got a reach, which perhaps may not be there. And also in the financial sector, perhaps the larger balance sheet gives some kind of a resilience to the system as well. And also, keep in mind that the compliance costs are huge and they are increasing every day. So there has to be a minimum critical size for any entity to really make a meaningful business out of it.
Well, speaking of the compliance burden, we recently had the Digital Personal Data Protection Act being passed. Seeking the consent of customers for every sort of transaction that you make every time. The rules itself, of course, are yet to be firmed up. But how do you see that changing the way some of the business models are built around this digital lending? What sort of challenges or opportunities do you think that may bring for the banking ecosystem?
I think we have been engaging on this DPDP Act for almost a year plus, and we were very carefully understanding what is the intent of the DPDP Act, though the regulations are awaited any time now. We had started doing some preparations already, and yes, of course, it will certainly need to revisit the way the banks do the business, or for that matter, why only bank? Any commercial institution in the country will have to be probably look into the regulations and its impact on the way the business is being done. There are huge responsibilities which are cast in terms of the intention which is indicated in the DPDP Act. So it will eventually get converted into regulation very soon. Just anxiously waiting how the regulations will look like.
Well, Mr. Khara, we're running out of time. So a final word, if I were to ask you what the banking ecosystem may look like in, say, a decade from now, with the new forces emerging, the technological transformation, the adoption of AI, the new jam trinity with the unified lending interface, open banking and whatnot, what are some of the forces that you think will most shape this ecosystem? What worries you most? And what are you most hopeful about?
See, to my mind, banking will be more like any other consumer entity where there will be plethora of products which will be available. Perhaps there would be need for doing some kind of a tailor-made solutions. And to that extent, banking is going to be a knowledge industry, will not be as much of the service industry or the transaction industry. And this is how I perceive the banks to be in the days to come. And of course, consuming technology, consuming analytics, consuming the latest in the area when it comes to customer behavior understanding, all these will be consumed by the banks, and perhaps effort will be to create solutions, tailor-made solutions. That will be the endeavor on the part of the banks.
All right. On that note, Mr. Khara, it's been a pleasure chatting with you, and thank you very much for sharing your 4 decades of experience in the banking sector and how some of that past may influence the future. Thank you very much for your time here today. Thank you all for being a wonderful audience as well. Thank you.
Thank you very much, sir. And thank you very much, Ritu. Ladies and gentlemen, after that dynamic conversation, it looks like we managed to set the tone as to what really we will be expecting in the future with regard to banking, and who better than the leader himself to share his valuable thoughts with us. Let me also inform you that we are gearing up for the next session in the next few minutes. What we're about to do is get our next session started after the next couple of minutes. So I'm going to request all of you to please be seated. Before we move ahead, I'd also like to thank our agenda partner, HSBC, Gourmet partner, Pay10, Fintech enabler, SingTech, Gold partner, BriskPay, Silver partners, InSolutions Global, Pay with Ring and Z47, and Bronze partners, MTech Innovation and NCR LTOs. So while we thank our partners, ladies and gentlemen, Let me inform you that our next session, as per the agenda, I think this is where we are strictly following a very good timeline. 1:35 p.m. I've been told 1:35 it is when our next session begins. Meanwhile, I'm going to request all of you to continue being seated. Thank you. Welcome back, ladies and gentlemen. We're all set for our next session. And before we do that, once again, I'd like to thank our amazing set of partners. First up, I'd like to thank our VIP lounge partner, L&T Finance, Credit Insights partner, TransUnion Sibyl, Gold partners, WeGoFin, Payg, and Muntran, Silver partners, Gupshup, and Zigram, as well as Ascenda Loyalty. We'd also like to thank our bronze partners, Yap and Cockroach Labs. With that, we're gearing up for our next fireside chat. And once again, I'm going to request all the ones who've just entered inside the hall to please take your seats. And I'd also like to urge our members of the audience to keep those conversations flowing using the hashtag GFF. Before we move forward, I also have a quick announcement for our members of the audience as well as our speakers. Now, as we're all aware that tomorrow we'll have the presence of the Honorable Prime Minister of India, who will be gracing his presence right here at the Global Fintech Fest 2024. And owing to protocol reasons, we will be having a tech check in between the sessions, because of which the mics might get jammed for just a minute or two. So if that happens, if suddenly our speakers or our audience members go speechless, please note it's just a tech check. Within a minute, we'll ensure we resume it. But it's a general public announcement I'd like to share with all of you so that we're all aware, but we're all gung-ho about all the sessions that we're about to witness. On that note, I have been informed that our speakers are right here inside the hall. So we're about to get the session started in a jiffy. No? Guess what? I think I've just been informed by my team member that the mics might get jammed now, right? Okay, just when I was preparing our audience and our speakers that something like this might happen, I think it'll happen with my mics first up. But I'm just going to take a quick thumbs up from my team if you're set to get the session started, so that we can have a seamless flow of the session. So we'll just hold on for a couple of minutes. Fintech, TransUnion Sibyl. Can we have a louder round of applause, ladies and gentlemen? None other than Mr. David Finch, right here at the Global Fintech Fest. Thank you so much, sir, for joining us. And may I also please invite on stage Mr. Swapnendu Mohanty, Chief Fintech Officer, Monetary Authority of Singapore. We're talking about shaping the future of global finance, and let's really quickly deep dive into this much awaited discussion. With that, let me quickly hand over the stage over to you, gentlemen.
Very good. Yes, we can be heard. So good afternoon, everybody. Pleasure to be here today, and clearly we're making way for the Prime Minister for tomorrow. So hopefully we can get through this without any more glitches. But if I could just introduce Mr. Mohanty, who's the Chief Fintech Officer for the Monetary Authority for Singapore, a well-known figure in the global world of fintech, and a pleasure to have you here today. So we're going to kick off with a number of questions for Mr. Mohanty, and then towards the end we'll try and leave a few minutes for some Q&A from the broader audience. But let me kick off with generative artificial intelligence, Gen AI, easier for me to say. So, Mr. Mohanty, we see multiple use cases for Gen AI globally in FS, in fintech. Many organizations started using it for back office productivity, efficiency gains, also front of house, sort of more customer interaction. But as this develops into the fintech world, how do you see the progression for Gen AI when you think about the end consumer, maybe more targeted offering, looking at potential granular levels of potential fraud? So how should we be thinking about this in your perspective within the FS and the fintech world?
Thanks, David. And I suspect your question is more around from a regulatory perspective.
Correct.
I think from a policy standpoint, Singapore has been looking at AI almost on a 6th year, 7th year. And this is before Gen AI. And then the interest from policy standpoint was to understand responsible AI, which I think the theme of this festival, responsible AI. And when we started thinking about the responsible AI, keeping in mind the consumer challenges it may have, we started putting a program then called Veritas. And the reason we put that program, because just before that, I'm talking 2019 or 18, we came with the principle as a regulator that if banks are implementing AI, they got to focus on 4 risks: fairness, ethics, accountability, and transparency. So FEAT principles. And as it turns out to be that when we put the principles out there, the banks asked us the question, it's good you put the principles, how are you going to check it? And we didn't have a good answer to that. And what we did is we started a program called Veritas, where we worked with the bank and we put an open source code to see whether collectively we can deploy code which will allow the banks to figure out that when they're deploying algorithms and the logic, they can check for fairness, ethics, accountability, and transparency. And that program went fine. We went to multiple use cases, from fraud, from marketing campaigns, and everything was going great. Then came Gen AI. And that changed the risk profile. And instead of 4 risks, we have added now 7 risks, from IP issues, data issues, privacy, and all this thing. And we created a program called MindForge, and we're looking at what is the multiple dimensional impact this Gen AI has now from a consumer protection perspective, from a accountability perspective. Now, I go back to a foundational principle thinking. Do you want to regulate the knife or the outcome of the knife? Because I can give the knife to a chef, they do a great job. I can give a knife to somebody else, they can do a bad job. So we should think of not regulating the tool, but regulating the outcome, and the responsibility of the person holding the knife to be regulated so that they don't create a wrong outcome. But with Gen AI, things have changed. The knife is not a normal knife, it's also an intelligent knife. You may intend not it to do certain thing, it will do beyond your control. So this has made regulators' life more complicated, because you're trying to figure out how do we ensure the people who are deploying this Gen AI have some sense of governance and control on the things they don't control. And that's still a work in progress. We have put together a set of framework how to deploy this Gen AI. And I can tell you one of the CIO of a very reputed aggressive bank told me that they don't want to deploy Gen AI because they're so worried about the liability issues with that Gen AI. So in the banks, there's a lot of fear that by deploying that, you may end up some wrong regulatory outcome. And then comes the EU AI Act, which has now figured out there are 4 dimensions: risk-based, they have prohibited, you can't use AI for privacy use case like IDs. So they have put some framework, but I think it's still a work in progress. I think one of the responsibility as a regulator we just can't leave it to principles. We got to work with tech companies and work through a framework by which we can measure the outcome and also give a supervisor where to check for it.
I mean, the pace of which it's evolving and working collaboratively with the marketplace is clearly helping.
Yes.
The understanding as this progresses at the pace that it's running at, but the guide rails, as they evolve, need to be very explicitly clear.
Yes, and there is always going to be this challenge of there will be unknown. Yeah. There will be unknowns going in that space. But again, we have to think what we are regulating is not the tool. Tool inherently doesn't have that bad or good outcome.
Understood. Thank you very much. If I pivot away from Gen AI into sort of open banking, open finance, open data. So globally, that's progressing in multiple different regions. If I think about the UK, if I think about Brazil, there's over 100 million users in Brazil accessing open banking capabilities. It's emerging in India now. If you were to guide or give some guiding principles, I don't know, the top 2 or 3 areas of, when done, focus areas that from a regulatory perspective, when done right, this really does empower the opportunity that sits around open banking, open data, open finance?
Well, I think the biggest curse of open banking is the word open. I think that has caused more problem than the virtues of open banking. Well, there's a model in the UK, there's a model in Europe. The Singapore Asian model for open banking is slightly different. The way we have approached open banking is to build in 3 layers the open architecture. First, the banks themselves have to have the right architecture so they can integrate their services with third-party fintechs. The traditional banks don't have an open architecture to even plug in services which is useful to them. So we have spent a lot of time thinking about open architecture within the constraint of the bank's own governance structure. That's one layer. The second layer, I think, is from the spirit of open banking, is how to ensure that customer can interoperably move the data between different institutions. And the approach we have taken is through a process of what we call as equivalency, which means that if I am an institution which is providing a consumer data based on the consent to an open architecture, I expect the recipient institution also to contribute. It cannot be that Facebook takes the data, but Facebook doesn't give the data. As an example, I'm not calling out Facebook, but as just a sake of example. So we have created something called SG Findex, which is a consortium of participant institutions which have on a consent architecture where a consumer can consolidate the data from the participating institutions so that they can do value-added services on top of that. And the third layer is where we are looking to the next stage. And this includes all asset class of financial services, whether it is insurance or stock exchanges, everything. The third layer on open banking is open finance. I think that needs some more thinking around to make it fair and easier, because still there are a lot of operational challenges because the data set behind open finance may not reside within the same institution. And a lot of data needs to be validated, verified. So there is still an ongoing work in that. But collectively, I would say that open banking, open finance, by design, thanks to public infrastructure, has taken some roots in the Asian market. But because of this governance challenges, unlike Europe, UK, it has not taken that same outcome. But I think in the balance, there is a fundamental, deep structural shift which open banking has got to the Asian market.
Yeah, thank you for that. And I think from the European model, it's very much a mandated by the governments, by the regulators. And it's really a co-created environment where there is the reciprocity of sharing data, but the pivot or the fulcrum is all around the consumer consent, and it's time-bound. So I think where we've seen that, to your point, setting those boundaries, setting those guidelines, understanding the reciprocity piece, pivoting around the customer consent, I think that's where we're seeing adoption accelerate.
Yes. I think reciprocity is the key part. And that's what Asia has started with. The starting position is that we should able to reciprocate the data exchange between two parties. It cannot be disproportionately skewed to one party.
It's going to be interesting globally as I travel around the world and speak to Canada, South Africa, Colombia, India in terms of the progressive mindsets. But I think there's still some evolution of thinking and alignment between regulator, government, and the financial services world, really, to just align on actually how they're going to really operate that.
And just a quick on that, we also started a concept called Universal Trusted Credential, which is taking data not necessarily held by the government or by a private consortium, but we can do a bilateral, open, decentralized tokenization of credential data. And that's just a new way of thinking. There's a report out there which MAS has published in partnership with UNDP called UTC, Universal Trusted Credential. Good for audience to take a look at it.
Very good, thank you for that. Pivoting now to digital public infrastructure, DPI in India, we have UPI. Colombia also has its own environment. It's creating guide rails, technology, a level of regulation, a level of accessibility for fintechs to deploy their services into a particular region. If you think about DPIs, maybe from a global context and or a Singapore context, how do you think that open technology will play in the future from a global, and I'd also be interested in a Singapore view?
Well, the best example of DPI is right here. There's nothing can be better than what India has done in DPI. We look at DPI in 4 layers. There's an identity layer, there's a money exchange layer, data layer, and a consent layer. And same thing has happened in Singapore, in Thailand, Indonesia, in some sense. What we are now up to is to create it interoperable across the border. And to do that, as an example, Singapore connected UPI to our equivalent in Singapore called Pay Now. We also connected with Indonesia, so with Thailand, PromptPay. We connected with Malaysia. Now, just to give you a little context here, it took us 3 years to connect almost identical DPI stack in Singapore and Thailand. It took 3 years. India, I think it took us 1.5 years. And you'll wonder why the DPIs, which are identical construct, design, technology, has this challenge. And it's all lack of integration in policies. Many a times you believe this has standards, but when you actually connect, these are not standards. There are a whole set of work DPI has to do to make it operating in an interoperable way across the border. This one. And the second is there's whole pricing challenges. In a country, you can subsidize the DPI cost through a public utility. When you connect to cross-border, the economics doesn't work anymore. You cannot just subsidize between two countries because that's a very complicated bilateral agreement. So lack of subsidizing the real cost of DPI becomes a pricing challenge when it goes across the border. So as an outcome, we created a project called Project Nexus in partnership with BIS. And that is now looking at, as an example, how to connect different payment systems across countries who have similar standard so money can move cross-border. So my large point is that I think DPI as a subject has well debated in this country. You don't need to add more. What we need to think about, are these DPI globally interoperable? The answer is we are not ready. There are a whole set of very difficult choices to be made, from pricing to standards through liability shift, especially dispute resolutions, and this has a long way to go.
Thank you for that. Would you when you think of the complexities of integrating two countries, is it equal levels of complexity of technology, definitions, regulations?
This is whole set of, you don't know what you do. It's a huge set of differences. Culture is also becomes a difference. The behavior of consumers are different. What seems to be working in India may not work in other market. So the UX can be also as simple as become a challenge. And so it's hard to put our arms around the complexity of DPIs going overseas. Because some point in time, the DPI has to go overseas. For example, India to continue to its economic growth, they must find a way to connect DPIs to other DPIs. There's no way out. There's always a limit to how much you can grow domestic market.
Understood, thank you. Thinking of a more international flavor around central bank digital currencies, CBDCs, in terms of the impact on the future of money, cash, payments, and sort of use cases. Again, I'd be interested in your view from how this would impact financial institutions, from a regulatory perspective, what concerns or thoughts might you leave with us, either for domestic CBDCs or actually when using this for potential international transactions?
So I think the way to think about CBDC is to start in a very foundational thinking. There are 4 kinds of cash, money today. There's a cash, which you all know. And what is the equivalent in the world of digitization? It's called retail CBDC. And there's a wholesale money in the banking system that has become wholesale CBDC. And there's a deposit, commercial bank deposit, which is now called tokenized deposit in the tokenized world. And there is something called stablecoin, which is the reflection of M3, which is an instrument which is perceived as a money, but backed by some asset. I'm to regulated stablecoin. I'm kind of dismissing the role of cryptos here. It's kind of bad idea. So if you take this whole definition of money in the new form between retail CBDC, wholesale CBDC, tokenized deposit, and regulated stablecoin, each comes with a particular purpose in the new financial system architecture. Unless you have a large market, retail CBDC has got no use case. Maybe you can argue that can be a money in the electronic world when there's an internet breakdown, possible. Offline payments using retail CBDC. The wholesale CBDC becomes interesting because if you are building tokenized asset, if the financial instruments are getting a tokenized form or non-financial asset getting tokenized form, they need money to run on the network. So what kind of money we need to have there? It could be a settlement money using wholesale CBDC. You need banks commercial deposit in tokenized form that can be injected to the network to settle asset, tokenized asset, or you can use stablecoin, which to me, best use case is cross-border payment. It's quite efficient if you look deeply into stablecoin. So you got to look at CBDC and the architecture of the future of money, and then overlay with the assets on which is going to be used, the assets which are going to use this money, and then think about what Nandan talks about, the Finternet, because that's the network where the asset is tokenized, money is tokenized, and the settlement is real time. And to do all the 3, this is where a CBDC is required in a wholesale form to settle this asset between 2 different parties with different risk level. Remember, the money you take from your money you hold in one bank versus money you hold in other bank are not equal. While we train to believe singularity of money, they have different credit risk. But who protects the singularity money? It is the wholesale money of Reserve Bank of India. So I think you've got to replicate that system in the tokenized world to make it work. And the use cases can be anything from financial assets in the most efficient form, from bonds, equities, and there's some new innovation where you don't need collateral to create more credit.
Do you see any nation getting closer to, I'm putting on the spot here a little bit, but any nation that you're talking to, that you're seeing, where you're thinking, actually, you're leading the pack here?
I think the number of, I don't know if it's a good thing or bad thing, the number of experiments going in the space is more than the actual production. I mean, production ratio of experiment is less than 1%. So the production leap of faith has not happened in any country. I mean, there are some examples you can take, but there are some pilots, not at a scale we'd like to see. But I presume that within 2-3 years, major market G10 currencies will see a production-grade deployment of CBDC. We're almost there. We're almost there where we can make choices to issue those currencies. Having the right infrastructure is the key to that success. But you will see certain particular use case becoming production-grade, large-scale implementation. You can argue that today there are enough pilots to say that we are there. But I will be a little more cautious. There's a lot of work to be done.
Understood. I'm now going to pivot really, if I think about the complexity of data, the velocity of new and alternative forms of data, and from a fintech or financial services provider, the capability to ingest and use that volume of real-time data to make decisions within their organizations. The buzz now is around quantum computing. So when we think about the opportunities that exist in terms of that volume of information and how we could tailor that. If we think about the fraudsters that also might be thinking about quantum computing, but I guess more from a progressive standpoint, if I'm a fintech or sit in the FS world, how could I be ready for this new technology? What should I be thinking about, and how could I use that to drive value?
The quantum.
The quantum computing.
Well, I would say upfront, there's no quantum machine in that production grade today available. It's a 5-year, 10-year from now. Does it mean we don't care? Of course we care. Why do we care? Because it's already known that the current encryption is not good enough in the world of quantum. It is by design going to break. And we know that fraudsters and scamsters have harvested all our IDs. It will question the fundamental design of our financial system. Forget even the digital system. If your ID and encryption get compromised, I mean, there's nothing left. It's a one-way disaster. There's no recovery. So the bad actors are already harvested all our passwords, and all they need to find computing power to break it. So do you have to wait for a machine to be ready for that? Answer is no. Already the standards have been published last month in July, which will allow you to quantum proof your encryptions, what you have today. So quantum ready, quantum, or the different way to frame it. Make it quantum proof. So there are enough work for us to start in this space to make our encryption standards quantum proof. There are enough work on the space of finding use case, very narrow use case, where you can do experimental simulated quantum-based modeling. Now, there are large tech companies are providing cloud-based quantum computing facilities, but they're kind of expensive. Somebody told me $50,000 per minute or something, I don't know, I may be wrong. It's quite expensive. But you can do those experiments. But I think the work we have with, as a regulator, as the financial sector stakeholder, we can look at our existing systems, processes, and ensure they're ready for a quantum challenge whenever it comes. But I find this space exciting. As a market innovator, we will indulge in this space. It's expensive, but worth trying.
But potentially a few years away from really seeing this grabbing traction for the end consumer, for fintechs, for FS.
Yes, man, I was in the quantum lab in Zurich. I was telling you, they're moving information on a photon, a single photon. It's just crazy. And they're running this infrastructure in a sub-zero temperature environment. It's completely sanitized. It is just bizarre. You can't run those machines in a physical, normal environment. So there is a long way to go, but doesn't mean that we should not do anything about it.
Well, we'll look forward to hearing how that develops and certainly work alongside that next phase of innovation. After this question, we'll open up to the audience for any questions that we may have. But if I think about the role of fintechs in the future, so, operating within the regulatory guidelines, where do you see, the next chapter or the role of fintech within the financial services world? Where do you think they can have the most impact? And the pace and variety of technologies that sit within the fintech environment, how do we develop talent? How should we be thinking about talent within that environment to keep fueling that progression?
Well, I think and this is a message because I'm in India, I think somehow the fintech has a narrow definition in many countries. It's between payments and lending. I think we're going to get out of that and expand fintech to other asset class. I think there are some wealth advisory and all this are picking up, capital market infrastructure. So I think there's a need to expand the focus of fintech beyond payments, beyond lending. That's absolutely required. I think not enough has been done, especially large market. The second part of will be, I think we have a serious skills issue. I think we have underplayed, understated. If you look at the job market, there are a lot of people, but they're not skilled enough to be employed in this sector. And it's very important that we should disproportionately allocate capital resources to build the skills required. The number of tech jobs, tech demand coming up, and number of programmers, good programmers, have a huge mismatch. And there's a concentration risk on where the resources are getting created. So there are a whole sort of skills issue facing this thing. The third area would be, still I believe there has to be some sense of responsibility. And these things are matured. In the fintech ecosystem, the founders are matured, the entrepreneurs are matured, they're understanding regulation is important, we can't take it for granted. I think there's a need to step up the governance processes within the fintech sector to ensure that, I always try to simplify, when you look at a regulator, there are 6 things you should think. First one, regulators expect you to worry about know your customer. You cannot compromise, non-negotiable. Second non-negotiable is anti-money laundering and the terrorism financing. Third, consumer protection. Fourth, market integrity. Fifth, financial stability. Sixth, tech risk. If you take all the 6 tech stack, like a regulatory stack, and let the fintech think thoroughly through this process, a lot of regulatory governance processes should go away. Unfortunately, we don't think that way when you build this kind of solutioning. You've got to think in the 6 filter, everything you do on the space. Lastly, I think this is the elephant in the room, is the data piece. Ultimately, we need data, and data is where the innovation is coming. Data governance, data privacy, misuse of data, consumer, there's a whole set of issues to be dealt with. And that becomes more complex when it goes cross-border. So I would argue that we've got to focus on data side a bit. And maybe the last more point is that I think efforts should be made between regulators around the world to build some kind of cross-border interoperability in this space. There's a need for fintechs to cross-pollinate across the nation. And still today, large success of fintech is where the domestic market, where they started from. Very little success has happened beyond the borders. So we've got to fix that problem. I keep on saying last, still I want to end saying that there's a whole new opportunity fintechs have to take up, is the sustainability side. I call it green fintech. Because by 2050, banks have to reallocate all their assets and make it compatible to the expectation of the sustainable goals. So there's a green finance, sustainable finance. There are a lot of techs required to do green disclosures. Nothing has been done in this space. Good opportunity for fintech to get into that space.
Very interesting, and thank you for those comments. Cross-border is a huge demand today, and green finance clearly is already a fixed agenda point. So let me, with a couple of minutes, just open up to the audience to see if we've got any questions that we can try and answer for you.
This is just following on to the arc about quantum computing. So I think Singapore has published standards for quantum proof encryption. So the question I have is, when is this going to become mandatory? Because right now the risk is store now, decrypt later. Yep. And the quantum computers are already here right now. They're just going to be exposed.
Well, your question is when the standards will be published?
I'm saying, when will they be made mandatory?
Oh, okay. Right. From a regulatory standpoint in Singapore, we have issued some kind of guidelines to do an internal inventory assessment of where we are in the banks. So I think at this point, we've got to do an inventory assessment. B, we've got to figure out what is the right infrastructure we must have to test this new standard. So a lot of homework has to be done. I think it's too early to mandate because it's expensive still. We still don't know what are the coverage of where to focus on. It will still be an experimental stage. But the critical part to your question is a great question that banks have something to do. And to me, three things. Inventory, get ready with the necessary area where they're going to invest. And third, prepare a risk assessment. And once that is done, I think mandates will follow.
Thank you. And I think we've got time for another question.
Yeah, hi. This is Piyush. Great insight. As we are thinking forward to connect multiple DPI across the different countries, it comes with the risk of fraud, right? As we are evolving, the fraud is also evolving, right? Even today, when we talk about DPI, we see a lot of frauds happening around. And with the boundaries, it will be much more difficult. So what is our thought process about how to create an ecosystem to monitor and make sure that this DPI has secure and great customer experiences?
Very good question. In fact, when India, Singapore connected the Pay Now UPI, I think one of the difficult areas for us to sort out was the cross-border dispute resolution. So it's one thing, fraud is going to happen. I think you can't avoid it. It's going to happen. But once it happens, how do you deal with it? And dispute resolution becomes very complicated when it's cross-border because there are different rules, regulations, way to handle dispute. So that's one thing we have started in some sense. It's still a long way to go. Second thing I think there is some way to learn from the card company, the way they have managed dispute fraud when they're moving money on the credit card network. I think we can take some learning from card companies and try to put it on a P2P transfer infrastructure. Third, I think still the challenge in especially account-to-account transfer is that almost, I would say safely, 95% of the fraud scam has to do with the consumer behavior and consumers' own understanding of how they should deal with a possible fraud attack or a scam attack. So a huge space for us to build a consumer education literacy around when we deploy cross-border products. So if we can get these three things right, we can deal with it. But I don't think there'll be a point, there'll be zero. I was walking down the exhibition, it says zero fraud. It's a bit of a altruistic, there's nothing called zero fraud. Fraud will happen, but we've got to still have to deal with it and find, as you rightly said, consumer protection, dispute resolution, education, and of course, good technology.
And lastly, right, as you said, consumer behavior. As we are now connecting more and more DPIs, we also need to have a big data analytics where we understand how consumers are behaving across the borders, how we can increase the ties, and this can be, immense opportunity for learn about each other across the borders.
Yes, agree.
So can we create an open ecosystem to share the data and create a big data lake, which, companies and people can leverage to improve their supply chain, reduce the cost of production and storage and leakages and pilferages. All this can be helping us to create more sustainable economic environment.
I think somebody should record his last line and publish it. That's the solution.
There we go. I'm afraid we're over on time now. So, Mr. Mohanty, thank you so much. It's been a pleasure to spend time with you this afternoon. He'll be around, as will I, for the next 2 days, and we certainly look forward to seeing some of you over the next couple of days. So thank you very much.
Thank you very much.
Thank you. Thank you very much, Mr. Mohanty. Thank you for joining us, and thank you very much, Mr. David, for spearheading the session for us. And on that note, ladies and gentlemen, once again, I'd like to urge you all to connect with our speakers offline as well, in case of any further queries, any further questions. With that, let's march ahead as we take the insights from our previous session, and as we move ahead, our next session, in fact, is all about reimagining Aadhaar digital frontiers. We're about to get the session started in a jiffy in the next couple of minutes, but before we do that, once again, let me again inform you all to keep your thoughts coming using hashtag GFF. With that, let me also go ahead and thank our amazing partners as well. I'd like to thank our innovation partner, Visa, Fintech investor partner, Peak 15, Gold partners, Airtel Payments Bank, Nuclear Software, our silver partners, Bharat Pay, DMI Finance, Moneyview, and our bronze partners, EQL Fintech and SignDesk. We'd also like to thank our KYC partner, Diamond Partner, SignZ, Banking Innovation Partner, Citibank, Gold Partners, DIFC and Newgen Software, Silver Partners, Bureau ID, Temenos, Bhawan Cybertech, and Strategic Insights Partner, Fee Money, and Bronze Partners, Ardiswan and Money 2020. Now, while we thank our partners as well, let me again bring to your attention that our next session is all about reimagining Aadhaar, digital frontiers. In fact, we'll have our keynote speaker joining in, and after that, we have a quick launch as well for you. So I'm sure this is something you're all eagerly looking forward to. Meanwhile, once again, let me remind you all that during these 3 days, we will be having masterclasses, roundtables. So please do be sure you're taking a look at your app so that you can register for these masterclasses and you're at the right sessions that you intend to be at. So please don't forget to take a look at the app. If you have not downloaded yet, please go ahead and download the app as well. I'm going to quickly take a check in terms of how we're standing for the session. Are we good to begin? If so, we shall. Well, if not, we'll hold on for the next couple of minutes before we invite our keynote speaker. Well, all the topics that have been curated across all the different halls at the Convention Center, all of them focus on the underlying theme for this edition of the Global FinTech Fest, which is the blueprint for the next decade of finance, responsible AI, inclusive, resilient. Since yesterday, in fact, since the morning, we've also been hearing our speakers come together, deep dive into all these urgent and very pertinent topics, and I hope you all had some informative takeaways from each and every session. We also do hope that you managed to take some time off to connect with your peer members, with your fellow delegates. The app also has all the details in order to ensure that you can network with your fellow delegates and also get hands-on information with regard to every activity that's taking place at the Global FinTech Fest 2024. Meanwhile, towards the evening, that is this evening, we also have the Global FinTech Awards. Again, I'm going to reiterate the fact that I'm mighty excited about it as we get to celebrate the industry together. So I hope all of you will be joining us this evening to be part of the Global FinTech Awards. We'll commence the awards by evening around 7 p.m. or so. Of course, I'm going to come back and share the timings with you. But please do join us so that we together get to celebrate the industry that we truly are part of and the industry that's truly shaping the growth trajectory of India. With that, we're just going to be waiting for the next couple of minutes before we get our next session started. Ladies and gentlemen, please be seated. And I have the mighty delight of introducing my next keynote speaker, and I'll do so in the next couple of minutes. Thank you. Ladies and gentlemen, on that note, we're about to get our next session started. And with that, I'd also like to take a minute to also introduce our keynote speaker to our members of the audience. All right, ladies and gentlemen, in fact, as a pioneering government leader, she has driven transformative initiatives in governance, technology, and social impact. From heading Aadhaar's Technology Center to empowering tribal communities, her work embodies the spirit of innovation and nation building. Well, it's time for all of us to come together to hear her inspiring keynote and also learn from her remarkable journey. We have with us none other than Tanushree Debbarma, IAS officer. Ladies and gentlemen, please put your hands together to welcome on stage our keynote speaker, Tanushree Debbarma.
Till then. Are you sure this won't work till now? Am I audible? Yeah. Good afternoon, everyone. This is our third year in a row in GFF, and today's theme being inclusive AI. I think we'll be making a dent today yet again in terms of pushing the frontiers in Aadhaar. Imagine 10 plus years back, in a small room somewhere in Bangalore, a bunch of people, Indian technocrats, technologists, researchers, bunched up together, trying to brainstorm, build something which 10 years down the line forms the foundation of the digital public infrastructure we call today in India, which many countries are now trying to emulate. Ladies and gentlemen, this thought every time gives me goosebumps. And every day in UIDI Technology Center, right here in Bangalore, our team sitting somewhere over there, we feel the same goosebumps every time we are doing a release, every time we are trying to do a sprint cycle, every time we are trying to conceptualize a new innovation that will impact 1 billion in one go. This is the story of Aadhaar, and today, like every year, we are coming with a bunch of new innovation which will have impact on the fintech ecosystem. Starting. I'm having a technical glitch here. Can you help me with this, please? So we're talking about 140 crore Aadhaars generated till date. Every day, our authentication counts cross 7 crore on an average. We already have 11 or 12,000 crore total authentication counts that we are clicking, and the count just keeps jumping every day. And 1,900 crores total eKYC transactions that we have enabled. This, gentlemen and ladies, is the base of the fintech ecosystem in the country. You're all aware about the Jam Trinity that enabled financial inclusion at scale in India. And you're all aware about the DPI layer, which starts with the paperless, presence-less, cashless, and the consent layer that it has enabled. We have enabled the authentication ecosystem on multimodal channels. Currently, we are already crossing the face authentication that we have introduced. It's crossed over one of the modalities, that is the iris modality we do on a daily basis. And the scale at which the face authentication numbers are, we are very confident that the usage of it and then the acceptance of the same in the ecosystem is only going to grow. And today, dear friends, we'll be giving you a sneak peek at how your business and your startup or your company could leverage the same. So the digital innovations that we are talking about today, a sneak peek at the same is how we are talking about the 6 pillars that we are pushing. The face authentication we launched almost 3-4 years back now, but with time, as you have seen, the adoption has only grown. And we'll be talking about more about it in the subsequent slides. However, how Aadhaar has to scale is not, we feel that in addition to have the AUA and the KUA ecosystem partners, we also want to introduce something called the verifiable credentials. Some of you may already be aware, but this is the new way in which we will want to exchange credentials, whether it be your digital ID or many of your government certificates. What steps we are taking towards such interoperability, we'll be talking about next. Contactless biometrics. Our first step towards that was, of course, face authentication. But imagine not having to require a finger or an iris biometric device at your access to be able to digitally, biometrically authenticate yourself. This is the next step towards democratizing authentication, and we'll be talking about what we are doing next on it. Your Aadhaar status. Many of the government organizations and private organizations have been using Aadhaar under facilitation of ease of doing business or as per the law. However, there is this issue that once the authentication happens, do I need to also have the information what happens to that Aadhaar subsequently? What if it is suspended subsequently? What if the person is deceased subsequently? Does a bank, can they get this information subsequent to the consent layer that has already been executed, and he has a mechanism to check whether a particular eKYC which was done yesterday is invalid now because of the suspension of the Aadhaar. So we'll be talking next about that. And all this together, we will be supplying or putting on a platter for our ecosystem in our new version of the sandbox that Aadhaar will be launching. Talking about the digital innovation sandbox, Aadhaar has always been in tandem with the ecosystem partners, especially our fintech partners. We know that innovation doesn't happen in closed doors, it happens with collaboration. And if we do not have a place where we can talk to each other's products, nothing will go forward. We, therefore, have been building on our technology platform, which was available 3 years, 4 years back, in fact, 10 years back, I would say, when we allowed our AUAs and KUAs to come on board and test our authentication systems. If you had not tried our OTP or our eKYC APIs, there was a protected environment where you would be able to do that. But there are so many more products that UIDAI has brought in now. How would you be able to access them? So with the innovation sandbox, which we'll be launching today, you will be able to digitally onboard onto the sandbox, your organization, and you will be able to evaluate many of the new tech products. Some of them may not be in the market stage, but some of them will be. Either ways, we would like to put it out there early in its technology journey so that we can collaborate with the various partners and make the product even better as we go along. I do hope that this innovation sandbox will enable a lot of collaboration going forward. Login with Aadhaar. Imagine an authenticator which enables you to log in completely passwordless. We at Aadhaar are actually working towards a product which will enable you to log in just with your Aadhaar number, your OTP, and based on the risk of the transaction, maybe an additional biometric or two. For example, maybe your face, which you do completely privately on your phone, where your biometrics doesn't travel, and it is secured on your phone. Ladies and gentlemen, talking about login with Aadhaar, it will have ease of sign up and login. It'll have the trust of Aadhaar as the identity provider. It'll have an additional security layer of biometrics. So therefore, it'll be completely passwordless, and it'll enable a lot of onboarding of customers on the fly if adopted by such a partner. Aadhaar status notification. We briefly mentioned it earlier. Let's take an example of a pension scheme which allows a person to take an annual pension from the government. Aadhaar enables an integration with RGI where a death certificate being issued to a beneficiary can be pulled by Aadhaar to be able to put a deceased status on the Aadhaar of the deceased person. This automatic notification can only be enabled currently if the government scheme and the application pulls the eKYC, and thereafter the application comes to know that the beneficiary is no longer active, it's a deceased account. However, if there was a push notification that would go to such a benefit scheme like the pension, then the automation of a monthly pension would enable cost saving in crores, and that will be a game changer. A similar example would be a GSTN registration of a beneficiary. If the GSTN registration happens today, and subsequently for a fraudulent activity that Aadhaar gets deactivated, GSTN would come to know on the fly through a push notification from Aadhaar that this account, which was KYC'd yesterday, is no longer to be relied upon. And a lot of frauds can be mitigated immediately. We have already made regulatory changes to enable this in our authentication mechanism. And we are looking for partners who will sign MOUs with Aadhaar, which will enable to get this as an additional service. So of course, it will be a subscription module. Contactless biometrics. Face is a contactless biometrics. It was introduced at the time of COVID, where over a span of 2 months, we had an application out there which enabled, without putting your biometric on a touch device, you would be able to authenticate yourself to get a COVID vaccine. It's been a long time since then. Our product has now reached adoption of a very satisfactory nature. And it enables the universal authentication concept. It is on your device. It is safe and secure, privacy preserving, as well as allows multimodal authentication in a secure environment and a comfortable environment where you don't have to go to a point of presence. This will be a game changer, is what we feel. And with collaboration with IIT Bombay, we have a demo which we will be showing in one of our subsequent sessions. It's a closed-door session. I hope many of you who are interested in the adoption of the same would like to attend it. Aadhaar as a verifiable credential. Verify who you are, anywhere, anytime. We have seen somebody in the previous session talked about how fraud is impacting financial transactions, non-financial transactions for that matter, in a large way. What is it that we are doing in terms of the authenticity of the issuing of credential documents, be it your domicile certificate, be it your graduation certificate, be it your experience certificate issued by your previous employer? A lot of talk is going around, and a lot of implementation, in fact, on verifiable credential. And Aadhaar is catching on. And we have already formulated a committee at the highest level, which interdepartmentally, including the driving license or Ministry of Transport, NIC, which issues a lot of credential certificates, UIDAI, and several other partners have come together to make a common verifiable credential standard, which will push for adoption in various organizations and enable interoperability of issuance and verification of such credentials over time. The first draft has already been accepted, and we are hoping to bring it out officially very soon. This will empower residents to a large extent. It will mitigate fraud to a large extent. Aadhaar today enables scanned certificates to be submitted, which are verified subsequently. But the verification from source of truth is very difficult. The same thing applies to many banking services where we take documentation and ensure that those are correct or not. Issuance of verifiable credentials will ensure the digital sanctity of such documentation. Imagine now your Aadhaar credentials being issued as a verifiable credential, and which you can present on a wallet, which a verifier entity which understands the protocol of such exchange and such multiple verifying entities will be able to read that, confirm that has been issued from the source of truth, and enable the interoperability of such issuance and verifications at scale. And similar concept being done over various government certificates. I think banking will change by a large extent, and so will many other financial transaction and financial businesses. Face authentication. It's not something new, but what is more important is the adoption. We already have 54 organizations using Aadhaar face authentication. We have 81 organizations testing in our pre-production environment. We will call it the new sandbox. And 40 million authentications per month already. The enablement is, it becomes device independent, it becomes location independent, self-service, no need of being present at the point of acceptance. You can do it from your home. It enables us to break many barriers like the infrastructure barrier, geographical barriers, as well as has a higher auth success rate. Elderly we have seen, younger children we have seen, the way the finger changes and deteriorates, face is not as susceptible to the same. Post 15 years of age, studies show, that is UIDI studies where we do so many face authentications over time, the face is very stable and gives at least 5% higher success rate during authentication. It will increase the inclusivity motto that GFF this year stands for. And of course, the simplicity, privacy, and security of the same. Ladies and gentlemen, face authentication has become our motto to enable its scaling, its adoption, and towards that end, today we are taking this opportunity to launch a simple playbook which will enable our ecosystem partners to have an easy onboarding journey for being able to adopt face authentication in their ecosystem. To the extent that if you're already an AUA, it's as simple as doing an audit of your new application of face with UIDI, and you don't need any more paperwork. We already have notifications which enable you to adopt face authentication if you are enabled to do other modes of authentication. In addition, if you want to become an AUA, our authentication department is ensuring the easy onboarding, digital onboarding of AUAs so that the life cycle of this onboarding becomes very short. So at this juncture, I would like to take an opportunity to launch our unlocking face authentication playbook. I would also request our chairman, sir, to please come on stage and have a few words of introduction by our compare, please.
Well, ladies and gentlemen, first up, thank you very much, Tanushree. And I'd like to take just a minute to also have the honor of introducing the chairman of UIDAI, who will be officially launching the playbook. As we all know, Mr. Neelkant Mishra, who's the chief economist with Axis Bank as well. And he's also the head of global research and a whole-time director of Axis Capital, a highly respected expert and a media columnist on global and Indian macroeconomic trends. He's also a part-time member of the Indian Prime Minister's Economic Advisory Council, as well as the part-time chairman of the UIDAI. So ladies and gentlemen, first up, can we also have a round of applause to please help me welcome Mr. Neelkant Mishra. Thank you very much, sir, for joining us. And with that, over to you.
Thank you. I'm very proud to launching this playbook. As Tanushree explained, I think this is the way forward. As you will see in the next several quarters, we will be launching new products which rely on face authentication, which significantly reduce the amount of offline usage and the paper-based usage of Aadhaar. So this playbook will help anyone who wants to learn more about face authentication and practitioners who engage closely with the authentication ecosystem or operate in it. So this should be very, very useful to you. These could be public or private entities, startups that authenticate and identities of individuals across different sectors, such as banking, technology, and telecom, among others. The playbook also has important information for both business and management personnel, as well as the technology leads. So and you will see over the next several quarters, we will have a range of events. We call them Aadhaar Samvad. You're all invited. We will be launching sessions in Bangalore, in Bombay, in Delhi, where we open up as Aadhaar is part of an ecosystem, and you are very much part of it. So this is our first step towards that. So do please engage with the playbook and give us feedback as soon as you can. Thank you.
Our partners in promoting face authentication is Microsoft Consulting. At this opportune moment, I would request Mr. Mithul also to come on stage with the handbook, and we would use this opportunity to do a... I would also request the other team members to please join us on stage for the launch.
Thank you very much.
Thank you.
Thank you very much. Thank you very much, Tanushree, and thank you to the entire team. Ladies and gentlemen, in fact, the playbook is available for download as well. So I guess all of us will get to access the playbook as well after this incredible launch. And meanwhile, ladies and gentlemen, let me inform you that our next session is about to begin. Well, this is where we will also indulge in another important fireside chat. Every topic is pertinent, every topic is important, which is why we have aptly called it a fireside chat. But we're about to indulge in another very important conversation, which is all about shaping the future of digital payments for tomorrow's consumer. That's the next topic, that's the next theme that will be addressed here. And while we get up for the conversation, while we get up for all that and more, stay tuned, please be seated. We're about to get our next session started shortly. Well, meanwhile, we'll also have the stage set for our upcoming conversation. So while we do that, I'd like to also request all the ones who have just entered inside the hall, very quickly, please take your seats. All right, ladies and gentlemen, I guess we are all ears, all eyes, all set for our next conversation. And once again, let me just remind you all that the theme for our next conversation is all about shaping the future of digital payments for tomorrow's consumer. And that being said, I'd like to please invite both of our speakers on stage. First up, we have with us none other than Mr. Anirban Mukherjee, CEO PayU, who will be spearheading this entire session for us. He's the man responsible for the overall business operations as we talk about the behemoth PayU. First, thank you so much for joining us. Can we have a louder round of applause? Ladies and gentlemen, Mr. Anirban Mukherjee. And joining us this afternoon, we have with us none other than the man who's passionate about driving innovation that makes payments seamless, accessible, and secure. Please put your hands together for Mr. John Lambert, Chief Product Officer, MasterCard. Thank you so much for joining us. Well, I'm going to request you both to please take your seats before we have Mr. Anirban set the tone for the session. And with that, over to you, sir.
All right. Good afternoon, everyone. I'm Anirban. I lead PayU. John, a very warm welcome.
Thank you.
Thank you. It's great to have you here. It seems, remarkable, the transformation that digital payments has had in the last 10 years, all over the world, but especially in India. In India, we're already at 800 million transactions daily. And it seems like the default has shifted from cash being the primary mode to digital being the primary mode. And that is the topic we'll explore in detail today. Where are we and what it takes to accelerate the journey, but what are the challenges that we are going to solve together so that we can achieve, full adoption. But before that, Jan, word of introduction from you about yourself. The audience would love to know more.
Thanks, Anirban. And truly, truly delighted to be here. I am based in London, looking after products for MasterCard, and therefore I travel the world. I have to say that traveling in India and seeing payments day by day changing and modernizing is a thing of beauty. And there's a reason why MasterCard, we have the biggest hub for technology innovation in payments right here in India, in Pune, a huge building with lots of smart people that look what happens here and then allow us to take it elsewhere in the world, because that is, India has truly become the fintech capital of the world, and therefore really excited to be here. It's enough to feel the buzz in the room downstairs, to see the crowds here, to realize how much excitement there is.
Awesome, thank you. So I'll ask Jan a few questions, and then, we'll have a dialogue about that. It seemed unlikely just a few years ago, think of what it takes to achieve digital payments at scale. The sum of digital identity, connected devices, and smart authentication together. And yet here we are, where there's a lot of adoption here and elsewhere. Does digital seem like the default option? Where do you think we are in the digital journey?
Yeah, so look, it's very obvious that these elements, together with the pandemic, has really accelerated digital, frankly, on every part of our lives. Whether it's work, whether it's entertainment, whether it's social interaction, and obviously commerce and payments too. Just in this past few years, we have seen a huge shift. Today, across the world, 3 out of every 4 transactions in store are happening contactless on MasterCard. 3 out of every 4. That's a big difference compared to the past. If you look at countries like Australia, it's 98% are contactless, many of which with a device. If you look at overall e-commerce, is now a very large percentage on our total volume. And we think that digitization and the blurring of digital and physical is only going to continue. And as we develop solutions for that, actually, consumers continue to change. They continue to be hungry for new solutions, for ease of use, for security, for privacy. The technology continues to change. We just heard just before from Adar how they're looking at biometrics, and we'll talk a bit about that as well. Technology continues to change with Gen AI only just in its infancy. Commerce itself changing. A couple of years ago, there was no gig economy, there was no subscription economy, there was no marketplace economy. And fast forward, we'll continue to see these waves of change. And unfortunately, bad actors are just as excited as we are about all this change and are just as keen as us to take advantage of this. So we need to be very thoughtful about how we bring innovation so that we bring consumers along and that we keep the bad actors out.
Thank you. Let me ask you the follow-up question to that, which is, the march of any technology is when you get 100% adoption at as low a marginal cost as possible. What will continue to drive this digital revolution? You touched upon some of the points about security, but what else will continue to drive full adoption of digital and cement this total shift where cash is only used in exceptional cases and most of the economy is fully digital?
Well, look, I don't think it's necessarily our objective to eliminate cash. I think cash has its function, but what we want to make sure is that consumers have choice and they can do the things that they want with the tools that is right for the jobs, and above all, that is convenient and that is secure with peace of mind and with privacy. And I don't worry about, oh wow, what do I do for a job if there's 100% adoption? We're such a long way from the full set of solutions that we need to put in place. And here in India, India is obviously very far ahead of most of the world in this. But even here, you have a lot to do around financial inclusion, around eliminating fraud and security, fraud and bad actors, and continuing to bring better solutions. Overall, if you think about e-commerce, there is 12 times as much fraud on e-commerce as there is on physical commerce. That's just not acceptable. In this day and age, with the tools that we have, we need to fix that. 25% of all e-commerce transactions get abandoned because it's too difficult for consumers to do it. Not acceptable. If a consumer wants to buy something and a merchant wants to sell something, we need to enable that, and that needs to happen, right? So we have a long, long job to do. Delighted that there's 50,000 people downstairs working on that, and I think there'll be 50,000 people for a couple of years to come. So, and again, the world is a big place, right? What you're seeing here will be exported and will need to be applied in Argentina and in Malawi and in Canada and in Vietnam, right? So there's much to do.
That is, awesome. The two most important things I took away from that, and I agree with that. My own experience here in India says this trust in digital has to continue to go up. The bad actors are as excited as we are. That's a great way of framing the problem. I think there's a lot of fraud risk. There's a lot of social engineering. All of us know someone who's gotten defrauded. The ecosystem does a lot there. There's also ease of use, as you said, for the consumer. A third thing that I think very specific from an India perspective is enabling the small merchant to digitize. Right? Making more and more, making sure a small merchant, a gig, what we call a prosumer, anybody can sell online, and giving them all the tools that a very large merchant has is, I think, one of the things that the fintech ecosystem in India focuses a lot on. You'll see a lot of innovations around that. And with that, let's come back to the theme of security and risk management. I know you guys have done some fantastic work recently with your recent product launch. I would love for you to demo that to the, talk a little bit about that and then demo that for the room here.
Yeah, we're extremely excited. I'm a product guy, and so I kind of a bit of a geek, and so I want to demo something and show you what we're announcing today, actually, as a world first. Again, I mentioned bad actors, I mentioned fraud. That's not because I'm a gloomy guy, but it's because payments is a business of trust. It's not like we're sending pictures of cats to somebody else. We're sending money. It's about livelihoods, and it's about making a living, right? And so it's extremely important that we bring consumers along and do that with peace of mind. Many of consumers that frankly don't really know the nuts and bolts of how it all works, they don't have to know. They don't know, they don't understand how bad actors act, and they should not really need to know. And that's why we're thinking about our security solutions from the ground up. And the best example of that is obviously tokenization. I know it's a word that we use a lot, but tokenization was born now 10 years ago, at least for MasterCard, was born 10 years ago. And the thinking behind it is you have to assume that a bad guy will get their hands on your payment credentials. And so how do we make sure that if that happens, yeah, we can put firewalls and all that, but that will happen. And so how do we ensure that when that happens, that data, that credential is useless to the bad guy? And so we said, okay, well, let's just not give the raw data. Let's give a token, a proxy of that data. Let's put some clever cryptography around it. And so when the bad guy takes it, it's useless. Right? And we're well on the way. Actually, India is world champion on tokenization. We're at almost 100% of tokenization. In the world, by the way, overall penetration of tokenization in e-commerce is 26%. Right? So a long way to go, but we're well on the way. But that's just phase one. That's just tokenizing the credential. Now we need to authenticate. As you all know, in India, passwords or OTPs, one-time passwords, is everywhere. It's great. It's a way of authentication. But once again, the bad guys have found a way to do screen scraping or screen mirroring or social engineering to get people to give out the OTP. And so how can we do the same? How can we, from the ground up, rethink that and make sure that whatever the bad guy gets, it's useless to the bad guy? Right? That is the principle of what I consider the second wave of tokenization, which is tokenizing your biometric identity. And I'll go and demo that on what that means and how to do that, but you might find the demo a bit underwhelming because it's so simple. But that's the whole point. We want it to be simple, but we want it to be extremely secure. So if you'll excuse me, I need to go there and I'll do that. It's very cool. At least I find it cool. Just a sec. So, okay. So I have here my... Can we get the iPad on the screen? All right, there it is. So this is one of our partners, Big Basket. No doubt you all know that. And I'm going to do a small transaction. I'm going to do some cooking tonight. I love spicy food, but to kind of temper the spice, I'll buy some curd. So let me add some curd here to my basket. Here's my basket. I'm going to check out. I can speak in there. Okay. All right. I'll check out in my basket. Here's my curd. Check out. I will proceed to payment. So this is all the usual e-commerce flow of Big Basket. And here I'm at the point I'm making a payment with my ICICI credit card, which is also a partner for this solution together with Axis Bank. And when I click my card, by the way, is obviously tokenized, and I have that card in file with Big Basket. I place the order and pay, and what is happening now is that the device will verify, the service will verify whether I have registered my biometric on the device tied to that credential. Turns out I have. And so just at the right moment, it disappears. Can we get it back? This is where people tell me never bring live animals or do live demos on stage, and because things like that happen, and I ignored it. And
should I disconnect?
Whatever it takes. 2 minutes? Okay. Well, the point is, what we've done here is I've registered my biometric, my face ID, can also be a fingerprint, to this credential, my ICICI card. And whenever I want to pay, the service will detect, Jorn Lambert has registered its face ID to the credential, and I can biometrically check out without needing to have an OTP or any other ways of passwords. What then MasterCard does in this way is we're tokenizing that signal. We're not sharing with the outside world my biometric data. Oh, there we are. We're back on, I think, right? Okay. Okay, obviously that was now timed out. Let me see if I can do this again. I'm going to try again, okay? Bear with me just a moment. We'll get some more curd. This better be spicy food. I'll do fast so that my screen stays on. So here's where we were, all right? So I click on ICICI. Screen is still on, okay. I place my order. It will detect that my Face ID is linked to my device and my credential. Asks me to use the Face ID, which I do. Now I'm tall, so I have to bend a little bit. It's recognized me, and the transaction has been completed. This is not a fake demo. This is a real demo with a real pot of curd that is now going to be delivered to my colleague who has been eating curd a lot. But the point here is, and this finishes the demo. This back. But the point here is that instead of the whole steps with OTP, which on the one hand could sometimes not arrive because of poor connection, which could be compromised, which could be shared with somebody, this is now a tokenization of the authentication, the tokenization of my facial biometrics, works on any device that has a biometric method, be it the camera or a fingerprint, works on any browser because it's based on the W3C standards, is an international security standard called FIDO, and works obviously with EMV, which is the card standards. Right? So it's a standardized, worldwide available solution, but it's one that we have developed here in India, that we are first and foremost bringing to India as a pilot, and hopefully we'll be able to commercially launch shortly, and that we've now developed with the partners of PayU, with Razorpay, with JustPay, with Big Basket, ICICI, and Axis Bank. And so really, really proud of what the team has done here, and I can't wait to export it to other countries as well.
Awesome. Very well done. We are excited to partner with you on this. And as you saw in the previous presentation, there are other similar solutions coming along using similar things. For the ecosystem as a whole, moving to smarter authentication, as you saw with the RBI paper as well, on alternate factors of authentication, is just one of the next important pillars for digital commerce to become more secure. We've just seen too many things that have happened, and I think we have the response now across. So Jan, very well done, and really look forward to making this big at scale. All right, you said something very interesting, and I want to take you back to that. You talked about a tokenized future. I want you to share, what do you see with that? What might the future look like?
Yeah, so we have a profound conviction that in order to keep the trust in the system and to grow and to proliferate these solutions, I'd say there is one common theme, which is that we cannot share private data to third parties. That's the best way to secure this. As long as there is data in the clear, people will get at it and bad things happen. And so we've done that in the first wave with credentials, and we're very happy about it. That has saved billions of dollars to people, that has saved a lot of nuisance, and that has enabled commerce to thrive. We're now tokenizing the biometric identity. Again, we are convinced that has a very profound impact on people's livelihoods. The next phase, in our view, is tokenizing data. People right now have lots of data that is being used or misused by third parties, and people have lost control. You probably don't know anymore where your data is stored. We need to find a way to tokenize the data and to share your data in a private way and a consented way, so that the token economy on the data is equally secure as the way credentials are shared. And that's the third wave I consider. And the fourth wave is tokenizing assets. You already heard about money that's been tokenized, tokenized deposits or cryptocurrencies. A carbon credit can be tokenized. A title for a house can be tokenized. A gold that you have deposited in the vault of the bank can be tokenized and can then be leveraged or monetized. The tokenization of assets is, to me, the fourth wave. And so we'll see this gradual growing of what we call the token economy, that I think will unleash much more innovation, but also much more commerce opportunity and economic growth over time. And beneath that, lots of people, fintechs and other companies will innovate, will provide new types of commerce use cases, but always in a very secured, tokenized, and a responsible way. And that's the vision we have. We're 10 years in. We have another probably 10, 20 years to go, and so no rest for the weary. But I think the opportunity here is just fantastic, and once again, really proud to be here in Mumbai to showcase the second phase of this.
Awesome. Let's move to India. You're here, you're in Mumbai. You talked to me as well about just the energy. And Jon called India the Fintech capital of the world. You should remember that. It's high praise coming from a man who sees it all. Tell me, MasterCard and India, and how do you see the Indian market, and what does it mean for your strategy? But then also we have the fintech community here. Your advice to the fintech community on what next in innovations, what things to focus on to drive this digital payments revolution to the next level.
Yeah, honestly, I don't pretend to be able to give advice to this group here. I think in any case, I'm humbled, and I can probably take your advice in terms of what's next. I think that the great thing about a market like this one, whereby there is real technical prowess, and there's a hunger to advance, a hunger to innovate, a support from a forward-thinking regulator, is that things happen, people connect the dots, and the speed to market. Actually, there is no coincidence that we launched this here. The speed to market, to go from the initial spec to a live product, is phenomenal. You try to do that in Europe, you try to do that in the US, much, much, much harder, right? So I think continue doing what you are doing, I would say, and connect dots and have that ambition. I think then good things will happen. But even if in India we're seeing that technical prowess and that innovation, there is so much to do still. Right? This is a huge market. There is a massive opportunity around financial inclusion, allowing people access to electronic money, from there access to credit, from there climbing the social ladder and growing the economy. And I truly believe that electronic financial inclusion or financial access to payments and to electronic money is the first step to prosperity in any economy, and I think India has understood as well. We're obviously engaging on all of these fronts. We're working with many partners of you here in the room to achieve that financial inclusion, to provide access to credit, to enable agri-entrepreneurs in their endeavors, and very proud to do so. But also, again, I'm here to shamelessly steal and take what India has done best and try to expand it to other markets. And that's also something to be very proud of, and hopefully many of you can help us in that endeavor.
Yeah, great. From our own experience as a practitioner in this market, payments leading to credit is a very important step in that financial inclusion. Whether it is on the SMB side, and especially on the SMB side, you see the transaction data, and that then leads to small ticket lending, cash flow based lending, that then leads to larger ticket lending, and people come onto the mainstream. Same on the consumer side. It's the classic market for low and grow. You see the UPI transaction, you see card transactions, from that you start lending at the point of sale, and then the lending journey grows. And that is a very important part of the inclusion journey. So payments leading to broader financial inclusion is a very important step.
I would add one of the other things that's very true, but in practice, extremely hard. It's not just about wiring the boxes, right? It is about consumer education. If a lady in Mozambique who is a farmer or who has a road stall, we need to financially include her so that she can then have access to credit. That's a huge mental leap for that lady to make from where she is today in a cash economy to digital access, to financial access, to understanding things like KYC, understanding things like she has to be careful for bad actors. Again, I think India has done a great job here already, and so we need to learn from that as well. But it's so much to go still, right? I mean, even here, the vulnerabilities from people who frankly not very digitally literate is humongous, and that's again why things like a biometric identity is so important. You can't lose it. You can't lose your face. You can't give away your face. That is truly yours, and therefore tamper-proof. And so we really need to think very hard about the reality of the people you talk with. The people in the room here, all highly sophisticated, but that's not the target audience that we need to get to.
Very well said. And consumer education is a very important part. A lot of people in this room do a lot of work. Like a lot of the next wave of fintechs happening are also people who are doing it in digitally assisted mode, or called the phygital mode, and you help the customer with the first few transactions through this agent network, and then over time, they just do it all on their own. And from that, the inclusion path opens up. There's also a lot of microfinance work that happens that's really awesome in terms of, and very effective in terms of training people for that credit. There's also a lot of government support for things like SMB lending. Okay, I have two last questions. One is this balance of regulation across the world, right? There is customer protection and safety and soundness of the system, and yet at the same time promoting innovation. What is the balance? What do you see from different regulators across the world? And what is where do you see India in that space?
India is probably, together with Brazil, on the forefront of DPI regulation, looking to take take the country on a fairly deliberate direction towards digital and financial literacy and progress. But throughout the world, we're seeing a wave of regulators that are very interested in that progress, because as I mentioned earlier on, financial inclusion and credit inclusion is the first step on the ladder of economic progress, and everybody has obviously understood that. For a company like ours, which is international, we operate in 190 countries. That means 190 regulators that have all very strong opinions on things, that have all a very passionate perspective on the state of their economy. That's a little bit of hard work, because some want us to operate on soil, some want the data on soil, some want very specific needs. But at the same time, we're a guest in 190 countries. We don't have a birthright to operate in India or anywhere else. And so we need to adapt and understand what the regulator is after. Invariably, the regulator is looking at the interests of its citizens in terms of keeping them safe, keeping them secure, and keeping them on the path of prosperity. And so we're in very active debate with these regulators. Help them at times to compare notes from what happens in other countries, and we're learning a lot. We're learning a lot from how they think, how they approach things, and often, as it is here in India, they can be also the impetus of innovation. In many countries, regulators are viewed as slowing advances, so slowing innovation. I don't think that's the case here in India, and that's again why we're here and why we're developing many products here.
Thank you. I have one last question, and we have a minute on the counter. So, AI and the impact on payments, especially Gen AI. We have always been using fraud risk models for 20 plus years. That was machine learning, but this is different. How do you see Gen AI and payments?
Look, I think Gen AI will impact every aspect of our lives. It's a bit like digital today or mobile today. Every aspect of our lives. There's no question about that. But today, the way we apply it is on the one hand in productivity tools, like probably many of you, and on the other hand, exactly where you say, on detecting fraud patterns across the world. And I insist on the across the world, because what's very interesting is you can apply these models on a single country and see many things and get ahead of many things. But the bad actors are probably not here. They're probably in some kind of jurisdiction. Well, there's quite a few here as well, by the way. But they're all over the world. And so understanding, what do we see popping up in Egypt? And where is that traveling? and can we actually follow the money across the globe to a place where it ultimately lands is extremely important. For those of you who have time and want to visit the booth of MasterCard, we have what we call Eye in the Sky demo, which actually does exactly that. Applies the Gen AI on worldwide economic movement or financial movements, tries to detect the fraud patterns, and once we've detected, tries to follow the money so that we can actually go after them and send the law enforcement to the right places. Scale and big data is crucial, and the bigger your data, the better it gets.
Oh, absolutely. And India is the land of a lot of data. A lot of transactions, lots of people, so large economy, lots of data, lots of social data as well. That makes Gen AI actually more powerful. That's been our experience, that even video feeds are important in detecting things like, creditworthiness and fraud. Yeah. Sion, thank you very much. Look, on behalf of the whole ecosystem, we'll continue to partner with MasterCard. Look, India is, we are known for JAM, UPI, the mobile revolution, but also in cards, as you said, subscription, tokenization, now with the new smart authentication framework. India leads the world even in card payments. And we'll all together continue to work with MasterCard. Thank you very much. Thank you for coming here.
Well, thank you, and lovely speaking to you all. Much more to come.
Thank you. Thank you very much, Mr. Lambert, and thank you, Mr. Mukherjee. If I could request both of you to please come together for a quick photo op. What a pioneering session that turned out to be, as we managed to gather all the observations, sound observations with regard to the future of digital payments. And that being said, ladies and gentlemen, our next session is about to begin right away. So I'm going to request all of you to please be seated. We're about to move forward to our next trilogue, if I may put it that way. Thank you very much, sir. Thank you, sir. I'll have my team help. I'll have my team help for this.
No, I just need to unplug it, I think. That's it.
Thank you.
Thank you so much.
Well, after that extremely insightful session, ladies and gentlemen, we are now about to set the stage for a trialogue. And this is where we're about to deep dive into the future of bank tech. We're talking about building scalable and resilient fintech infrastructure. Once again, I'm going to request our members of the audience, the ones who have just entered inside the hall, please come forward, take your seats, and we're about to get our next session started right away. I'd like to remind our members of the audience that our next set of speakers are already inside the hall, which is why we're about to get the session started. As for those who are still standing, I'm going to request you very quickly, please move forward, take your seats. We'll take just about a minute to set the stage, and then we'll get the session started. We're about to deep dive into another important conversation coming your way. Meanwhile, our members of the audience in the aisle area, all the ones who have just entered inside the hall, you're right in time for our next session. It's time for our next trilogue. So I'm going to request you to take your seats. If I could request also our previous set of speakers to either take your seats or we could take the discussions offline. If I could please request you with that. We've been going back to back with our conversations, with the sessions over here, either in the form of a fireside chat or for that matter, a keynote presentation. And so far, we actually managed to be on time, despite the extensive schedule. I do hope all of you managed to gather relevant thoughts and relevant perspectives from across different halls and the different arenas wherein we managed to set Global FinTech Fest for all of you with some really, really interesting set of leaders and speakers coming together. And that being said, I'm going to wait for a quick thumbs up from my team. I think we're all set to get the session started. Are we? Yes, we are. I'm starting. I'll start. Here? All right. With that, without any further delay, let's actually get the trilogue started. If I could please invite on stage all our three speakers. We have with us Mr. Vikram Vaidyanathan, Managing Director, Z47, Mr. William Hockey, CEO and founder, Column, and Mr. Harshal Mathur, CEO and co-founder, Razorpay. Can we have a wealthy round of applause? We're talking about a FinTech Fest over here. Let's bring the energy back in the air, and let's welcome all our three speakers. Thank you so much for joining us. We're all set for the trilogue, and so are our speakers. So with that, over to you, gentlemen.
Hi, everyone. Super excited to have these two gentlemen on stage. Between the two of them, they've helped build the backbone of technology both in India as well as in the US. So I've been looking forward to this conversation for a while. So thanks for the time, guys. I'm going to dive right in with William. And his background is that he founded Plaid, and then he acquired a bank to now found Column. And so, William, just talk us through this journey where you were building sort of like an API platform from the outside. And then at some point in time, you said, you know what, I'm going to build this from the ground up. So talk us through the journey.
Yeah, totally. So I built a large non-bank financial technology company in the States called Plaid. And we were always looking outside in from a regulatory landscape. And there was a massive kind of groundswell of companies building innovation in kind of 2012 plus around FinTech in the US. But I started to realize kind of in 2020, 2021, that it was getting quite crowded. There was a huge amount of innovation, a huge amount of players in the space, but actually inside the regulatory landscape, actually being a regulated bank, there actually wasn't a lot of competition. The existing banks in the US had been there for a very, very long time, and they were very much focused on being a full service, kind of like Walmart of banks, in terms of actually starting when you were just in college to all the ways to doing your corporate debt underwriting. And I actually thought there was a market to actually be a platform bank, where what we do now at Column is we're a regulated bank, but we've actually built all of our own technology from the ground up. So physically racking our own hardware at the Federal Reserve to building our own core system, own APIs, everything to actually power non-banks, foreign banks, and anybody that actually wants to operate in payments and deposits and lending in the States. It's been an amazing journey because we've actually been able to start from scratch and actually build bank infrastructure and our core infrastructure with no technical overhang. And that's just enabled us to be way faster, way more nimble than anyone else.
So the context of this discussion is, in India, there's this explosion of transactions on the payment side, and that's just transformed our ecosystem over the last 5-6 years. But the core bank stack hasn't been touched in the last 25-30 years. And we keep thinking about, is it time to change the core? And we were talking, and you said, actually, we didn't change the core. We actually built a new core, and we're sort of operating them side by side. So talk through that choice.
Yeah, so I kind of started this journey by actually buying a national bank in the US, which had its own infrastructure, had its own core and stuff like that. But, one thing we decided to do was actually build from the ground up. And so all new customers, all new business, all new stuff would actually come through a core that we built ourselves. And we actually chose to actually not migrate all the existing stuff over. Because if you think about it from a technical perspective, it's actually quite easy to start from scratch. The hardest thing is dealing with a huge amount of technical debt and a huge amount of legacy infrastructure and trying to migrate that over. And so we actually found it most efficient just to kind of maintain that for the kind of heritage and legacy business. And then everything else, we just built from the ground up.
So Harshal, when you hear all of that, and in India, there are all these conversations, should we change the core, should we build around it, or should we just hollow out the core and build some parts of the core outside? How do you think about, today, is it possible to build this new core, or, do you keep innovating outside of it?
Yeah, I
I think in India we have gone a different route. I think what he's saying is right, that a lot of things in the core also need to change. What we have done is we have started segmenting it out, and we've gone top down, where we have started innovating on the fringes first, and then we're going slowly down. So to give an example of Razorpay, when we started the payment gateway, we worked with banks and acquirers and used mostly their tech. And then we built the product and tech layers on top of it, which the merchant integrates. So the API was ours and the integration was ours, but most of the processing was actually happening with the bank. Over time, we've gone deeper. We started like through various routes, we started controlling larger and larger portion of the tech, because as he's right, like a lot of innovation happens in the bottom rails, but you need to get there. So we started with the fringes. We went to the central rails, which is controlling the routing systems, controlling where the transaction is going, controlling the settlement part of it. And then like last year, we launched, for example, a UPI switch where we control, where we are owning the end infrastructure. So we built that switch, we deployed it in the bank, but when a transaction is originating on Razorpay side, it's hitting our own switch in the bank as well. So we're controlling largest part of that technology stream. And the more and more aspects of technology that you control, of course, there's a lot more leverage that gets built out, because then you can innovate on every aspect of that business. It's hard to innovate on just one thin layer, but at least for companies like ours, I think this was a good starting point, and then over time go down and segregate out. From an India perspective, I think we have taken that approach that, hey, how can we move a lot of these aspects which are not really core to banking, let's say, and move it out of banking. So like UPI is a great example of that allows the transaction processing and all of that to sit out, maybe in the bank itself, but in a separate infrastructure outside the bank, not in the core part of it, but it still hits the core banking systems. It's just the majority of the authentication and authorization legs sit out of it. The core fund transfer still goes back and hits the CBS. So I think that way we have said that, okay, like let the core be there and control that core transaction processing. And honestly, it's not very bad at that. Like, it's really good at handling high front flows, high volumes, high TPS, but a lot of things which are fairly new, which are hard to add to the core, like authentication, authorization. If you want to, like for example, now we are doing biometric authentication. If you go back and build it all on the core, then there's too much overhead there, and it's too complicated, and in general, it's not even worth it. So moving that part out allows things like UPI to be a lot more modular, where we can innovate on the sides, and unless it's needed, you don't need to touch the core. It makes the job easier for banks, for companies like us, for the infrastructure providers as well.
So in some way, in that hollowing out the core strategy, payments is sort of always first, and it's always easiest to sort of get payments out. William, you were saying that even at the next step, you chose liabilities and said, these are the two parts, and you said, I'm going to build a specialized bank which chooses some parts of the bank core versus trying to be good at everything. How did you come to that choice? How is that working out?
Yeah, I think one of the things that we've learned with technology over the past decade or two is the specialist win. Is technology is great about allowing you to go extremely deep and do one very detailed thing extremely, extremely well. But if you look at banking historically, they've kind of actually taken more of the Walmart approach, which is they kind of want to be everything to everybody. I think we kind of took the other approach, which is actually we want to do just a couple things really, really well, and then allow other specialists to actually build on top of us and do those things really well. And so, for our side, we started out from a payments and deposits, payments and liability side, which we are, I think, by far the best and most sophisticated payments and liabilities bank in the US. For lending, that's not our specialty. Like, we don't view ourselves as risk underwriters. There are other people for that. But we can focus on a couple things and build technology for that, I think, really, really well. And I think that is a relatively kind of novel approach in banking. Obviously, Razorpay and others, they've kind of taken that specialist and taken it outside the banking landscape. But especially in the US, the banking landscape is still kind of that full suite, full cycle, which I think will change.
So it's interesting, here in India, it's been payments, and after that, it's been a lot on the asset side, which is co-lending and underwriting and so on, and not as much liabilities. Herschel, do you think there's something different where it is, after payments, go after the asset side of the stack versus the liability side of the stack?
Yeah, I think a lot of these things are being built, but at least in India, it's all happening independently in some ways, right? Yeah, there are companies trying to build, like, let's say, a super app approach to combine these together, but that's more from a distribution delivery perspective, not really from a tech build-out perspective. So so you start with, let's say from our perspective, like you start with payments, and we started with that, and we scaled a lot on that. Then we said, okay, from a distribution perspective, we felt that our merchants need a lot more. Our businesses need a lot more. They need banking. They need to do dispersals. They need to pay salaries. They need to pay vendors. So then we built the payable stack, which works quite independently. But from a customer perspective, it's quite linked, because you collect money through payments. Then you want to pay your employees. You want to pay your vendors. You want to pay taxes. So we built that side where money comes via Razorpay, stays into a bank, and then use our technology or SaaS platform to disperse it out to different people. And then businesses also need loans, and a lot of people had a lot of credit demand. So we connected them to lenders, where if you need a loan based on the data and everything that you have on Razorpay, we connect you with lenders, and then lenders can come out, give out loans to you. So while from a packaging perspective, it might look as one single solution, these are all being built independently, and over time, at least for us as well, it has been true that we focus on one problem at a time. That, hey, let's go deep in payments. Now that we are doing this well, how can we help people do dispersals better? Now that we are doing this well, can we help them get access to credit as well? And each of these things themselves are still evolving and scaling up, but the packaging goes a long way in terms of getting customers to solve multiple problems in one single shop versus having to spread out across multiple different domains.
So a lot of the tech and the innovation that you guys sell is sort of invisible, right? Customers never see it. It's all incremental gains. How is that conversation within the bank? Like, how do you sell to the bank to say, hey, this is going to be incremental gain, but you guys know that it's going to move the needle a lot, and how do you get paid for it?
It was, at least for us, I think, and this is internally our vision as well, I think the best payment experience is completely invisible. Like the ideal state of payments would be that, hey, you don't have to think, you want to buy something, you decide to buy, and it happens as seamlessly as possible. So, and that's where payments is a bit different in the sense, like the metrics that we will track will be kind of inverse of what a consumer company would track. So they want to maximize the time spent on the app, we want to minimize the time spent on our system. So we want to minimize the time it takes for people to spend on us. But what we measure is outcome metrics. So for us, when we talk to a business as well, what we measure is how much more business are you able to do because of us? How much time is it taking? If the time is going down, typically there's a direct proportion to more business being conducted on the platform. And same goes in our conversation with banks that, hey, if the time taken for this transaction goes down, if the latency goes down, there is an outcome metric, either in terms of volume processed or volume moved or dispersals happening, that typically goes up. And as long as the outcome metrics are moving up, the bank or the merchant gets convinced that, hey, this makes sense and we need to do more of it. So sometimes it's a bit of education, but a lot of times the outcome metrics are strong enough that the businesses care about that more than all the fuzzy stuff around it.
William, from your Plaid days, how did this conversation work? And I want to build on, you guys were both an API play, but also a platform play. How did you decide sort of pricing on APIs, pricing on platform, and making choices strategically around those?
I think from a company perspective, you have to understand where are you going to make the large dollars. And sometimes if you're large enterprise software, you're going to make that initially by selling really large contracts. But for us, we actually knew that our business was very scale first, which is we had to get enough scale to actually start to increase prices over time. And so we actually gave the product away for actually relatively cheap for the first couple of years to get enough to make sure that every single fintech developer in the US was actually building on top of us. And after we had that kind of ubiquity, then we could actually focus on economics. It's a little bit different now at Column, where there's actually a little bit less scale benefits. There's less of a network that we're building, and the onboarding costs are quite a bit higher. And so then now I actually have to focus a little bit more like enterprise pricing, where I'm actually, the cost to do business is a lot higher. So they're a little bit different motion. I think the problem that some companies get in is they think they're this PLG motion. They think there's actually a lot of network benefits, and they don't actually focus enough on willingness to pay early on, and they have a hard time monetizing in kind of later turns. So I've kind of seen both. I think the PLG motion is the sexiest. It's the coolest. People like it because you're gonna work with hundreds of millions of people. But you have to make sure the economics actually work well over time.
So I want to double click for the founders in the room and operators who are selling to banks. You heard like 2 or 3 really interesting things. One is always have the conversation on how the pie is getting bigger, and then you're getting that slice of the pie. And then from William, he was thinking very strategically about if there is scale, then I'll still make money sort of per API. Whereas otherwise, I'm actually looking for scale in each account. and then each account I'm going to maximize it. And often in pitches that I hear from bank tech companies, they don't think about either of these things, right? They don't think about this, how size of pie is scaling, or about how do I think about whether I'm an API play or an enterprise software play. Switching gears to a subject that I'm sure you guys spent a lot of time on, which is how much of your focus and dollars are engineering versus compliance today, and how do you sort of manage sort of the accelerator and the brake, if you will?
Yes, so, pretty much the only things I have to get right is compliance and engineering. Everything else will kind of take care of itself, given our kind of narrow footprint as a bank. Compliance, I'd say it's probably about 45% of our spend, and engineering is about 45% of our spend. Because I think historically people thought, or fintechs had thought, hey, we're just going to move fast and break things, we're going to only focus on engineering. But actually what's happened as regulation has gotten a lot higher is compliance is actually a massive moat for you. A lot of people don't know how to do it well. Culturally, it's very challenging to integrate it well into your company. And if you can do that, though, it allows you to actually operate much faster in the outer years and actually have a massive moat that's actually harder for people to actually come in. So I think, coming from Plaid initially, when I started to build inside the regulated bank space, it was actually quite challenging. I didn't really have a ton of experience there, but now it's something I think we do quite well, and it's a massive, massive investment. I sometimes joke, in the U.S., we have the Republicans and Democrats, and the only two things that they can agree on is that they want more regulation and they hate China. And so if you can kind of play to those two macro trends, you can be pretty successful.
Sorry, William, I'm just going to double click on, I've been to your office. It's like this really nice, cool office right off Presidio. Yeah. And so how do you marry the cultures of this, fun engineering team and the compliance team? Yeah.
It is challenging, right? I'm not going to lie. But I think you just have to interview a ton. I'm sure Razorpay is probably the same way, that you end up probably hiring maybe 0.2, 0.5% of the applications you get in. And then for different areas like, compliance or something like that, it's actually going to be a little bit lower. There are absolutely amazing cultural fits out there. There are amazing people who kind of migrate from banks to startups. You do have to interview a lot, and you do kind of have to pull people's natural tendency out. I think one of the things that we've found with a lot of compliance people is, there's a little bit of a harder shell sometimes. You really have to say, hey, no, it's okay to be your real self inside of a startup. Because if you work at a bank, it's sometimes a little bit more political. And so they're a little bit less willing to kind of wear their heart on their sleeves. And you kind of have to show them that, no, that's actually okay. That's actually what we want. It's okay to lead in with emotion. I think that's always been sometimes the hardest transition.
Ashul, same question, compliance versus innovation, or compliance and innovation, and the cultures?
Yeah, I think for us, at least over the years, to what he said, we realized that the compliance, for a fintech company, of course, compliance is a non-negotiable. You have to start with that. All kind of innovation that you do, if it goes against compliance, is going to be thrown out of the door, at least for any large fintech like us. So compliance is kind of like the starting point. It's like the rules under which you need to operate. And like you operate in terms of some market rules, compliance are the rules set by regulators in terms of the boundaries under which you need to operate. So at least for us, if we talk about engineering and compliance, I think this is a dedicated compliance engineering team that we have, which specifically focus on building stuff on not just from complying from what is asked by us, but also how do we leverage compliance to innovate on top of it. So there are certain set of rules on, this is how you need to do KYC, this is how you need to do AML, and so on. If you can really put your engineering efforts behind it, you can find the most efficient ways to do some of those things. And to what he said, long term, some of those can start becoming a moat. So in a lot of things, we have seen compliance becoming a moat for us, that, hey, we are able to do the same rules that apply to everyone. We are able to meet those rules, but in a much more efficient manner, in a much more faster manner, or in a much more convenient manner to customers. And a lot of that happens because of the engineering team putting their efforts, okay, these are the rules we need to hit, but what is the best or the most efficient way to hit these rules? Over the years, we've also seen, even in things like AML, which are considered completely like a basic thing that a business has to do to control the risk. Even on those sides, long term, we have seen there's a significant advantage to doing this upfront, because without, especially in the payment business, any kind of fraud flows or illicit flows and so on, quickly build a lot of unnecessary load on the systems, and then over time when you notice them, then it causes a lot of backlash, not just from regulatory perspective, but from merchant perspective, consumer's perspective. And it's not in anyone's best interest because you see some of those wrong numbers going up and you get excited about it, but then those fall down suddenly and then you are in a pit because like you can't get those back, and then you're in a pit because your growth has fallen flat and it takes a lot of time to get back to that same level of growth. So I think catching a lot of these things early can be a good mode. A lot of largest fintech companies in the world have been killed by not doing these things right. Like there are thousands of examples in Europe and US. The companies who have died because they did everything well. They kept seeing the numbers go up, and when it came down, it came so rapidly crashing down, then it was hard to recover from it. So at least for a fintech company, and especially in payments, I think it's important to do these things early and think of these things as long-term mode, because if you want to be a large company, if you ever get to be a large company, doing this early is only going to help you. And now, at least in India, with the pace at which this session is taking up, it's not just unorganized risk. There are organized, there's organized initiatives around exploiting fraud, exploiting these gaps. So if you're not being careful upfront on taking care of these gaps, like it's not a matter of will you be attacked, it's a matter of when will you be attacked.
I think one of the things around compliance as well is it's in many ways similar to engineering, where there's very little early payback period. Engineering, we're very used to R&D taking 2, 3, 4 years until it actually like creates meaningful business value. And I think you have to treat kind of regulatory compliance and compliance in a pretty similar way, which is it's gonna seem just like this like bottomless expense that is a drag on the company for multiple years. But really you should view it as like this like longer term CapEx and R&D investment that it is gonna actually create a huge amount of business value in 4 or 5 years. And I feel like sometimes a lot of people just look at it as like, oh no, it's just this cost center. But really it's just, as you mentioned, it's a massive moat. It just has like a multi-year payback period.
That's very well said. I just realized this while talking to you guys, so I'm going to digress a little bit off this tech path. And both of you guys are super young guys who sort of built these large businesses and have had a pretty successful track record of getting financial services folks to quit what they're doing and get them to come build this this from the outside. What do you look for, and how have you sort of gotten these guys to come in, integrate with these teams, and so on?
Yeah, I think at least for us. Over the years, so first of all, at least from my personal perspective, right, when we started in financial services, I think there was a bit of naivety as well. We didn't know how complex it is. Probably I wouldn't go back to study financial services today, but it's good to be ignorant, and it seems like, hey, how hard could it be, right? So over time, you of course learn that and scale that, and I think we've hired over time a lot of people, because now we know that, hey, there's a lot of experience, there's a lot of value to experience in financial services. We have had a lot of people who have experience from that domain, who bring in and explain to a lot of young folks in our, let's say, engineering team on what this means, how is it value accretive, what does compliance mean, for example, and what do these rules mean, and why do they exist in place. And at least for us, the thing that I particularly look for when we hire from any large company, not just financial services, is people who are who want to do a lot and who are very excited about doing a lot, but are generally constrained by some of these large corporates because they want to move around and do a lot of things. So a basic rule of thumb is these are really good people and doing a lot of great jobs, but generally unhappy in their current roles. And those kind of people work best, because the primary reason they're unhappy in the current roles is because generally these in some of these systems they feel constrained, that hey, I want to try a lot of stuff, I want to move things around, but I'm constrained by what I can do. And when you bring such people into, let's say, a startup environment like ours, we see them move things around very, very rapidly and use all their experience to move these things around. I think so, and this is counterintuitive, but sometimes some of the most successful people in a typical corporate background might not work best in startup world, because the way they operate and what made them successful in those ecosystems doesn't directly translate to this. So for me, the rule is that somebody who's done well but is generally unhappy in those environments works well for our environments.
So since the time that I've met you, the one thing that's changed is you now always wear a jacket. Apart from that, how has the management style changed from managing your friends from IT Roorkee to actually managing all of these folks?
Yeah, I think it is quite different. I mean, when you're a 20 people, 30 people, 40 people startup, of course, there's a lot more excitement, a lot more energy, but a lot more informality in the way things operate. I think as the business is scaled up, of course, there's a lot more processes, a lot more structure. I think my personal viewpoint on how things need to be built and things need to be done has changed quite massively in the last 9 years of building Razorpay. And I think but I think the core tenets remain the same. So the 2 or 3 things that were core to us is this constant focus on speed. I think even today, like my biggest worry or paranoia is in general, like, are we moving fast enough? Are we doing things fast enough, right? Like if something like GFF is happening, are we launching enough number of things, right? So that is generally one paranoia that I had in day one that continues to be with me today. Similarly, I think at least as we have grown mature, my worry on, hey, are we becoming content with where we are? I think that is one thing that keeps worrying me a lot more, that, hey, are we getting too content, that, hey, we have scaled up a lot and it's all going well. So I think a lot of those things have changed, and those need to change, because as you scale up, the success becomes its own enemy, and that's one thing that I constantly feel paranoid about. I think the other thing that changed a lot is now with a deeper understanding of financial systems and deeper understanding of financial ecosystems, you understand a lot of value of the experience, especially on things like compliance, things like risk and things and similar things. Like a lot of these things are not natural. So you can hire the best talented people, but if they've never seen cyber risk, if they've never seen fraud, if they've never seen compliance closely, it's just not natural for people to just build it from ground. So your first principles approach can work for engineering, for product, even for sales to some extent, even marketing. But things like compliance, risk, these are things that you learn by falling. So if you've never seen a big fraud happen, if you've never seen a compliance issue happen, it's really hard for you to predict where those gaps could be. So in some of those areas, I think you've learned that, at least I've personally learned over the years, that the experience carries a lot of value, because people who have seen and closely seen some of the worst things that can happen when you don't do these things right are the people who will avoid you from making the same worst mistakes.
I think one of the hardest things to learn when you operate in financial services, it's pretty similar to what you said, is when do you think from first principles, and when do you say, oh, this has been done for the past 20 years this way, it must be right. And I think startup people, when we're young, we build technology, we're like, oh, everything is wrong, everything is broken, we have to start from first principles and reinvent the world. And that's right about 50% of the time. And I think sometimes people from banks or kind of more other companies are like, oh, well, I've seen it done this way, I'm going to copy. And the honest answer is it's kind of like half and half. And so like the hardest skill set is understanding, okay, when is right and when is wrong. Definitely not perfect, but I think for me, I think from a maturity perspective, being able to differentiate and say like, nah, this one, no, let's start from scratch. This one, all right, let's like trust the old white guy, you know? Like, how do you think about those two?
That's awesome, guys. I really enjoyed that insight into how you're building the companies as well as the orgs. I'm going to try and get us back on track on the future of bank tech now. When you think of the overall payment stack, it's created this enormous surface area, and that obviously leaves us vulnerable for attacks in India, and it's the same with the US and so on. For someone who's a layperson, how do you explain how much the surface area has increased and how sort of vulnerable we are first, Harshal? And then how do you, what steps are you taking in specific to make sure that you're actually secure against some of these attacks?
Yeah, so I mean, India is the largest payments market in the world, and from that perspective, as this payments ecosystem has grown, of course, cybercrime, frauds, and everything has grown with it. We are still one of the lowest incidents of frauds in the world, like if you look at it from percentage terms. But I want to call out that we shouldn't get blindsided by that, hey, the percentage is low, so it's all fine and good. The challenge in India is that while the fraud overall percentage might be low, it uniquely targets the bottom of the layer of India. So from your mind perspective, like the volume of this fraud is extremely low, average size of fraud might be like 50, 60, 100 rupees, and we might say, hey, it's really small. But when you look at this, uniquely targets a lower segment of the population, which is not as educated, not as digitally aware, and we look at from their perspective, that small value of fraud could be life-changing for a lot of those people. So it's really important to target that and constantly focus on solving that. So instead of looking at aggregate numbers, we have to look at the segment of population that's attacking and how relevant it is for them. Now, from that perspective, right, as I said, like initially it started with unorganized fraud where people were getting OTPs on phone and stuff like that. I think now there is enough awareness that most people don't give out OTPs, so it has gotten more sophisticated over time. We have things like FedEx scam and so on, where people are like doing full. I had a friend who was on a call with this FedEx scam guy recently. He was telling me that there was at least a 2-hour call before the person asked for money. So it was 2 to 3 hours. The guy spoke on the phone, then connected with a fake policeman who did a video call. Then he actually ended up asking money in some convoluted way. So they're getting more sophisticated. They understand that if you call a person and ask for money upfront, most people will turn it down now because people understand that, hey, don't give OTP on the phone. But now they take a lot more effort to get to that level of fraud. It's getting more sophisticated, which makes it harder and harder to prevent. And now with advent of AI, we'll see how this evolves further and become even more unsolvable. So from a payments perspective, I think some of these attacks are easy to block. The lowest hanging fruits most companies have done, and that's sorted. But now these are more sophisticated kind of frauds coming in where your customer really wants to insist that he wants to pay. Like our risk team has been in call with customer where we blocked the transaction because we knew it was fraudulent. The customer called up and said, I really want to pay. And we knew this is fraudulent, but the customer is insisting because he's worried that he's getting arrested or something and he needs to pay right now. Now, those are hardest to block because the customer is insistently wanting to pay. Of course, 2 days later, he'll come back and file a chargeback, which we'll have to manage. So getting to those level of fraud, I think the best way we have seen now is like data is the best way because the typical, again, first principles approach of blocking fraud are done. That doesn't work anymore. You need to use data. You need to use a lot of sophisticated tools. We use a lot of in-house and external tools, and the combination of that to find out the incidents of fraud. I think as the scale rises, it becomes also easier. For example, we have about 5 million merchants on the platform. So now when a customer does a fraud on one merchant of ours, we know we block and blacklist it across the platform. So when the same guy tries to attack another merchant of ours, we know we are able to prevent it. So the incidence rates goes down over time. There's a lot of heuristics built now because we are seeing how customers transact across all our merchants. Like how do they scroll through that page? How do they click? How do they pay? So our systems are able to detect that somebody who didn't look at the product page at all and just clicked pay as soon as they landed is most likely a fraudulent customer because most real customers will generally scan and see what they're buying before they buy. The speed to entering OTP, the speed at which they are completing the transaction, all of those things are important factors. And now with technology, we have enough data in each of these steps that we can figure out what is the average and what is an anomaly and use that as a way to detect and block it. Of course, now with AI, we are like AI is a boon as well as a bane. So AI also works on this side and helps it do it even one step ahead. So far what we are able to do is see one kind of fraud happening and then avoid it from recurring again. AI allows us to predict it, so prevent it from happening for the first time. Basically, use the heuristics to say, hey, this looks like it's going to be a fraudulent order, and without ever seeing this kind of fraud happen again, how can we block it early? So some of those, like as the fraudsters are getting sophisticated, some of those tools are getting sophisticated as well, and I think it's going to be, it's who is investing the most in solving it first. And I think as long as fintech companies are the ones taking the lead on solving that, you will be able to block it. Otherwise, the fraudsters are anyways investing in it.
William, any thoughts on how you used to think about, I guess, fraud as well as cybersecurity when you were at Plaid versus now that you're sort of a bank?
Well, it's just a little bit interesting. I think sometimes we mix up, like fraud and cybersecurity. And I think when outside the regulatory environment, you're mostly focused, what you talked about, is about losses. It's about, hey, how do I prevent bad actors from abusing my platform for something? Once you decide into the regulated market, there you actually mostly focus on InfoSec risk. And the interesting part about that is you're kind of optimizing for two things, right? Like when I initially started, I was like, oh, the only thing that I should care about is keeping bad actors out of my platform. But then you also have to think about, well, how do I actually communicate that in the way that the regulators understand and protect the risks that they care about? And you want to think it's a perfect world and it's both the same thing, but it's actually quite different. And I think early on, I kind of was always a little bit more first principling in InfoSec, and I was like, no, this is like the right engineering way to solve this problem. And then now I think I've gotten older, it's a little bit more like, okay, I'm going to do that, but I'm also going to do it in a way that the regulators can understand that it's kind of the way that they can go back, inform their colleagues, hey, they're above board, they're doing it in the right way. I think that's been a bit of a mind shift, which is you have two audiences, and you can't forget that the regulators is, in many ways, just as important as actually protecting yourself.
So let's talk about hopefully some fun stuff around what's happening in the AI world, especially within your companies. I'm sure you have engineers running around running inference models on all sorts of data that they have access to. So one, what's like a really fun project that came out in a hackathon which sort of blew you away, saying, hey, I didn't think our company could actually build something like that. And then second, where do you think it's sort of most applicable within your businesses?
I think from my side, I think this is probably like across most enterprises, that like coding advancements is by far the most applicable and highest ROI area for us at least, which is your average engineer is probably 30 to 40% more productive because of LLMs. I think that is probably still going to be the main actually ROI driver for most of tech and most businesses for the next little bit. I think the other area for us that has been actually quite helpful is like data structuring, which is, data normalization is like a very unsexy, but actually like quite hard problem. And whether you're doing it for fraud, whether you're doing it for inference or anything, like the structure, the structural consistency of that data is extremely important. And especially when you're pulling in a bunch of data from third parties or for consumers or something like that, that structuring and kind of like the static heuristics that we used to use was, it'll only maybe get to like 70, 75% accuracy. Now with LLMs, I think you can generally get it for like 90, 95% accuracy, which helps your baseline models a lot. I'm a huge bull for like AI from like a engineering, it's super fun, it's super sexy. I'm relatively bearish for it actually having a lot of like near-term implications for businesses outside of coding, outside of data, maybe a little bit of fraud. But that's just me.
Yeah, I think there are multiple areas where at least we are seeing AI come on in various ways. You're right, I think engineering efficiency is the most high ROI thing. But from a customer lens, I think one area that we've seen is as a B2B company, we need to give a lot of support and help to our merchants, especially when they want to integrate and so on. We recently showcased Ray, which is our AI bot, which allows people to write code like they put in their website, hey, I'm building a Python website, I want to integrate Razorpay, and it generates a code specifically customized to their ask. It can do it, and while we started with that we wanted them to generate code and use code generation, but it's a generative AI, it can answer all sorts of questions. So we were surprised when somebody asked him, hey, my settlement hasn't happened today, what can be the problem? And it had access to the backend, so it looked at that and said, hey, your settlement is not working today because it's a bank holiday. But then it suggested, and this was something we never programmed, it suggested that, hey, Razorpay has instant settlements, why don't you try that? And that was something that really blew me, that that's what differentiates our generative AI system, that it can do things that you're not predicted, it can do things that you're not planned out, and it started giving those suggestions that like my average support guy would probably also not give. The other side that we are seeing is on the fraud protection. So initially we used it for our fraud protection, but then we got so much confident on it over time that we started deploying it and making it available to our merchants. So now we offer merchants fraud protection using our AI engines, where we say that, hey, we will deploy this AI fraud protection for your systems. And if a fraud happens after this, we'll cover the cost of it. So that's something unique that we are able to go out and deliver, because the kind of fraud protection that an AI engine can do, even merchants themselves can't do manually. And those are some of the best examples that we are seeing going out in the field and solving it for a problem for merchants, especially on the international payment side, where fraud is extremely high because of non-2FA. The AI fraud protection system is able to block it and reduce anywhere between 5 to 10% fraudulent orders for an average merchant. The last thing that I see a lot of AI being used in our team is on the marketing side. The amount of effort it takes to generate collaterals, to generate a lot of stuff. For example, if you go to the razorpay.com homepage, most of the central images that you see, we have customized images of a lot of our merchants, like let's say a Fool co-founder and the Mama's co-founder and others. All of it is being real-time generated by AI. And that is possible in this day and age, otherwise it will take months to generate each one of those. So I think AI is again, such a base technology that it's going to get applied to almost every domain. I think we're still learning. We've probably scratched 1% or 2% use cases on what all it can touch.
How do you organize some of these experiments internally?
Yeah, so we have initially we started thinking of AI as like one specific stream, but I don't think that's the right way to look at it. So you can't look at AI as one separate stream like marketing or sales, that, hey, these are 5 people who will do AI in a company. It's like how earlier people wanted to digitize themselves and they created like a 5-people team, that these 5 people will do digital and rest things run themselves. AI is like that. You need to embed it into every team. So we created like what we call an AI council, where every team submits what all can AI do in their ecosystems, and then the council centrally owns like driving different initiatives across different teams. So the execution has to be owned by each team, and that's why we had to train almost entirety of a workforce on AI. So we didn't just train engineers, we did like AI training across of entirety of a workforce, that everyone from my marketer, from my sales guy, from my ops guy needs to know how to leverage AI today. Because otherwise you're not operating at your best, and if somebody else on the other side is operating using AI, they're going to beat you. It took a lot of time, but it is worth it.
That's a great way to think about it and also implement it. I think we're almost at time. So last couple of questions for you. Harshil, for you, now, you're a founder in the audience. Now you've seen all of these big incumbents, build tech, including you now. How would you approach the landscape in terms of choosing a problem to build in, and then figuring out how do I think about GTM and sort of scaling?
I think for me, it's fairly simple. Like it comes from the YC principle of make something people want. So I, on an average, meet at least one customer a week. And that is generally my testing ground of whatever strategy, planning, and decision we are taking in our office. Like that one conversation a week, at least with a customer of mine, is my testing ground of whatever are we thinking. Are we in the right track? Are we in the wrong track? It doesn't mean build everything that somebody asks you to build, but it's more like learning, okay, this is what we are thinking. Is this making sense for you? Is this not making sense for you? And just constantly testing that. I think that's generally the best answer. And the advantage for us as a B2B company is it's not very hard to meet our customers. They're generally limited in number. They're generally in limited cities. It's easy for me to pick up the phone or get into a meeting room and just speak to them directly. So I think that's generally my barometer for figuring out what next to build out.
Well, as the guest, we'll let you have the last word. You've come in, you've seen this, pretty big fintech ecosystem. What are things that you find sort of the most amazing, and what are risks that you see from the outside?
I mean, the reason I'm here is I think India is the most interesting financial market in the world, bar none. I mean, from an infrastructure perspective, it has the best financial infrastructure, has the best identity infrastructure. It's absolutely incredible. I mean, the US obviously has the deepest and most liquid capital markets. That is our major benefit. But as you think about from an identity and payments perspective, we are so far behind. I think the one thing, if I'm going to be honest, is I think the fact that most of the infrastructure is provided top down, it doesn't leave a lot of margin, I think, for the private sector. I think that the benefit that I do have in the States is my competitor is not the government. And anytime you try to compete with the government, it's a relatively challenging area. And I do think the thing about India, which will be interesting over time, is where is the money? Where is the area for actually private businesses to provide enough value to actually charge enough money to make hundreds of millions or billions of dollars of revenue? I think there's definitely some clear opportunities in India, but I think it's very different than what it looks like in the US. And I think that is like an interesting thing, which is like why you probably haven't seen a lot of cross-pollination between Indian financial services and US financial services, because the go-to-market and the actual margin perspective is fundamentally different. I'm relatively happy to be in the US, but I think probably people in India would say the same thing as well.
That seems like a great note to end on. Guys, thank you so much for the time. I really enjoyed the conversation, and hopefully the audience did as well. Thanks.
Thank you.
Thank you. Thank you once again. A riveting conversation for all of us. And on that note, ladies and gentlemen, we're now about to set the stage for another very pioneering product launch. I'm going to request all of you to please be seated. We're taking these interesting insights from our speakers, from our previous set of sessions, and we're going to march ahead towards our next segment of the program. Well, up next is a product launch. We all know when it comes to data democratization, how it's empowered a lot of people, be it within organizations or for that matter in the society. But this is where the product launch will focus on the future of data democracy, and this product launch is by Equal and One Money A. So I'm being told that we are set, our speakers are set. So on that note, without any delay, I'm about to first up, please invite on stage Mr. Keshav Reddy, founder, Equal. So let's have a huge round of applause, ladies and gentlemen. Let's all get excited about another very exciting product launch that's awaiting us. I'd like to please invite Mr. Keshav Reddy.
Good afternoon, everyone. Welcome to the Future of Data Democracy session. I'm Keshav Reddy, the founder of Equal, and joining me are my colleagues Rajiv Ranjan, co-founder of Equal, and Mr. Krishna Prasad, founder of One Money AA. We're thrilled to see such an amazing turnout at GFF. Before we dive in, we'd like to welcome our esteemed chief guests on stage. Mr. Anand Sinha, former Deputy Governor, Reserve Bank of India. Mr. Ajay Prakash Sawhney, former Secretary, Ministry of Electronics and IT, MeitY. And Mr. Jagdish Kapoor, former Deputy Governor, Reserve Bank of India, was unable to make it today. A round of applause, please. Today marks an exciting new chapter in our journey. Let me set a picture for you. On one side of the canvas, we have Equal, which is India's leading aggregator for KYC and identity data sharing. And on the other side, we have OneMoney, which is India's first and largest account aggregator, licensed by the Reserve Bank of India, and has over 46% market share in the account aggregator ecosystem. These two companies have been working tirelessly towards a vision that they discovered to be the same: data democracy for Indian citizens. I'm so excited and proud to announce that Equal and OneMoney are now strategic partners with a mission to build a robust foundation for data democracy, drive change, and foster empowerment for every Indian. With this, we'd like to show you a video with the humble blessings of our chief guests. This new partnership embodies a commitment to innovation and empowerment. Thank you, Mr. Anand Sinha, sir, and Ajay Sawhney, sir. With this, we'll move to the next segment of our product launch.
Good evening, good afternoon, everybody. We are happy to first invite our partners onto the stage, then we'll tell you what this is all about. We welcome the ONDC team led by Mr. Koshi. He's on his way along with Mr. Rushi Mehta. We have a partner, NinjaCart, led by the head of Fintech in NinjaCart, Mr. Pradeep, and the founding team member, Mr. Harish Swaminathan. Thank you very much for coming in. We also have Advarisk team Advarisk team led by Mr. Rahul. He should be on his way. And we thank our DMI Finance and ADEX, which is another agriculture data exchange. They're not here today. So finally, the most important part of this segment, the chief guests for this segment are Mr. Abdul Rahman Mohammed from Kasargod. He moved from Kerala to Vashi in 2004 and is an agri-trader. Thank you very much, Abdul Rahman ji. Please aaiye. And we have Sri Sachin Shivaji Patil, a farmer from Matori, which is near Nasik. Thank you very much, Sachin ji. Aayega. So these are the partners, friends. As we move into the segment further, greetings to all of you. Thank you for taking the trouble of fighting the traffic and weather to come over here. It's great to have all of you and it's inspiring. Friends, there is a time to read history, a time to teach history, and a time to create history. But I believe now the time is to teach history a lesson. In other words, itihas ko sabak sikhana hai aaj. Human history has been one of unbelievable progress, but it has evolved into a less happy and unequal place, where the might of the mind and muscle have been used more for individual gains and less for collective happiness. So with that belief and philosophy, we now propose that we come together to harness our talents and turn future history into a story of human dignity and unlimited happiness. So as part of this, our first humble attempt is to present to you all one app. One app is the first of its kind app that is an alchemy of enduring spirit of citizen empowerment that is embedded in DP Act 2023 and the might of the consent framework of what is called Mighty Fondly, Ministry of Electronics and Information Technology. They created the consent framework. We've taken the spirit of the act and the consent and created one app. We codified the spirit of data empowerment and democracy into one app. And that's what you look at it. Look at it now. The video, please. One app puts citizen at the center of the universe, and all of us together, technology partners, have decided to come together and serve the underserved seamlessly with honesty and humility. The video, please. So this is the app in which the farmer comes into the app. He selects the ingredients that he wants to buy, the crop pattern he has, and shares consent to share all the data with the with NinjaCart, who then analyze the data and present it to the lenders. Then the lenders will deliver the loan product to the farmer and the trader. And that is what is happening now. And it all happens seamlessly in a matter of less than a minute. And that is what you're seeing on the screen right now. So in this, we actually put together data, 4 sets of data. The bureau data, the crop pattern data, the land records data, and the financial data of the farmer and the agri-trader. All of this data is presented together, analyzed, and then the loan is delivered to the agriculture community. And we have actually done this already, and we have delivered. I request now Mr. Pradeep Ratnam to deliver the sanction letter to the farmer. It has been done on the fly. Thank you very much. The loan to the trader has been delivered, Mr. Abdul Rahman Mohammed ji, on the app. So he's got the loan on the digital media itself. Thank you very much. Now it's over to Rajiv.
Hi team, thanks KP for the awesome product launch. We'll move to the next product release team. The product release is called as Guardian, and for that I would like to invite on stage team guests and partners. Fintech team led by Head of Business Mr. Senthil. We also have Sehmati team led by the CEO Vijay Mahesh and Head of Strategy and Policy Salini. So we'll invite them on stage. So team, now we'll explain to you the problem which we are facing currently and how Guardian, the product built by KFin, solves it. So background, SEBI as a regulator, have some policies on insider trading. And the policies has given frameworks in which the real-time insider reporting has to be generated. So that's a problem statement. What KFin has done is that they've created a Guardian, a cutting-edge product, which allows for real-time insider reporting now by using a framework as a backbone. For understanding is account aggregator, RBI regulated entity. So just to understand the severity of the problem, currently the same problem is solved by SEBI regulated entities through a manual sharing of information. So if you're an employee in a SEBI regulated entity, you will have to manually share your financial information. The entity analyze the data manually. And as you can understand, there's a lot of manual steps involved in the entire thing. There's a lot of inefficiencies and a lot of chances of failures. And to solve the problem, KFin team built the product called Guardian. Guardian is built purely on tech innovation. It combines the power of A. A allows for real-time data sharing. And KFin team has built a rule engine. So using data and rule, they're able to now generate real-time report, and they're able to flag any invalid trading which happens. So this is a product innovation done by KFin team, and that's a product we are calling as Guardian. So with that, we will give a brief on how the product looks. Again, internal product used by internal employees. Can we move to the next slide? So team, in the entire product, there are two core users, employee of the company and compliance team. As an employee of the company, now with Guardian, you can list all the connected person. That means Rajiv can define, I can list my relatives, my wives, and I can also give their PAN details. So that's what I do as an employee of the company. With the power of A, next slide. Now what A enables, which is the core building block of this product. Now as a connected person, now all person can give consent. That means me, my family members can give consent saying that, hey, for this purpose, which is for the insider trading, you can collect my demat mutual fund accounts with this purpose, with this time, and with this frequency. So this is what A is enabling. With A now, the company can get all this data real time. And this is the power of A. Now, so this is what customer does. I define my employees, I define my employee list, and with A, I can give access of all this information to the parent entity. Next slide. So as a user, I have done my task. Now the compliance team task comes. So compliance, Guardian has built also a dashboard which has compliance team access. This dashboard, you can see that now you get a full view that how many employees have declared their the connected persons, how many persons have given consent, are there any traits which are flagged? That means, are there anything which is not in compliant to SEBI regulation? So compliance team get one view of everything which is happening within that company, and they can also take action on that, which is the power of this portal. Next slide. So just a quick screenshot that the compliance team can flag something saying that, hey, this trade is not in compliant. The employees can give justification, and the compliance team can take action also. They can approve the trade record and can reject the trade record. So if you summarize this thing in whole, can you go to the next slide? Thank you. So just to summarize, I think this manual problem, which earlier used to take like more than a week, can now be done in a day with the power of A through recurring consent-based data fetch, near real-time information, holistic data view. Now you can access all asset class of an employee with their consent, and this makes an entity fully compliant. So kudos to the KFin team to build this product, which will make the life of a business very simple and fully compliant. So with this, I would like to thank all the partners who have made this possible. KFin team to build the product, One Money and Money One team to power the main framework. Sundaram Mutual Fund is the first team who has onboarded and launched this product, and Sahmati team to guide us and help us understand the right fair users consent policy. So we'd like to thank all of them for helping in building this product. With this, I would like to hand over to KP for the closing notes. Thanks, everyone.
Thank you very much, Keshav, Rajiv, our board members, everybody. We are honored to join all of you in creating this new era of equality. Our sincere thank you to each one of you who have attended here. Yeah. So I want to, and all our wonderful partners, our fabulous team, our esteemed advisory and statutory boards, our chief guests, and most importantly, the GFF organizers, Dilip, Sandeep, Gaurav, and the entire GFF team for giving us this opportunity. Data democracy is already here. We urge everybody present here and not present here to participate vigorously in data democracy, make it more vibrant and equal than political democracy. And that's an opportunity we should not miss. Equal and One Money are honored to be contributing to the building of a new data-empowered Bharat. Thank you very much.
Thank you very much indeed to the entire team. And yes, a prolific display of how this product launch can ensure that the future of data democracy is more equal than ever before. That being said, ladies and gentlemen, I do have a very important announcement for all of you, and I would need your utmost attention. As we're all aware that the Day 3 of Global Fintech Fest, that's tomorrow, we do have the august presence of the Honorable Prime Minister, which is why I'd like to repeat this again. Please be advised that only delegates who receive a confirmation by 9 p.m. tonight, I repeat, only delegates that receive confirmation mail by 9 p.m. tonight will be granted access for the Prime Minister's session. And for those confirmed, please note the gates will be open tomorrow morning at 7:30 a.m. I repeat, 7:30 a.m. The gates will be open tomorrow morning for those confirmed, for those who receive the confirmation mailer. As for the rest of the delegates, please note that the access to exhibition as well as festivities and product launches and report launches will begin at 1:30 p.m. I hope all of you take a good note of this point. It's extremely crucial, extremely important. Please note, the confirmation mailer will reach you at 9 p.m. If it does, please do be sure you're here by 7:30 a.m. tomorrow. And as for the rest of the delegates, we'll open the exhibition and the product launches at 1:30 p.m. tomorrow. With that, that's an important announcement owing to the protocols as well. But please note that we are also gearing up for our next session, our next keynote as well. And in a short while, we'll have our speakers join in. This is where we will be focusing on leveraging India's digital public infrastructure, featuring two prolific speakers, two prolific leaders again. So please do stay tuned, stay seated. Thank you. Ladies and gentlemen, I have again a humble request to our guests who are seated on the first row. I'd like to request you to please shift to the next row. We have our next session featuring Shri G. Padmanabhan and Shri T. Ravi Shankar. And again, owing to protocol reasons, I'd like to request the delegates and the guests who are seated in the first row to please shift your space to the second row. And thank you so much. Thank you for obliging. Thank you very much again. In a short while, we're about to begin with our keynote session, our final keynote, in fact, for the evening. It's about to begin within the next few minutes. Once again, I'm going to request you to please stay seated as we harness on the lessons for global adoption, a very befitting theme that awaits us in the form of a keynote, but we'll begin that within the next few minutes. Thank you so much. Ladies and gentlemen, once again, we request all the members of the audience that have just entered inside the hall very quickly, please take your seats. We now come to our keynote on leveraging India's digital public infrastructure, lessons for global adoption. And let me tell you that this keynote session features two stalwarts, two leaders who have truly ensured that their transformational leadership style has truly paved the way for the growth trajectory of India. Ladies and gentlemen, first up, we have with us Shri G. Padmanabhan, former Executive Director, Reserve Bank of India, and ex-Chairman, Bank of India. And this evening, we have the august presence of none other than Shri T. Ravi Shankar, Deputy Governor, Reserve Bank of India. Can we please have a huge round of applause to welcome Shri T. Ravi Shankar to the Fintech Fest for this phenomenal edition. And we request Shri G. Padmanabhan, sir, to also spearhead this keynote at the Global Fintech Fest 2024.
Good evening. This year, it is my pleasure once again and privilege to introduce Deputy Governor Ravi Shankar. In a way, it's a challenge because last year I did the same thing, and I had also told you, which continues to be true this year too, that he holds charge of all the important departments which are relevant, at least from the perspective of this great event. Payment systems, technology, foreign exchange, you name it, and he is in charge. Now, I know Ravi for over last 3 decades, so let me get a little bit mischievous. So when I was thinking how to introduce him, I thought the easiest way of doing this is, here is Ravi Shankar. I introduced him last year. This year he is 1 year older. And maybe, or certainly, being the DG of a central bank, he is 5 years wiser. Because every year, the kind of challenges faced by the central bank is 5 years wiser. Now let me get more formal. Now, what I would like to highlight is that he is the quintessential central banker. I don't mean it in the conventional sense of being conservative. He is least so. DG Shankar has demonstrated that for a central bank in an emerging economy like India, it is equally important that the central bank recognizes when it is time to change, once the environment has changed, and discard the paradigms that are past their expiry date. And he does it, and it is important that you do it well in time before it's too late. Now, Ravi Shankar has been precisely practicing this. Now, for example, several key decisions taken by the RBI in the foreign exchange markets in the recent years were piloted by him. DG Shankar also played a very important role in upholding the RBI's policy sovereignty against considerable pressure from the prevailing mindset. He is a visionary central banker, and under his guidance, the payment system in this country has been undergoing a phenomenal transformation. Now, he has been highly supportive of India's growing fintech sector and has engaged with many of us in a free and frank manner. Mr. Ravi Shankar, it's a pleasure to introduce you once again, and we are all eager to listen to you. Over to you.
Good afternoon. Thank you for that introduction, Mr. Padmanabhan. I think last year I started off talking by saying that Mr. Padmanabhan was one of those very few officers in the Reserve Bank of India all of us in our generation looked up to and tried to emulate many of his qualities. Now that, as he says, I'm 1 year older, I think I realize now, even more than last time, that he is the sort of officer we need in the Reserve Bank of India. If Reserve Bank of India has to adjust with the times, has to be responsive to the needs of the economy and the market, and has a ear very close to the pulse of the market. Thank you very much. We were all coming back, Mr. Gopal Krishnan, I and us, we were just coming off a global fintech, our own version of the global fintech festival. We were having a global conference on, involving mainly central bankers from outside, but local fintech industry as well, in Bengaluru as part of our commemoration events of RBI's 90th year. This is RBI's 90th year. So I expected to see a lot of faces who were there. I see some of them here as well. So this entire week has been technology heavy as far as we in the Reserve Bank are concerned. Good to see that the energy level is still very much there. As we were walking up to this room, Mr. Gopal Krishnan told me that what appeals to me most about this place is the energy that people have. He's right. I was just reading somewhere recently that fintech entities are extremely optimistic people. That probably goes with the fact that they have this kind of an energy. In fact, I sometimes wonder, why do you have to call so many regulators to speak so often in a gathering like this? Regulators tend to be, more realistic than optimistic. But probably you also need a bit of a dose of realism to be able to carry on with your enthusiasm. Over to the formal talk. So it's good to be back in this 5th edition of the Global Fintech Festival. This festival ranks now among one of the top events in the world. And I don't mean in terms of footfalls or anything. I mean in terms of everything, in terms of participation, in terms of the range of technologies that are on display, in terms of in terms of the breadth of countries that participate here. In terms of all of that, it's an event that counts along with the best in the world. And it's increasing popularity over the years mirrors the growing importance of India's IT industry. When I was here last year, I shared my thoughts on the role a self-regulatory organization, SRO, could play in the growth of the fintech sector by establishing codes, standards, voluntary compliance mechanisms, ensuring growth while minimizing potential risks and negative outcomes. You are all aware that yesterday RBI granted recognition to the first SRO in the fintech sector. Expectations are very high from industry participants, from consumers, from regulators. But I remain confident that the SROs will live up to these expectations and lead the way for a credible and sustainable fintech ecosystem. The SRO framework document released by RBI in May 2024 outlines the functions and responsibilities of an SRO related to standard setting and oversight, enforcement, and so on. What I will try and talk about today are some key issues which I think SROs could consider giving particular attention to. But before I do that, let me start off on something that is extremely positive, which is that I need to emphasize that fintechs, or another way of referring to them is technology innovators, are and will continue to transform the financial ecosystem. What we have witnessed so far, I believe, is but the tip of the iceberg. India's commitment to fintechs, to innovators in the financial sector, is very clear from what I might refer to as the India model of digitization. And what is the India model of digitization? You have heard about this. You have heard about bits and pieces of this, maybe not exactly in these words, which is simply this, which is that in India, we create the basic infrastructure, the digital public infrastructure, DPI, in the public sector, make access to this infrastructure open to the private sector, so that private sector can innovate, create products that customers need, and equally importantly, be able to take these products to the nooks and corners of this country. We all know why private sector is not ideally placed to create digital infrastructure as such. So it's quite understandable why the public sector would create it. But we also need to recognize that the public sector, not the regulator or the government or entities created at their initiative, are not as effective in the spread of technology, are not as effective in innovation as the private sector is. That recognition underpins the India model of digitization. While the digital public infrastructure will continue to be created, public goods will continue to be created in the public sector, private sector will continue to play a more and more important role in the area of innovation. So as far as we see, fintech industry in India is just in the early stages of its development. Last year, again I remember in this conference, I was referring to the number of UPI transactions and saying how good a progress it has made. At that point of time, if I remember right, daily transactions were roughly in the area of 340 million. Now they have gone up to more than 460 million. Payments are doing well. There are many new instruments that have come in. CBDCs are picking up, and I'm sure with the clear use cases that are going to be established by programmable tokens, programmable CBDCs, this segment of the market can become as liquid or as heavy as any other segment. So the possibility for growth remains for the fintech sector. Even if you go back to UPI, if you look at the 460 million transactions, it virtually works out to about 0.3 transactions per head per day. Is there scope for more? Very clearly. In fact, international experience gives us a scope, gives us a sense of that. If you look at, for example, M-Pesa, you would see that the transactions per head per day is upwards of 1.5. So the possibility of digital transactions in a vibrant economy like India going above that is very much there. We just have to move towards it. This is another indication that the scope for growth exists substantially. This is also borne out by a survey Reserve Bank had done in 2022, towards the end of 2022, which showed that only a little above 40% of the people at that point in time had ever used a digital transaction. In fact, just about 20, I think it was about 23% of people surveyed said that they used digital transactions regularly. Now, this is another indication that there is scope for growth in these transactions by another 75%. So while we have taken long strides in digitization, the possibility for the future remains very optimistic, and that is probably one of the reasons why there is so much of enthusiasm, there is so much of energy in this FinTech conference. And while this growth happens of the FinTech sector, we also realize that the public policy objective of inclusion is consistent with this. As the FinTech sector expands its footprints, as global payments and other digital transactions reach every corner of the country, the public objective of inclusion is also achieved. In that sense, the target, the objective of inclusion itself carries a business case for the FinTech sector. There are similar examples which shows that the possibility of growth for the sector exists. Now, how can we ensure that the sector moves? Sector progresses, sector grows, the FinTech sector grows in a manner that is responsible, that invokes trust of consumers, of regulators, of everyone, of the system, and ensures that it meets not only its own business targets, but also simultaneously the social objectives that go with it. It's a difficult task, because financial sector entities like banks, NBFCs, mutual funds, to a good extent, they derive trust, or they get the trust of users from the fact that they are licensed, they are regulated. Now, FinTech sector, for the large part, are not licensed by a regulator, not regulated. This makes it all the more challenging for them to demonstrate that they behave responsibly and invoke public trust. Another factor that gets trust is history. Compared to normal financial sector entities, fintechs have not yet created enough of a track record that enables an evaluation of how trustworthy an entity is. This is something that is built over time. This is something that requires that over a period of time, the entity or the industry continuously and consistently behaves in a manner that evokes trust. And in this, the SRO of the industry board or SRO or SROs will have to play a leading role. An SRO should work consciously and consistently to create conditions that are favorable to competition. There are a few things that an SRO needs to particularly focus on, and one of them is this, that it needs to work consistently to create conditions that are favorable to competition. Competition is essential to make markets effective and efficient. An important indicator of market integrity is price efficiency. And one of the two major assets of the fintech industry is cheaper cost. The other is faster delivery. Now, this cost efficiency should be driven by technology, not by an ability to withstand losses. New technology, understandably, has business strategies that are radically different from traditional businesses. But the industry has to ensure, and therefore the SRO has to drive the industry to ensure that such strategies do not keep out competition, which eventually stifles innovation. Another thing that should be high on the to-do list of SROs should be to avoid questionable practices. SROs can play a role, similarly, in removing inefficiency in existing financial markets through use of technology. One of the key issues being globally discussed now is about how to achieve the efficiency we have seen in domestic payment systems, how to achieve the same efficiency in cross-border systems. And it is fairly clear from the global discussions that are taking place that the solution has to involve eventually systems that go beyond the existing infrastructure that exists, which indicates that we have to have participants other than banks. We have to have technologies other than those that exist today. And we have to have processes that are different from the typical correspondent banking system that exists if we have to achieve these efficiencies. Many of these inefficiency exists because there is no right technology, and removing such efficiencies therefore falls on fintechs, and an SRO of fintechs should be able to guide the sector towards identifying such efficiencies and removing them. A third issue that SROs need to focus on is delivering value to consumers, that the sector delivers value to the consumers. The basic reasons fintechs have played the role of a positive disruptive force has always been this, that they deliver value to the customer. At the same time, many practices have emerged. All of you are aware of it. For example, dark patterns. That the fintech industry has to consciously move away from. And an SRO is best placed to identify such practices early and sensitize the industry. Many of these practices may not be very obvious. Some of these practices might even be justified as delivering value to customers. It is up to the SROs to be alert in identifying the good, positive practices from those that are avoidable and taking the industry away from such practices. Another issue that comes is pricing. Economists have studied the idea for quite some time. The value of anything, any good or any service, is tied to the conditions in which these goods and services are produced. Value shaped the prices of goods and services. But this thinking has gradually changed over the years. Very often, you can come across the practice of belief that the price paid in the market determines the value. This shift from value determining price to price determining value has led to a lot of consequences in economies around the world, not all of them beneficial from an economic welfare standpoint. I think it is for an SRO to urge the fintech sector not to lose sight of the fact that earning trust would necessarily involve treating the customers fairly. And treating the customers fairly includes not just fair pricing, but also pre-sales and post-sales interactions. Of particular importance is the need to provide products that meet genuine and socially productive needs of customers. Pre-sales communications, for example, advertising, needs to be truthful, needs to avoid misleading the consumer. The first line of defense to ensure this should be an SRO. Fintechs also need to be alert to social and macroeconomic interest and priorities and not subsume them to business interest. It's only an SRO that can inculcate such a culture. The mantra should be take advantage of the technology, do business honestly and with integrity, and ensure that the customer is not short-charged in the process. One major function that an SRO is intended to do is facilitate honest two-way communication between the regulators and the industry. Regulators would rely on the assessment of an SRO for effective feedback. We do that regularly in the financial sector. SROs in the fintech sector would basically have to take up that role for the fintech industry. Sometimes regulatory actions require adjustment of existing processes for fintechs, especially where the consideration driving such regulations are customer protection or risk containment. Now, this might understandably lead to some friction from the industry. As an example, a couple of years back, we issued these regulations on payment mandates, or subsequently, regulations on digital lending. Eventually, of course, these things settle down, the industry adjusts, but the process of this adjustment can be smoother, can be quicker, if the industry is sensitized that measures for improving the integrity of the system, measures for improving the protection of the customer, measures intended to reduce the risk in the system would sometimes involve adjustments, inconvenience, but as part of a responsible system being regulated, this is something that we need to do. And an SRO has to make sure that the industry absorbs such a culture. I know these things are not going to be easy. This is something that the industry, the sector, the SROs will learn as they go. Not the least because of the diversity of technologies, the diversity of participants that are involved, but also because of a few other reasons that an established regulated industry does not face. One is that as technology changes rapidly, as services evolve rapidly, the regulatory perimeter has to adjust rapidly. Someone said that regulation has to follow innovation, which is factually correct, but which essentially means that as regulation comes up with guardrails, with various measures to maintain the integrity of the system, the innovators have to adjust. A necessary feature of regulation following innovation is that innovators have to adjust their innovations to the requirements of the system, to the requirements of regulation. That makes it difficult for fintechs. Very often, fintechs might even have to imagine and expect, if they are coming up with a new use case, if they are coming up with a product that doesn't exist at this point in time, if they are coming up with a product that addresses gaps that are not currently addressed, it is possible that regulation will evolve in response to these innovations. A good fintech innovation system should be able to anticipate, prepare for, and build into the products and services that they are offering these kinds of expected regulations. Now, that is also not going to be easy. While these things make the job of the fintech industry somewhat more difficult, they can be simplified through proper communication that then SRO can establish among all the stakeholders in the ecosystem. And finally, while I said in the beginning that the fintech industry is still in its young days, It has a lot of growing up to do. I think the SRO has to start preparing the industry, the sector, to face the reality that as you mature, it has to show in the way you behave. So as the industry gains in experience, as the fintech industry gradually establishes itself alongside traditional financial firms, it has to gradually show the kind of maturity that traditional financial firms show. This again is a process that will evolve as the sector grows. We have made a beginning with an SRO. Maybe we will have more going forward in the sector. Coordination between them is just as important. But I'm sure between the regulator, the SROs, the fintechs, the customer organizations, between all of them, we can ensure that we create a technologically transformed financial sector that meets all the requirements of integrity and responsibility. I want to stop here and wish you very useful and nice deliberations for the remaining part of this festival, and hope that the interactions you have had over the course of the last 2 days has developed the kind of consensus, developed a kind of fellow feeling that will help in all of us putting our efforts to take this sector forward. Thank you so much.
Thank you very much. Thank you, Deputy Governor. I think his speech was quite exhaustive. Announcement of the first SRO, the showcase of DPI to the rest of the world. He flagged the possibilities ahead for the fintech sector, the challenges, how creating a trust was very important. Extensively elaborated on the role of the SRO. And just to flag the points, competition, fair pricing, fair practices, delivering value, improving the cross-border transaction effectiveness, and finally, how the SROs through two-way communication can help the fintechs to sort of anticipate the regulation, which is important for them to be agile enough to make the changes which are necessary. He has kindly consented to take a few questions, and we decided few is 3. So I will take 3 questions from the audience. Please put up your hand, the mic will come to you. Please identify yourself and ask the question. Any questions? Okay, that's good. You have. Who is that?
Yeah, you're
why don't
audible,
you come
but
to
have
the
a
front
mic.
and ask the question? You are not audible.
Ma'am, one second. We're just quickly getting you the mic. Just a second.
Yeah.
Yeah, I've said 3 questions. Let's see whether questions are coming. But quickly.
गुड इवनिंग सर, दिस इज एकता फ्रॉम जी बिजनेस. सर मेरा सवाल ये होगा कि हम एसआरओस के बारे में बात कर रहे हैं, हम एक फिनटेक फेस्टिवल में हैं और जिस तरह से फ्रॉड्स बढ़ रहे हैं, बहुत सी एप्स आ रही हैं फिनटेक के नाम पर, तो क्या एसआरओस एक आम कंज्यूमर को, एक कस्टमर को किसी तरह से बचा पाएगा, कोई सेंस ऑफ प्रोटेक्शन, कोई सेंस ऑफ सिक्योरिटी दे पाएगा?
जैसे जैसे डिजिटाइजेशन बढ़ेगा, ये तो एक्सपेक्टेड है कि थ्रेट सर्फेसेस बढ़ेंगे, साइबर अटैक्स बढ़ेंगे, फ्रॉड्स बढ़ेंगे। ये जिम्मेवारी हमारे सबके ऊपर आता है, रेगुलेटर का ऊपर आता है, एसआरओ का ऊपर आता है, फिनटेक कंपनीज का ऊपर आता है, सबका ऊपर ये जिम्मेवारी आता है कि उनको कैसे मिनिमाइज किया जाए। ये किसी एक एजेंसी की काम नहीं है, इसके लिए हम सब मिल के काम करना पड़ेगा कोऑर्डिनेट तरीके से। एसआरओ का अपना रोल है, वो उसको निभाना पड़ेगा, रेगुलेटर का अपना रोल है, सिमिलरली फिनटेक फर्म्स का अपना रोल है। किसी एक को सिर्फ एसआरओ को देखना है कि एसआरओ विल बी एबल टू प्रिवेंट फ्रॉड्स, वो अनरियलिस्टिक एक्सपेक्टेशन है। ये एक्सपेक्टेशन होना चाहिए कि एसआरओ अपना रोल इतना इफेक्टिवली प्ले करे कि अलॉन्ग विद द रेगुलेटर्स एंड द फिनटेक सेक्टर फ्रॉड्स या साइबर रिस्क्स जो पे सिस्टम्स में है अपना फिनटेक सेक्टर में वो कम हो जाए।
थैंक यू सर।
Okay, I think we have to stop with one more question. Kavya has come and threatened me. So one more question, please, if there is any.
Hello?
Yeah.
Can you hear me, sir?
Yes.
Yeah, this is Astha Chopra from ET Now. Sir, my question is, how can you maintain the seamlessness of fintechs collaborating with other platforms for such innovations and good growth in the economic system?
If I got your question right, you were asking how can they collaborate with existing technologies and existing firms?
Yeah, interoperability.
Yeah. You see, the primary requirements, I told in the beginning that the India model of digitization involves create infrastructure that is open and interoperable. So that becomes the responsibility, or that becomes the defining features of the digital public infrastructure we have. At the same time, fintechs operate in a space where there are already established entities, banks, mutual funds, insurance companies, all of them are there. I think fintechs are already capable of doing that, but going forward, they would also continue to identify use cases, find gaps, create products in coordination with the existing sector, existing players, and provide. I think the requirement of business would drive them to make such innovations. Regulators and SROs would probably play their role in ensuring that such innovations are facilitated and carried forward in a way that the entire system remains stable. Thank you.
Thank you so much, sir.
Thank you.
Thank you. Ladies and gentlemen, first up, can we have a round of applause to thank Shri G. Padmanabhan and Shri T. Ravishankar. Thank you very much, sir. Thank you once again. Padmanabhan, sir, I'm going to request you to please join in the audience as we gear up for another riveting launch. I request Ravishankar, sir, to please remain on stage. Ladies and gentlemen, as sir had also mentioned about the CBDC, in fact, right away, we are about to gear up for a very exciting sequence of launches. I'm going to request all of you to be seated to take forward the CBDC launch. I'd like to please invite on stage Shri Suvendupati, CGM Fintech Department. So if I could please invite you, sir, can we have a round of applause to invite on stage Shri Suvendupati.
Good evening, everyone, and it's glad to be back here. I know we are running against time, so I keep it brief and simple. As CBDC does, settlement is instantaneous. So this would be, we'll get over in a jiffy. So today we are going to have a launch of the user-level programmability feature of the central bank digital currency. This is the first time we are trying out here, and probably the first time across anywhere in the world. In December 2022, we had began our journey on the central bank digital currency pilot on the retail segment. And currently we have tested various models of programmability, and as part of which banks have rolled out programmability through which lending is happening by identifying the specified uses. Corporates are using also for the specific purposes, where the purpose-bound money is being transferred. But what we have now conceptualized is give the power to the user themselves to program their own money, how it can be used, where it can be used. So just imagine, let's say you want to, give your household help to buy medicines for a child in distress or who is sick, and you want her to pay, use that money only for buying medicines. Or you want to give a needy student a helping hand in providing him, buying some books or pay for his school fees only. Now it is possible that you can do that by programming your own money in your CBDC wallet and give that money so that the beneficiary uses that for a specific purpose. So currently now in the central bank digital currency, we have enabled 4 levels of programmability, 4 features that can be programmed. One at the merchant category, like say the pharmacy or a bookshop or travel purposes or groceries and things like that. You can program the expiry date, that by which date it can be used. After that it will lapse. You can also program your location, which geographical location that it can be used, and also the specific merchant addresses, so that it can be, if required, it can be used only at a specific merchant location. The trust of the central bank money combined with the advanced features will empower individuals to assign purpose tags to their own money that they are transferring. It will also empower beneficiaries to prove the end use, where they have used the money that they received, and making this product highly inclusive. So when assured of the end use, the individuals will derive greater comfort and will have better control over their own money. I am particularly very happy that this feature is being launched by our Deputy Governor, Shri Ravi Shankar sir, as this was his idea a few months back, which driven all of us who are partnered with us to produce this and make this happen on ground today. I think a big round of applause for sir. And now we'll have a very short video played on this. It's a 90-second approximately a video. Can you have the video, please?
RBI has started retail CBDC pilot in 2022. As part of programmability-related use cases, RBI has now decided to launch user-level programmability feature in digital rupee applications. User-level programmability allows users to add special features like acceptance location, purpose, merchants and expiration on the digital rupee token, which they can share with their friends, family, co-workers or with any individual in real time in seamless manner. User-level programmability for digital rupee lets users tailor and program the CBDC being sent to other users, from setting specific acceptance addresses and categories of consumption to allowing a certain location and duration of use. The programmed currency integrates seamlessly with the current payment systems. Programmable digital rupee, now enriched with user-level programmability, is a step towards financial efficiency, adaptability and inclusivity. Witness the next step in India's digital currency journey today.
Thank you. Now I would request our Deputy Governor kindly press the tab out there to launch this. I would request DG sir to kindly take his seat. The real proof of pudding lies in, seeing or feeling that you have actually got. And now we'll have a real transactions getting displayed on the screen. Can we have the real transactions displayed?
So here we are having the HDFC Digital Rupee app. We are going to the special purpose wallet. The wallet belongs to Mr. Anuj, and he wants to send programmable money to Yash. He selects the beneficiary. Anuj wants to send 200 rupees programmed for the purpose of spending at fuel, restaurants and vouchers. And the money can be used till the GFF period, that is till tomorrow, in the state of Maharashtra. So the transaction is successful. Anuj has sent 200 programmable CBDC to Yash. Now we would see on Yash side what he has received. Yash already had 2 different tokens. Now he has received 200 worth of programmable CBDC. He scans a restaurant QR. He makes a transaction of 250 rupees. The 200 received is eligible to be transacted at that QR. It gets clubbed with the 50 rupees from the general CBDC wallet, and the transaction is successful. Thank you.
So thank you. As we come to the conclusion of this launch, it's my privilege to invite Executive Director Sri Vasudevan, Mr. Rajiv Anand, Deputy Managing Director of Axis Bank, Sri H.S. Aluwalia, Executive Director of Canara Bank, Sri Parag Rao, Country Head Payments and Digital for HDFC Bank, Mr. Anish Madhavan, Head of Payments, ICICI Bank, and Sri Dilip Asbe, CEO of NPCI, to join us on stage for a group photo. Thank you, banks, for coming forward and partnering with us on this journey.
Thank you very much. And once again, I request Ravi Shankar ji to please remain on stage, because now we move on to the UPI ATM, another launch that we are eagerly looking forward to. And for this, if I could please invite on stage Sri Ajay Kumar Chaudhary, Non-Executive Chairman, NPCI. And first up, sir, I request you to share a few words before we deep dive into the launch. Over to you, sir.
Very warm welcome, good evening, and namaskar to each one of you. We are privileged to have with us our Deputy Governor, Reserve Bank of India, T. Ravi Shankar. And on behalf of NPCI, we thank you, sir, for your continued encouragement, support, and guidance. Your inspiration laid the foundation for the efficient, robust, and secure digital payment ecosystem, what we celebrate today. We are also grateful for the presence of Executive Director Sri Vivek Deep and his team, as well as Executive Director Sri P. Vasudevan. It is also an honor to have with us today gathering of distinguished guests from RBI and government, leaders from bank, fintech, startups, press and media, innovators, professionals, and my colleagues from National Payment Corporation of India. It gives me immense pleasure to welcome all of you to be part of this event to witness the launch of UPI ATM, cash deposit, cash withdrawal and services, and unveiling the identity of BBPS, that is Bharat Bill Payment System, to Bharat Connect. If I can give you some brief features on the first item, that is the UPI ATM, cash deposit, cash withdrawal and services. This allows customers to deposit cash at ATMs using UPI without needing a physical card. These ATMs, which also handle withdrawals, make it easier for customers to deposit money into their own or others' bank account using their mobile number, virtual payment address, and bank account information. With the introduction of these features, customers will find the process more convenient and accessible. These ATMs can be positioned in future as an integral part of digital banking unit. Equipped with open architecture system, this provides bank the flexibility to host multiple apps without relying on OEMs, enabling them to create app-specific ATMs such as Open by Axis Bank ATM, iMobile ATM, PayJap ATM, or Yono ATM. Further, these ATMs will soon offer services beyond deposit and withdrawal and may allow customers to open account, apply for credit card, set up fixed deposits, and request safe deposit lockers. As regards BBPS, unveiling the identity of BBPS to Bharat Connect, it marks a significant evolution in our commitment to enhancing the digital payment ecosystem in India. Bharat Connect represents a broader vision of inclusivity and innovation and to become a comprehensive platform for a wide range of financial services. The new identity underscores our dedication for making financial services more accessible, efficient, and user-friendly for every Indian, whether in urban or rural area. The essence of Bharat Connect lied in its ability to bridge the gap between the tech and people, ensuring that the benefit of digitalization reach every corner of the nation. Bharat Connect is not just a new identity, it is an embodiment of our ongoing effort to transform the financial services landscape in India, ensuring that even Indian, regardless of their socio-economic status, could participate fully in this digital economy. With these words, I once again thank the support of Honorable Deputy Governor, Sri Ravi Shankar, and both the EDs. Thank you all once again for being part of this important occasion for NPCI Group and the entire ecosystem. Thank you.
Thank you very much, sir. With that, we will now get up for the launch, for which let's have the iPad is right up on the stage, sir. I'd like to please request Sri T. Ravi Shankar ji to please initiate the launch by clicking the start button on the iPad. And here we go in 3, 2, 1. All right, so as we get up, we have with us Mr. Abhay Parekh from NPCI to take us through the UPI ATM journey. So over to you.
Yeah, thank you. Good evening, sirs. So we'll have a demonstration, which is at the ATMs, which are at the pavilion, live demonstration from there. So can we have live demonstration from the pavilion? Yeah, you can play the video first, and then, sir, we had a video of this.
Say hello to the future of banking with UPI ATM. Your all-in-one solution for cash deposits, withdrawals, and services. No need for a card, no more hassle. Just use the UPI app on your phone, scan the QR code displayed on the UPI ATM to deposit or withdraw cash effortlessly. You can deposit cash in your own account or any other bank account with ease, just by selecting beneficiary UPI number or entering UPI ID or account IFSC on your UPI app. And not only this, banks can offer multiple services, positioning it as Digital Banking Unit, DBU. Need to open a bank account? Do it right here. Secure and convenient. Looking for quick financial solutions? Get a pre-approved loan? Apply for a RuPay credit card or open a fixed deposit right at the ATM. UPI ATM offers a wide range of services all in one place. Upgrade your banking experience with UPI ATM, where convenience meets innovation.
Thank you. Thank you very much. I think now we'll go to the live demonstrations. So we have a service on account opening. It is at the pavilion, and there is a pre-filled. We have pre-filled some screens so that to save time. Yeah, please. Yeah. So these are the pre-filled screens at the ATM, where the details of the account opening person has been the customer has been filled, and now we will do a video KYC at the ATM. So now the video KYC journey will start. After the nomination details. Yeah, so personal details are filled and the video KYC journey will start now. Yeah, can we have video KYC being done at this pavilion which can be live telecast? Yeah, so there is a screen over here, sir. There is a live, the person is there on the right hand side, yeah, the bottom screen. So the person is at the Axis Bank ATM doing the video KYC right now. So some personal details are checked by the agent on the customer, and then the video KYC steps gets completed. Yeah. You can move ahead by clicking that. Trupti, you can move ahead by clicking that. Yeah. Now we can, so after that the video KYC gets completed, and then there is a process of issuing the account number, etc. Now let us move to the cash deposit. We can do a cash deposit transaction at the Union Bank ATM. Yeah, Drupti, please. So this is a live transaction happening at the Union Bank ATM. Yeah, the cash deposit screen is clicked. The QR shall be generated now. The QR is generated. Now she is scanning the QR code with the Beam app, selecting a beneficiary from her contact. Yeah, so the beneficiary is selected using an Edge Bank of Baroda account at Union Bank ATM. She has selected it, and the beneficiary has account at HDFC Bank where the credit will go. So the transaction she has authenticated, she has seen the beneficiary name on the screen, she has okayed it by entering the PIN, authenticating it. Now the cash slot will open once the verification is done. This is happening right now at Pavilion 1 at NPCI booth, and the cash is deposited, the confirmation of the denomination is done. Now machine is processing the cash to check the validity of the bills. Yeah, so once the bills are validated, it will display. Now it has displayed that the 1200 rupees has been successfully deposited to the beneficiary. The name is there. If they want a mobile receipt, the number can be entered and the mobile receipt can be done. So we have multiple other banks: Canara Bank, Indian Bank, Indian Overseas Bank, Hitachi, Manisport, PNB Bank machines at the pavilion. You can experience it now at down. Thank you very much. Thank you, sirs.
Thank you very much, Abhay. On that note, really quick, we will now get up for a quick group photograph. So first up, I'd like to please invite on stage the banks and the white label ATM operators who have enabled UPI cash deposit as acquirers. I'd like to quickly please invite on stage. First up, Mr. Dilip Asbe of NPCI. Dilip sir, let's have you on stage. Let me also please invite Shri Rajiv Anand from Axis Bank, Shri Munish Sharda from Axis Bank, Shri Sanjay Mudliar of Bank of Baroda. May I please invite you all to please come on stage. I further invite Shri Hardeep Singh Aluwalia from Canara Bank. May I further invite Shri Sumil Vikamse from Hitachi Payment Services, Shri Deepak Shada from Indian Bank, Shri Joydeep Dutt Roy from Indian Overseas Bank, Shri Kalyan Kumar, Punjab National Bank, and Shri Nitesh Ranjan, Union Bank of India. This is where we are inviting for the group photograph the banks and the white label ATM operators that have enabled UPI cash deposit as acquirers. So let's have a quick group photograph. Meanwhile, ladies and gentlemen, please be seated. We also have another exciting launch and a new announcement as well coming up, so stay tuned for that. Let's have the first round of a group photograph. And after this, for the next round of the group photograph, I'd like to now invite the banks that have enabled UPI cash deposit for their customers. So for the next round of group photograph, I'd like to also please invite on stage. Thank you very much. Well, up next, if I could please invite on stage for the group photograph, Shri Deepak Agarwal from AU Small Finance Bank, Shri Bhavesh Zaveri from HDFC Bank, Shri Parag Rao, HDFC Bank, Shri Tyagarajan Iyer from IDFC First Bank, Shri Chandrasekhar Sate from Janta Sahakari Bank, Shri Pavan Deshmukh from Saraswat Bank. May I also please invite Subbalakshmi Shirali from Sahakari Bank, and may I also please invite Anabjeet Banerjee from Ujjivan Small Finance Bank and Naveen Chalwadi from Yes Bank. Well, this is where we have invited the banks that have enabled UPI cash deposit for their customers. Thank you so much for joining in. I think one thing that I've learned since the launches yesterday is that collaboration and co-creation is the reason why a lot of this is absolutely possible, and we're getting to gear up and witness some fantastic launches over here at the GFF 2024. Well, let's have all of you come together for a group photograph. And that's right, let's have a round of cheer, ladies and gentlemen. Thank you very much. And on that note, we'd also like to thank Shri T. Ravishankarji for joining us this evening. Thank you very much, sir. Thank you so much. Ladies and gentlemen, we now quickly and swiftly move on to the next segment of the program, and this is where we are focusing on the unveiling of the new identity of Bharat Bill Pay. For this, once again, we will be having the presence of Shri Ajay Kumar Chaudhary, Non-Executive Chairman, NPCI, and I'd also like to please invite on stage Shri Vivek Deep Ji, ED, DPSS and DIT, to please come on stage. Shri Ajay Kumar Chaudhary and Shri Vivek Deep Ji, if I may please invite both of you to please come on stage, and can we please welcome them with a huge round of applause. We're talking about unveiling of the new identity of Bharat Bill Pay, ladies and gentlemen. So first up, if I could also request Ajay sir to please share a few words as we unveil the new identity of Bharat Bill Pay. Ajay sir, first up, we'll hear from you, few words. We'll directly move on. All right. So, well then, on that note, let me please invite Nupur Chaturvedi, CEO, NBBL, to please come on stage to take the segment forward. Over to you.
Mic check. Good evening all of you. I will make it short. Ever since the launch of Bharat Bill Payment System in 2017, our vision, our growth has been to move beyond bills. As of today, we already service invoices, challans, account receivables, and many other form factors. If our vision is changing, if our ambition is changing, why should we stick with the same name? In fact, we've moved beyond Bharat, we've moved beyond bills, and we've also moved beyond payments by launching NPS as a category of investments today. At this note, I would like to thank Shri Vivek Sir, Honorable ED of RBI, for being really encouraging in our growth to have this identity change. In fact, sir, I remember the first time you helped us in saying that, feel free to be with your ambition and change the brand if required. I would also like to thank Ajay sir for guiding us through the entire process of changing this identity. Thank you very much, sirs. With that, can I request for the iPad, yeah. Yes, yes, sir. Behind you is the new brand identity of Bharat Bill Payment System. However, I do need to tell you why we chose to call it Bharat Connect. So please bear with us, sir, if you can take the seat, and we would like to play a short video to show where this name comes from and how does it tie with our vision and our ambition. Can I have the video, please?
Bharat Bill Pay. You've probably seen us a lot while paying your bills like gas, water, electricity, broadband, mobile, and much more. We connected India through bill payments by creating a powerful network of hundreds of banks and fintechs, thousands of billers and businesses, millions of households, enabling billions of transactions. Now, we are taking these connections to the next level by making our network even more powerful. While you've been paying utilities, recharges, taxes, premiums, we now have a whole lot more to offer everyone. We are evolving with our network, empowering our connecting banks, fintechs, billers, businesses, payment partners, and households to create more powerful bonds over secure transactions. So, we decided to get a brand new identity that is aligned with a larger, bolder, and more global vision for a revolutionary value exchange transactions platform born in India. Presenting Bharat Connect, a representation of what people truly want in financial transactions. Safety, assurance, interoperability, ease of payments, timely collections. A powerful, revolutionary transactions platform where everyone will pay faster, banks and fintechs will transact faster, businesses will collect faster, so everyone will have security, speed, and simplicity of transactions. It's India's fastest, largest, and most powerful value exchange network. It's the bond that unites a billion dreams, connecting every corner of Bharat.
With our new identity, which is Bharat Connect, we promise to connect customers, individuals, non-individuals, businesses, banks, and fintechs, all in our ecosystem. That's our promise, that's our vision, and with that, here's our new name, Bharat Connect. Thank you very much, sir, for being with us in this launch.
Thank you. Thank you very much, Nupur. If I could request you to please join our dignitaries for a quick group photograph as well. If I could request all the three of you to come for a group photograph really quick before we move on to the next segment. And ladies and gentlemen, we managed to witness the launch of a very significant event with the unveiling of the new identity of Bharat Bill Pay. Bharat Connect it is. So on that note, a pioneering round of applause one more time, ladies and gentlemen, before we move on to the next segment of the evening. Thank you very much. Thank you, sir. Thank you, Ajay, sir. Thank you once again. And now we're about to move to our finale segment, but before that, a quick announcement for all of you. Ladies and gentlemen, the Global Fintech Awards will begin at 6:45 p.m. and I'm going to be cordially inviting all of you to participate, to be part of this grand evening. So it's going to be Global Fintech Awards as well as a beer session. We're going to get to unwind. Stay tuned, stay seated. It begins at 6:45 p.m. All right, so with that, let's now move on to the next session, and this is where I'd like to please invite on stage Shri Ashish Garg, Managing Director and Senior Partner, Boston Consulting Group, and Shaji KV, Chairman, NABARD. Ladies and gentlemen, I'm going to request you to please clear the aisle area. We have one more important and a pertinent segment here. I'm going to request you all to please be seated. No movement, please. I'd like to please invite Mr. Ashish Garg and Shaji KV, Chairman, NABARD. Thank you so much for joining us. Let's have you both on the stage, please. Ladies and gentlemen, please note that the awards and beer session only begins after this session, and I would cordially invite you to join in. So first up, please be seated, because let me also quickly tell you about the fact that we'll indulge in a quick tete-a-tete, and post which we move on to another very interesting digitalizing agri-value chain financing, the hackathon felicitation. So with that, without any further delay, I'd like to hand over the stage to both of you. Ladies and gentlemen, let's close down on the movement. Let's have you all take your seats. We are not done as yet. I'm going to request you all to please be seated. We're not starting the awards without this session, so it's only happening after that. I'm going to request all of you to please be seated. Everyone in the aisle area, please clear it and take your seats. With that, over to you, sir.
Thank you. Mr. Shaji, I think first thing we should do is organize this kind of a fintech festival in a slightly more rural setting next year. Can I request you to kind of take a lead? The next global fintech festival should be actually in a rural area.
Yeah, so actually right now what we are doing in NABARD, I think there are enough fodder to have such a festival. May not be in Mumbai then, in that case, because we can be in some more, say, semi-urban, which is near to some city. We can think about that. But then, rest assured, there are a lot of initiatives which NABARD, along with the rural financial institutions, doing. So enough for what we have seen today of a lot of innovative things coming in. I think we can replicate that in a better way, or rather in a customized way in the rural areas that we can do.
So this is a fantastic news. I think the kind of innovation that we can have in rural India, and NABARD is ready to kind of spearhead that from a fintech and agri-tech perspective, will be spectacular. And why not? We have just, the statistics are really outstanding. The number of internet users we have in rural India, the number of the broadband users, mobile users, the way data is getting consumed, is actually just starting to suggest what is the art of possible. In fact, I believe on the Jan Dhan Yojana side, on the Jan Dhan Yojana side, we have now crossed about 2.5 lakh crore rupees of savings, which is also one of the most important ingredient coming into the banking sector. It's really a privilege to be here with Mr. Shaji, who is leading one of the most important institutions from agriculture and rural development, especially on the financing perspective, NABARD. Mr. Shaji, I know a little bit about yourself. For the audience, Mr. Shaji has served in multiple capacities. He was a commercial banker, drove some of the most ambitious projects. He has been the chairman of a regional rural bank, again drove some very, very outstanding projects there, and now at NABARD. Tell us a little bit about your background, about your growing up, about your experience, and how it is shaping up how you're thinking about NABARD.
So whatever is pertinent now here, I'll tell, because I started as a rural banker with a public sector bank, and after that I got a chance to head a regional rural bank. After that, of course, I moved to NABARD. What we have seen is that in the rural bank, I could see that whatever in a commercial bank, whatever we are doing, one size fit all products which are coming in, may not be suiting an area where the localized interventions are needed. So that is where I thought of having many of the other types of institutions coming in. Of course, NBFCs are doing a great job in innovating things, but then the cost for accessing them is higher for the people. So in that case, I think in the current role as chairman, I think we should do something collaboratively with all the institutions, including the largest of the commercial bank, with the smallest of the cooperative bank as well.
Excellent. And actually, just prior to our session, we heard some good innovations being announced, whether it was on the e-rupee side, or the UPI ATM, So maybe I will come to that on how we can use some of these innovations a bit later. But tell me, for an institution like NABARD, and at some point of time you were supervised by NABARD, now you are in a supervisory role. You have set a very ambitious vision for the sector. Tell us how NABARD is transforming, what is really changing at NABARD, how you are thinking about some large-scale programs.
Yeah, so as a supervisor, or rather being supervised in my previous capacity by NABARD, I could find that whatever NABARD is doing in guiding the rural financial institutions, as some of you may be aware, NABARD is the supervisor as per the Banking Regulation Act for the rural financial institutions. By RFI, we mean cooperatives and regional rural banks. But then from the NABARD side, as an ecosystem developer, I think NABARD needed to do a lot of things down that stream and to help handhold, not only facilitate, not only just direct, but also do along with these institutions. And that exactly is what we are trying to do. Right now, we are thinking about digitizing the cooperatives, which nobody thought about. The cooperatives, which are around 100,000 of them, which are the last mile entities with close to around 13 crore farmers over here. If you see the PM Kisan data, 14 crore original farmers were there. Originally, that was 14 crore when they weeded it out with ineligible persons like the taxpayers and such other things. It came down to 8 crores. But then the 13 crore farmers, who are majorly small and marginal farmers, they are dealing with primary agriculture credit societies. Of course, by hearing the name, the problem of governance will come, whether they are capable of handling those transactions for the farmers. That question will arise in most of you who have not gone really to the rural areas. But then we have a conviction that these entities can deliver, provided we are equipping them with adequate technology and with some governance, some reforms need to be there. So that exactly is what we are trying to do. Along with that, the other entity, which is a regional rural bank. So they are also in better way in terms of governance, but in technology, they need a lot of things to catch up. Whatever initiatives today we have launched, I think we need to customize those initiatives for the rural areas. For that, I think NABARD can play a role there.
Excellent. I think you have given me some very strong threads. Let me pick a few of them. But when we speak about technology, when we speak about making some of these entities really ready for the future, often we think a lot of investment is required to bring them up the technology curve. Technology changes, you need to really upgrade capabilities in all fronts. Some of them are really small. How can people participate, partner with them when they will always be lagging behind on the investment curve? How can NABARD help them scale up or help them go up the technology adoption route?
Yeah. So there are examples where when smaller entities are there, they have to come together. That's what the collectivization, which we have seen right from the NABARD's initiatives in the self-help group movement, and right now we are seeing in the farmer producer organization movement, where we wanted to collectivize these smaller entities and then bargain. They will be bargaining for themselves together, so that economies of scale is there. Taking a leaf out of these experiences, what we are trying to do is to have to collectivize these entities for investing in technology. And that is where, of course, the PAX computerization, that is primary agriculture computerization, which he told, that we are providing the technology collectively to all, and they will pay as they use, but then initially some subsidization also will be there. Apart from that, right now many of the cooperatives which are very small, they are in CBS, but they don't have any surround applications, whatever we are thinking about, including the cyber risk and such other things, and they are not in the proper payment systems. So in that case, a shared services entity as a rural back office for the cooperatives, and that is what we are thinking about. And we will be soon launching, and actually NABARD will spearhead along with the Government of India and also the cooperatives, and we will be having an entity which will be jointly held by these stakeholders. And then what we intend to do is that to provide the technology services through these entities, and also talk with the management, because ultimately the management of these entities will have to decide on what technology they should deploy in their institution. To that extent, what we need to talk to them, we need to educate them, we need to handhold them, and then we need to provide them the technology as well and customize it as per their need. So it's not one size fit all, which we have seen in many of the national level institutions, where they can just provide this technology or invest for the technology in one location and then roll out in the various parts of the country. Whereas in the case of rural, as you told, there need to be some location specific interventions. For that, technology also should suit that. So this back office will be equipped for that, and that is what the collectivization of these entities for providing technology and related services to the farmers, or rather the rural people. That's what we are intending to do, the collectivization there.
Well, I'm just amazed to hear the vision and the roadmap. I mean, the number of entities and their customers who can then be connected to the entire digital and the technology movement will be amazing. So actually, it's probably the best news we have heard today on the opportunities that will just open up if you were to really move on this path.
In fact, that will open up a lot of opportunities for the fintech players over here.
That's what I'm saying.
Actually, that will be the platform which we give, and you can come on and demonstrate whatever innovative solutions you have for the problems which rural people face. And reducing the cost is what we are looking at. If once you do that, I think we are open for partnership in those such activations.
What a lovely invitation. I mean, this is completely a new territory. Really, you should take up this offer. The audience should take up this offer with open hands and move forward. But tell me, I'm a little, while the ambition is grand, Chairman, do you think they can still compete with the commercial banks even with this kind of investment and backing by NABARD?
So you expect an answer to the no. But a person of my background, I have still conviction in the rural financial institutions. In fact, within NABARD, we used to discuss the regional rural banks with 30 crore deposits, deposit holders, and 3 crore only is taking loan. That is 1/10. The potential, the gap to cover the credit is huge. That is one thing. As I said earlier, 13 crore of the cooperative members. Some overlap here and there will be there, but mostly that overlap, maybe 30% overlap, if you account it for, I think the huge potential is there. And I feel that with processes which we will be, as in the supervisory capacity, we'll enforce these processes on them. But then they have to now come out with as technology solutions for bringing in efficiency. So they'll be found wanting. So whatever gaps will be there for them, that we'll try to bridge either we directly or through some enabling ecosystem which we intend to develop for them. With that, I feel that the priority sector lending, which is now the panacea for most of the people, see, largest bank itself is defaulting in priority sector lending obligations. I have a strong conviction that these large banks should not be forced to go to the rural areas to lend. Their expertise and their strength should be used for the larger activities like infrastructure development and such other activities, and they should spend more energy there. So this area should be left to the rural financial institutions, provided these entities are able to meet the demand. The supply of services should be adequate enough to meet the demand. So we'll be creating such an ecosystem, and any player, including the rural financial institutions which I told, RRBs, cooperatives, and also an NBFC also can come in and use the plug-and-play facilities which we offer, of course, for a fee, but then that still will be subsidized one. So in that case, I think we can free larger banks for their larger obligations of nation development, infrastructure development, and such other things, whereas the rural areas, and then they can choose to come to rural areas as a business proposition. So if they choose to come, of course, there are regional warriors there fighting for the market share, and they have to fight really for the market share. And maybe this scenario will be there maybe 1 year hence, when cooperatives and RRBs are equipped with technology, plus other rural players, whoever is willing, can be there. Even the rural branches of the commercial banks also can join this play.
So I'm absolutely was not expecting a no for an answer, but I wanted the audience to hear from you your conviction of how these entities are so critical. And in fact, you have just laid out a roadmap for how banking will evolve and how, as India moves towards a Viksit Bharat, 2047 vision, how entities will play a very different role, and I think it was just fascinating.
In fact, that Viksit Bharat point which you told, we mapped the areas. Still, there are gaps, there are white spaces in many of the parts of the country where such entities can come in more. 100,000 of societies which I told, another 200,000 of them we have mapped the potential for such entities. So these are all will be neighborhood, I have not called them banks, but then they will be the players in the value chain. Maybe a credit union of the US or the Rabobank, which is an aggregate of all these entities in Netherlands and such developed countries. So we'll take leaf out of those experiences, but then we have to fine-tune that for the India situation. That's what we'll be doing. So more such entities will be there. And you all are aware that Government of India is focusing on providing quality services at reasonable cost to the nook and corner of the country. And in fact, they call the border villages as the first villages. We used to call them as the last point where we leave India to other country. But then what Government of India wants is that these villages or these areas will be the first villages to India. So the priority should be given to such areas where you are all aware that there are infrastructure bottlenecks there. Financial infrastructure in such areas will be the focus area for such entities.
So I kind of make it up that Viksit Bharat will mean Viksit villages, and NABARD will play a fantastic and a very important role in Viksit Bharat through Viksit villages. You extended an open invitation to startups and fintechs using NABARD's platform. The proof of the pudding lies in walking some of that steps yourself. NABARD has a very rich, I would say, initiatives. You also have innovation funds. You have a bunch of subsidiaries. Talk us a little bit about how you have moved forward in terms of fostering innovation and supporting some of the startup ecosystem in rural India.
I'm not sure whether you are aware of that. NABARD manages the fund of funds for the rural sector. 2% of our net worth, closely around 200 crores, we have earmarked for the fund of funds within NABARD to support these newer entities who are providing solutions to the rural problems. Altogether, right now, we have invested in around 30 alternate investment funds using that fund of fund money. And many of the fintechs over here would have been beneficiary of us through the alternate investment fund. Then gaining from that experience, we had around 15 years of experience in such investments. Then we launched our own proprietary AF, which is a category 2 fund, which is a NAV Ventures fund, which is around 600 crore as the fund 1, which we have done, of which almost 50% is now invested. Close to around 18 portfolio companies are there, which are reasonably doing well. And some of the stalls are there in the GFF now here. And we are also fostering partnerships with the stakeholders in the rural areas. Not only we are a financial investor in such things, we also work with them to link with the entities and the stakeholders in the rural areas, develop their business, and then whatever business cases they have, interlink also. There are a lot of interlinkages between our portfolio companies which are happening. And plus the existing players like cooperatives and all. See, now the shared service entity which we have told, I think at least 5 or 6 of our portfolio companies are fit enough to enter into partnerships with the shared service entity. So that means we are actually not a financial investor alone. And then we are not looking at returns. Of course, returns are important, but then more than returns, we are looking at the impact. So that way, we are, we call that LPs and and GPs are there. We call ourselves as PPs. We are the patient partners. We are here to provide equity support or debt support to such entities for a longer time. And we look at the impact and the problems which they are going to solve. So that way, the NAV Venture Fund 1 is already there. So now we are working with the Government of India for another blended capital fund, which is in the offing. Maybe shortly it will be launched. We call it as AgriSure Fund, which we are looking for early stage startups, pre-series A funds and such other things, which will be smaller ticket size. But then we want to foster at least some 100 such innovations across the country, so that at least some say 20% of them, if we succeed, that will be great for us. So an average fund experience which we have is that around, right now our IRR is around upwards of 40. Of course, it's around only 2-year-old, but then we may wait for one exit also we have done where almost we got around 3x of whatever we have done. So that means our experience is huge, and we will like to leverage that experience, and being an entity backed by sovereign, we have patience to stay invested for long. And that's what we are looking for, some partnerships with fintechs over here.
Wow, that's like, I'm not sure anybody in the audience knew the full scale of your participation in the startup and fintech ecosystem. As you rightly said, you are the patient partner, and social impact funding, and the kind of insights you have given us into how NABARD is running some of these funds, I think is really, in some ways, an eye-opener for the audience. Maybe we should just put it out more in open, sir. I'm sure a lot of people will be attracted to NABARD. Tell me, I'll go back to my earlier point around the CBDC point that came up. You also mentioned something about the marginal farmers. Is there a way we can bring this innovation to really help and transform our KCC, for example? Is that something that is a viable or is a possible solution?
So those of you who know the data, almost 30% of the farmers are not getting adequate credit or having a credit at all. And those maybe another 20 or 30% may not get adequate credit. So why they are not getting credit? Because they don't have any proofs, documents for the land, even though they are tilling the land. The land may be in the name of their grandfather, that is for sure. And another use case will be that they are tenant farmers. Almost 20%, 25% is a tenancy. And tenancy is a dynamic figure. Every crop season it changes also. And then the tenancy is not to be proved by documents, because the landowner may hesitate to give documents to that. So then a normal bank may not recognize them as a fit customer because of lack of documents. In that case, purpose binding the loans for using the CBDC concept. We are doing some pilots on that. The KCC, you are all aware that Kisan Credit Card is a flagship scheme of the Government of India, where production credit largely is supported through that. Then there is an interest subvention and prompt repayment incentive attached to that. So now, whether we can now link that KCC with the tenant farmer who's actually tilling the land, without leakages, because now the recovery issue is one issue which we face in the rural areas, where because of various other reasons, externalities involved, farmers' motivation will be that maybe an election is coming, so they may think of a waiver or something like that. But at least the purpose for which the loan is given to be served. Once that purpose is served, then farmer will get adequate income for repaying that, and farmer will be motivated to repay also. So to that extent, whether we can purpose bind the KCC. In that case, we are doing some pilots with larger commercial banks and also with some regional rural banks, and we will come out with some outcomes of that study. That whatever we do, the rural areas is minefield of innovation. You can fail also in innovative things. So whatever we think about, we'll do it in smaller pilots, learn from the pilots, the failures, and if needed, we do another pilot, ring fencing all those whatever issues we face, and then come out with a national level rollout. That's what we did physically in terms of KCC. KCC is one of such outcomes of a pilot which we did. The self-help group movement also is a part of pilot. But now on the technology basis, we need to now digitize the KCC, first of all. That is one thing which we are trying to do, which there will be a platform for any entity to come in and win credit through this platform at a subsidized cost, plus purpose binding the loan product for those who don't have adequate proofs to come as a regular customer.
Yeah, we really wish NABARD all the best in this pilot. I think if this goes well, the kind of impact it will have for the citizens who are right now not included, I think will be just immense, and I think there can be nothing more powerful than this kind of purpose binding. When we think of rural, we kind of get trapped a little bit on the production side and the farming side. But actually, rural is beyond farming and production and crops. because you're rural development. You're just not agriculture, you're rural development. Talk us a little bit more how you are seeing some of the action there and how private sector or startups or fintechs can play a role in that aspect.
So, yeah, you said right that rural is not agriculture. Of course, agriculture is rural, but rural is not agriculture. If you see the data also, almost 35% of the income only is coming from agriculture for the rural people. Remaining, that is predominantly, it is non-agricultural income which is coming. We have done National Financial Inclusion Survey, NAFIS. There is a flagship survey which we are doing. So we have found that there are diversified sources of income, including from their own enterprises, wage income are there, and then of course the agricultural income is there. So now with the job creation as an issue, national level, we are thinking about now setting up smaller enterprises at the near farm gate level so that the farmer can move up the value chain. Right now, if you see that there is overcrowding in agriculture, there is disguised unemployment happening. So we need to take people out of agriculture, first of all, to higher end activities, maybe some primary processing, including grading, sorting, storage, then further processing, and then the value chain need to be developed properly, and then the intermediaries which are there, we need to collapse those intermediaries, and farmers should move up the value chain so that the higher share of the consumer price is realized by the farmer. To that extent, we are into a lot of MSME activities. So now we are coming out with a comprehensive policy for rural MSMEs. MSME is one of our mandate. This mandate was added in 2019. So accordingly, we have structured our policies for fostering more MSMEs in rural areas, which are essentially farmer-driven primarily, or the next generation of the farmers who has got higher ambition in their life. So we are doing a lot of entrepreneurship development programs, handholding them and directing them towards the right activities. We have a shelf of such projects also ready. We are working with farmer producer organizations for that, because farmer producer organizations are essentially the startups. I can classify them as startups in agriculture because they aggregate the produce and then do the processing, initial processing. So we need to work with a lot of farmer producer organizations. For that also, huge opportunity is there. We are now coming out with an FPO platform as well, digital platform. And then we are also doing some pilots in the value chain, where we want that the value chain need to be digitized properly, because otherwise, see, any project financing which we do, we escrow the cash flows, and there will not be any other security available. So in the value chain, the products move in one direction and the cash flow moves in the opposite direction, and that cash flow need to be escrowed properly so that the financing entities, say, they develop a comprehensive product of covering 2 or 3 nodes in this value chain. This escrowing of the cash flow and the leakage prevention, that is the very crucial. So we are doing some pilots across the country. We find that the value chain in one particular geography in India may not be the same. Even if the crop is the same, in the other geography, another type of value chain need to be developed. So customization need to be there. So this is a permutation and combination of the geography, the variety, the agroclimatic condition, and the cultural activities, the cultural aspects also comes into play. So we are now trying to do some innovative interventions in there. So there a lot of MSMEs, the potential is huge, the employment generation is huge, and of course the technology requirement, the innovative requirements are huge. So I think the fintechs and also the startups over here can look at those options as well.
We can go on and on, but let's see if there is any question on audience's mind, if you will like to pose it to Chairman Nabad. Can we just have a mic there, please? Let's see, we can just take 2 or 3. I mean, we are, yeah, the mic is coming to you.
Good evening, sir. This is Manihandan from Anniyam Payment. It is not a question, but it is a impact or the service given by NABARD to us. So we are working in the self-help group space, and NABARD has given the pilot project. We are working with RRB and DCCB. So as Sir explained, so there is a space for fintech and startup, particularly in the rural area. That's all. Thank you, sir.
Thank you. There was another hand. Oh, there. Yes, sir.
It's on.
Hi, Sachin Deshpande. I'm representing Fintech. Actually, we're working in priority areas like agriculture and fisheries, wherein we are actually connecting with fisherwomen, which is also a woman-driven initiative. So we'd like to know both agriculture as well as fisheries, because there is a PMSSY scheme which is also there. So can we collaborate with NABARD on those lines? Because there are a lot of things we would like to have in terms of, there are use cases which we have got, which we wanted to roll out.
Yeah. So if you see the current budget announcement, a lot of announcements are there for the fisheries sector particularly. Right now, we are in the process of doing the stakeholder consultations in various states where how the fisheries, both the marine fisheries and the inland fisheries, how it can be developed. One such consultation is already over in Vijayawada. Another one we are doing it with in Kochi. We are associating with, of course, the Union Government, the Fisheries Department, and also MPDA, the Marine Products Export Development Authority. So you should participate in such stakeholder consultations and put forward the idea. We as NABARD, we have been given the pivotal role to develop the fisheries sector. So we are thinking about having a fisheries stack also, their platform, where the fintech players can come in. And so whatever experiences we are having in the agri sector, we can actually implement that in the fisheries with some customization, because essentially the principles will be the same. So,
yes.
so we'll be...
Yeah, we are having a MOU with CIFE, that is Central Fisheries Institute. So I think we should work together.
So thank you. So that actually we are out of time now. So I'll take this cue to ask you a question, final question. So how do you see the agri startup and the agri fintech space shaping up in the next 5 years? And what would be your one advice to the entrepreneurs who want to operate and, let's say, participate with NABARD in this space?
So if any startup or a tech company need to be there, they need to have data, and verified data need to be there. You may be aware of certain developments happening in the Government of India level, where they have developed a framework for the agriculture sector, where the data need to be properly fed. There is a framework given to all the states, because agriculture being a state subject, it's a state government driven project, but then the overall standardization across the states. For example, the simple reason that one crop name across the state, the same crop will have different names, and technologically it will be challenging for you to actually have a solution across the country for that. So there will be a crop registry coming in, where uniform nomenclature will be there, and proper coding will be there. That framework is given. And then the other thing is that the land, which the farmer uses for growing, cultivation, or even the allied activity, that also need to be properly digitized. That also that framework also is given. And then the crop or the animal or whatever agricultural activity or rural activity is doing need to be properly codified also. So all in all, this the agri stack, which you may have heard about that, with the 3 different layers of data. So that will give you a wealth of information for any fintech to come in, so and innovate for solutions. And then you can do advisory services or whatever right now capabilities you have. I understand that many of you will be finding challenging to have proper data of farmers. But once this agri stack, which is in different stages of development in various stages, Karnataka is fairly advanced in that. I understand that Madhya Pradesh, UP are all will be doing it in maybe in another 2-3 months. The proper data will be available. Once you have this data, it is a shared database, and it is a API-based integration can be possible. So I think you should look at those developments, and NABARD will be happy to help you out In fact, we are looking for partners to work on this agri-stack. We are partnering with the state right now in populating the data into this framework. And once that is done, I think it is time for the agri-tech and the fintech players to come in and use that.
That is extremely helpful.
Sir,
Please put your hands up.
Sir, I have a question. I run an agri-tech and a precision agri startup. I have two questions. How do I get funded? Number one. Number two, how NABARD can build public digital infrastructure specifically for agri and rural so that the farm productivity using precision agri. Precision agri calls for a lot of capex, but we don't need to go because we can build precision agriculture as a service. So I would request you to comment on how do I get funded, number one. What are the initiatives by NABARD like RBI to make precision agriculture as a reality with the DPI and fintech and ecosystem building, sir? Thank you.
So by funding, you mean equity support or the working capital?
The equity, the investments.
Okay, the investment support which you need. So if you have a solid business case and a solution for the problems which are in the rural areas, I think you can come through the AAF route. That is, you can approach any of the alternate investment funds which NABARD is supporting, or directly to NABARD, where the NAB Ventures also is there as a direct AAF for such investments. You can approach them. That is one thing. Second thing is that the digital public infrastructure which you are telling. I just mentioned about the agri-stack, which is a digital public infrastructure, DPI, where you can look at your own requirements of data. And if needed, you can also work with NABARD to develop a database which is required by you or your similar entities who are working in precision agriculture. Any specific data requirement is there, you can always talk to us and we'll be happy to develop it for you.
Thank you. Thank you, sir.
Lovely. With this, we have to bring this session to an end. I think this was one of the most interesting sessions which brought together real problems, real opportunities, real unlock, and technology, and the kind of vision you have laid out for making it really happen, putting the investments, unlocking the scale, I think has been just fantastic. We wish NABARD all the very best. Ladies and gentlemen, I request you to put your hand together for Mr. Shaji.
Thank you very much. On that note, ladies and gentlemen, first up, on behalf of NABARD, I'd like to please request Mr. Shaji to please present a memento to Mr. Ashish Garg. So I'm going to request the team. Ideally, I know, sir, it has to be the other way, but Team NABARD has something for you, Mr. Ashish. So I'm going to request Mr. Shaji to please do the honors. We need to have another huge round of applause there for the amazing initiatives by NABARD and for the fabulous spearheading of the session by Mr. Ashish as well.
Yeah, this is another intervention of NABARD. It is geographically indicated, GI tagged product. This is the product of Varanasi. So we are helping, we are working with rural artisans to GI tag their products and better visibility for them. This is one such product.
That's a beautiful souvenir indeed. Thank you very much, Mr. Ashish. I request Mr. Shaji to please remain on stage, sir. And I thank Mr. Ashish for beautifully spearheading this session. Thank you so much indeed for joining us as well. A huge round of applause one more time for Mr. Ashish Garg. Thank you once again, sir. While we come to the final leg of the segment, ladies and gentlemen, National Agri-Innovative Hackathon on digitalizing agri-value chain financing was conducted by NABARD with the facilitation of technical partner Hack2Skill as part of the Global Fintech Fest 2024. Now, there was a problem statement that was given for the hackathon participant to identify financing needs and financing gaps in agri-value chain financing and connect with the finance partners. Solutions were expected in order to address the lack of access, poor agro-advisory, and much more. But that being said, the challenge for hackathon participants was to develop a comprehensive digital tool that connects various nodes comprising of suppliers, buyers, financial institutions, processors, etc. So yes, while this initiative was done, we got our runners-up and the winners, and we'd like to take this opportunity to felicitate them. So first up, let's invite the second runners-up, as part of this amazing, amazing hackathon. The second runners-up is the team Jalyan. Let's have a round of applause for Team Jalyan. Now they came up with a digital solution for value chains in fishery sector. Huge congratulations to you, Team Jalyan. Congratulations, team. With that, let's now move ahead because it's time to announce the first runner-up. The first runner-up as part of the hackathon, this amazing National Agri-Notive Hackathon. Ladies and gentlemen, Rachel Agro. Let's have a huge round of applause. Rachel Agro Services. Now guess what? They provided a super app connecting the advisory services, input services, and the data capture, which would cater to the financial institutions for financing. Amazing, amazing indeed. Congratulations to the team of Rachel Agro Services. Mighty congratulations there. All right, so with that, we know the drill. It's now time to announce the winners. The winning team for the National Agri-Notive Hackathon. Now, the winning team actually came up with an ERP solution for FPOs that integrates the agri-value chain players and finance providers. The winning team is LDU Digital. Well, let's have a round of cheer there, ladies and gentlemen. Let's invite the winning team, LDU Digital, to please come on stage. Ladies and gentlemen, the winning team of the National Agri-Notive Hackathon, conducted by NABARD with facilitation of technical partner Hack2Skill as part of Global Fintech Fest 2024. Huge congratulations, and with that, thank you very much, Mr. Shahji. Thank you so much for joining us. Can we have a huge round of applause one more time for the chairman of NABARD, Mr. Shahji. Thank you very much, sir, again. With that, ladies and gentlemen, let me tell you, the win doesn't end over here. We're now all geared up for the Global Fintech Awards that's starting right away. So I'm going to request all of you to take your cheerful smiles and energy and head to Jasmine 1, because that's where we're going to have the Global Fintech Awards. I want all of you to join in as we celebrate the industry together, and let's cheer and let's be part of the Global Fintech Awards starting within the next couple of minutes. I'll see you there in Jasmine Hall number 1. We're about to grab some beer and also celebrate the industry. So see you all for the Global Fintech Awards. Thank you once again.